Welcome back to Korea Blockchain Week. This is day 2 of our live coverage of Korea Blockchain Week. I'm Graham Stone, hosting alongside with Bitcoin.com News, David Sensel and Frederick Manawa. Good morning, gentlemen.
Good morning.
We've got a full day lined up of interviews, a lot of excellent guests. But before we get to that, before we get to the preview, let's talk about some of the giveaways we've got here at the Bitcoin.com booth in our live stream, which is sponsored by Threshold Bitcoin. So we've got $2,000 of Bitcoin up for grabs. Now, to qualify to win this, all you have to do is get into the comments on any of these clips that we're posting on X throughout the day. And just get in there, make a comment, ask a question. Make sure you're following us at BTCTN, and also please make sure you're following Threshold Network, which is hold on a second. At the T Network. Make sure you're following Threshold Network at the T Network and Bitcoin.com News at BTCTN. Repost the live stream post and get in the comments on any of the clips coming out of the live stream. We're going to be selecting 3 winners. The top prize is $1,000 in TBTC. 2 runner-ups, $500. We've also got golden tickets. We're going to be giving away golden tickets throughout the day. We're going to be putting
right
up
now.
these. Yes, we're going to be. You can scan the QR code on here with your Bitcoin.com wallet and earn up to $100 instantly in Bitcoin just by scanning the code. So make sure you download the wallet. We're going to be putting up these QR codes throughout the day on the live stream. So stay tuned for that. All right, guys. So let's get into a preview for today. We got lots of guests lined up. Who are you looking forward to the most?
Well, I mentioned yesterday Tristan Thompson, but
Who is Tristan Thompson?
I don't know. He's some guy plays ball really well.
Utah.
Plays a ball game. Yeah, NBA player. Yeah.
NBA player, former NBA player. Famously
Is he still
won the
playing, though?
championship.
He won a championship in
Yeah.
2016. I believe he may still be playing, maybe not as much as he used to, but yeah, 2016 with the Cavs.
Amazing. But Frederick, you and I had an interview that is going to air today.
Yeah.
We shot this after our live stream coverage ended yesterday, and I know it left quite a impression upon you.
Yeah. All right. Super smart guy, Thomas. He's the chief commercial officer at the Jito Foundation. Spent a couple of decades at Jane Street, which is a really huge prop trading firm in New York. Very famous for its smart and quantitatively minded traders. And he spent 22 years, he said, over there.
I believe that was it. Yeah.
And then he moved to the Jito Foundation. So it was kind of like, well, how is he using all that experience and that brain power at this crypto startup? And then he went through that. So you should really watch that, guys. That's that's
It'll air today. We'll decide a perfect time for it, but
yeah.
All right. I'm excited about Anthony Anzalone, who is AKA Burnt Banksy. You guys may remember at the peak of last cycle, 2021, there was a Banksy print that this guy, kind of a PR stunt. He burnt it and minted an NFT out of it, like a piece of culture, an iconic piece of cultural art. And he has since gone on to found this protocol called Zion, which I'm really interested to hear about. So that's going to be very interesting to hear his story.
Of course, along that vein, we're lucky to have Luca Netz,
Pudgy Penguin.
Yeah.
Penguins guy. I interviewed him almost exactly a year ago. So I want to ask him some questions that kind of tie my first interview to this one and see what has what his ecosystem or their ecosystem has done in the past year.
Absolutely.
So excited to ask him questions about that.
Also, very excited to be speaking with Haseeb Qureshi of Dragonfly Capital again. Excited to get into some of what I want to, as we discussed, David, hear more about his Japan Asia thesis, and also I'd like to ask him more about his VC investing thesis in general and what he's excited about these days.
Yeah. The last thing I'll say, Graham, is we get to do a live token narratives again.
Yep.
Always love that. And we're going to have Cameron Lee on.
Yeah.
He was a guest on one of the early token narratives episodes. Right?
Friend of the pod.
Friend of the podcast. Friend of the show. So that'll be fun. He's a character.
Yeah.
And doing it live.
Yeah. Very
live is always fun.
Yeah.
So.
Very excited to get his takes.
Yeah.
I'm sure he'll have some hot takes.
Yeah. And in token narratives, we can kind of like let loose a little bit.
Yeah.
Get into some stuff online.
I think that covers it for the preview. Unless Frederick, you had anything else you want to mention?
No, I think that's an awesome menu of items to look forward to. I'm excited.
Yeah. So up next is going to be our first interview of the day with Aya Kantorovic. Excuse me. There she is over there from August Digital. We're going to be interviewing her in just a few minutes. Don't forget, $2,000 of TBDC up for grabs. Thanks to our sponsorship by Threshold Bitcoin. Threshold Network. Plus golden tickets. Get the app, scan the golden tickets throughout the day. Between $5 and $100 of Bitcoin instantly deposited into your Bitcoin.com wallet just by scanning the code. So watch out for that. All right, let's do it. See you soon.
We're giving away free Bitcoin all throughout our live stream conference coverage. First, you need to download the Bitcoin.com wallet app. Throughout the conference coverage, you'll see these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner and scan the large QR code. Swipe to auto-magically send the Bitcoin into your wallet. You need to be ready, be fast, because anyone watching the live stream can get that Bitcoin.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in. Install now for free.
Are you a Bitcoin holder ready to explore the world of decentralized finance? With TBTC, you can lend, borrow, provide liquidity, and engage in a wide range of DeFi activities, all securely and free from centralized control. Unlike options like WBTC, where Bitcoin is held by centralized custodians, TBTC is secured by a network of independent nodes, ensuring that no single entity ever has control over your assets. TBTC empowers you to seamlessly integrate your Bitcoin into the DeFi ecosystem, unlocking the vast potential of smart contracts and dApps while maintaining the security of your Bitcoin. Fully backed one-to-one with Bitcoin reserves and protected by a decentralized network of nodes, TBTC ensures that you can always reclaim your Bitcoin or swap your TBTC without relying on intermediaries. As the blockchain space continues to evolve, TBTC on the Threshold Network offers you the confidence to put your Bitcoin to work, knowing your assets are secured by a decentralized network, not by a central authority.
What if you got pages for exploring crypto? Read news, check prices, discover new projects, and stack rewards along the way. Over $1 million in rewards paid out so far, and we're just getting started. Download the Bitcoin.com wallet today. The wallet that pays you.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, if, void, country, engine, complex, new, fate, purpose.
Do you think your crypto is private? Think again. On Bitcoin, Ethereum, and most major blockchains, every transaction you make is public, traceable by anyone, anywhere. What you send, who you send it to, when you send it, how much you hold, all visible forever. That's not just transparency, it's surveillance. Confidential assets on the Zano blockchain changed the game. Built for privacy from the ground up, Zano's system extends its powerful protections like untraceability, unlinkability, and amount concealment to any token. This opens the door to fully private financial tools. Imagine a USD stablecoin, but shielded. Imagine Bitcoin wrapped and transacted anonymously. Imagine enterprise tokens that move without exposing sensitive details. Confidential assets make all of this possible. And now, with the Bitcoin.com wallet, you can hold, send, receive, and swap Zano's confidential assets, all inside a single, easy-to-use, self-custodial app. Privacy isn't just an add-on, it's the future. Update your Bitcoin.com wallet today and step into the next era of private crypto.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in. Install now for free.
In this video, you're going to learn how to mint TBTC on the Ethereum network using the Bitcoin.com wallet. So first, you'll need to make sure that you have at least 0.01 Bitcoin in your wallet and some Ethereum to cover the gas fee. Once you meet the requirements, you're going to head over to the Web3 Explorer on the wallet. On the search bar, you're going to type in dashboard.threshold.network. Next, you're going to scroll down and hit Mint TBTC, and connect your Ethereum wallet. Find the Bitcoin.com wallet and then press connect. And once again, make sure the connected wallet has some Ethereum to cover gas fees. Under the BTC return address, you're going to remove the Bitcoin : and this address will be the same address that is funded with at least 0.01 BTC. Once you've done that, you're going to tap Generate Deposit Address. Now, this will create a receipt, and you can save that receipt somewhere and then press back, and you'll see that the deposit address has been generated. So this is where you're going to send your Bitcoin. After copying the deposit address, go back to your Bitcoin wallet and enter it into the address bar. Let's switch to base currency Bitcoin, and then we're going to send 0.01 BTC to that address and press continue and slide to send. Next, we're going to go back to the dashboard of the Threshold Network site and connect the same Ethereum wallet that we used initially. And after an hour or so, you should see that your deposit was confirmed, and you're going to tap on Bridge. Now, you can see here that you have to pay a network fee for this, so make sure that your wallet is funded with Ethereum. After a few seconds, you should see your mint initiate. After a few hours, you should see the TBTC show up in your Ethereum wallet. That's how you mint TBTC using the Bitcoin.com wallet.
Welcome back to the Bitcoin.com live stream. This is Frederick. I've got my co-host here, Graham, and we've got our guest, Aya Kantorovich, who is the CEO and co-founder of August Digital. Aya, welcome to the show.
Thank you so much for having me.
How's your flight to South Korea?
It was long, uneventful, but that's a good thing in crypto. So we're very happy to be here.
Yeah, so it's not your first time in Korea, like you mentioned off camera, but I was curious about your history in crypto. How did you end up being the co-founder of this, looks like a very interesting on-chain brokerage firm, August Digital? How did you find your way to crypto and to, looks like, institutional finance?
Yeah, so my first exposure into crypto was in 2016. I got exposed because one of my former bosses was from Venezuela, and at the time, in order to buy certain tech specs or growth in items, they used Bitcoin to transact, and so that was the first reason I got introduced. And I'll be honest, when I first read the Bitcoin white paper, it went very much over my head. You know, it is very mathematics heavy, and so I remember thinking, all right, this is you know, way pre-ChatGPT days where you could just plug it in and be like, simplify this for me in a sentence or two. And so I actually really connected with the Ethereum white paper and this concept of, you know, proof of work. And the ability to, you know, bring a lot of the products and services in a digitized way. And so that's how I got into crypto. I made the full transition into making crypto my full-time job in 2018 at Pantera Capital on the venture side of the business, and then was one of the early founding team members of FalconX, a crypto prime brokerage, in 2018. Was able to scale that company through its Series D. I got very, very lucky and left a month before FTX happened. And so timing truly is everything in the space, and really wanted to focus on how to bring a lot of this technology on chain. And so that's how August was born. You know, we had a lot of concerns with the opaqueness of CeFi. Today, it's very hard when you transact, not only with, you know, a crypto company that is an on-chain, but really any company today, because you don't know what their liabilities are. You can rarely look at their balance sheet, and you have no idea who their counterparties are. You know, are they engaged with the Three Arrows? Are they engaged with someone else that perhaps you don't want them to have exposure to? And so our idea was, how do we kind of bring some of that technology on chain so people have trust again, but also have a good user experience, and we can dive into that in terms of what needs to be decentralized versus what should probably stay more centralized.
So perhaps taking some of the lessons learned from the FTX downfall and applying those in order to like protect investors.
That's exactly right.
Okay.
That's exactly right. Yeah. So we've been very excited to do that. And it's interesting because when we started the company in 22, everyone really still was focused on how do you make something completely peer-to-peer and fully decentralized. There's this kind of, I would call it anarchist movement in crypto where you're so focused on, kind of the blue chip names. Aave is one of the larger ones that's still very much around. And so how do you make things peer-to-peer where you don't need a centralized entity to be making decisions? That said, in, call it the last 2 years, we've seen the growth of centralized crypto companies. So Athena, Hyperliquid, where the user has clearly said, we don't mind if there is a centralization feature here. We actually get a better experience. And so now we're kind of in this really interesting, form of CeFi DeFi. And we've also seen a lot of the centralized finance players come into DeFi as well.
From the user's perspective, maybe they're more interested in just the idea of permissionlessness rather than, as long as they get that permissionlessness, they don't necessarily care that it's decentralized.
That's exactly right. And so, you're seeing that put also pressure on traditional markets where, for example, with the CFTC news this morning, or even with the news of some of the, large trading exchanges having to move into 24/7 trading because people also just want the access on weekends. They want access during banking holidays. And so to your point, it's more of like what is defined in permissionless and what is defined in 24/7 access. And then what really needs to be decentralized in order to still maintain that good user experience, but also the safety, the trust, and the counterparty risk.
Yeah, I think what you have is in the beginning you do have the libertarians, the anarchists in crypto. You came in 2016. That was still that time when everyone was, we're moving from this centralized culture, right? Like
perhaps idealistic.
Yeah. And so we're trying to make sure that everything is decentralized, that it meets those core values of, like peer-to-peer and more almost like egalitarian type of decision-making. But once we started going mainstream, or we started trying to attract the institutional money, then we realized that, okay, it can't work, it can't scale in the way that we hoped it would without some kind of centralized entities taking part in the ecosystem. That's kind of how I see it.
Right.
So you worked at Pantera, which is that Dan Moorhead?
That is, yes.
Yeah, so that's a big, I guess, hedge, maybe not a hedge fund, but crypto investment fund, and they kind of have their fingers in every pie almost in the crypto world. How did that affect you?
Yeah, look, Dan Moorhead is one of the, sharpest people in the space, without a doubt. He was one of the largest, purchasers of Bitcoin who really focused on making it mainstream. Their Bitcoin fund, I believe, was founded in 2012. And so, it really goes to show that it takes a lot of courage to take on that level of risk, to commit to something for that long. And Dan Moorhead really was singing the Bitcoin and then the crypto narrative, and was one of the core voices for the industry that I think did a really good job of communicating exactly what crypto, the benefits of the technology for a number of years. And so they've obviously also been very active in the digital asset trading space, and all the DATs that have happened most recently, and very large purchases there. And so they've done a fantastic job in staying at the forefront over the years, and that's a very hard thing to do because the industry changes all the time. So it was a tremendous learning experience.
And so I used to work for a custodian. So we used to do custody, banking, and prime brokerage. Maybe you can explain to the viewers what a prime broker does and what an on-chain prime broker does. And
sure.
Basically, what does August Digital do?
Yeah, of course.
Yeah.
So there's a few core pillars, as you mentioned, with Prime. The first is custody. The second is trading. And then you have borrow lending. And so, for us, the concept is how do we create capital efficiency. Now, that's a term that's also used in the space quite a bit. DeFi today is very capital inefficient because everything is pre-funded, right? You have to have the funds in the account for the peer-to-peer transactions to work. And so that isn't always the cheaper option. And so the concept for us was, how do we bring cheaper tech and cheaper user experience, but still have the peer-to-peer trust in a way that's scalable for institutions that are trading in, call it $5 million clip sizes and higher. And so today we're the only place where you can trade over the counter, so OTC, spot, derivatives. You can trade your DeFi positions, and you can have exchange positions all cross-margined. And what that really means is, let's say you have a Pendle position or a staking position in a custom smart contract that we've built, which is our custody solution. It's non-custodial today, so you hold the keys for it, but it is secure. And so today you have your on-chain position, you get a loan from us, you can trade a derivative against that. And then let's say you also have your exchange position with us. And so, we look at the equity of all those three things, and we give you credit based on those three things. And so today, that's the only place you can do that. In traditional finance, if let's say you have a position at one of your banks, let's say Goldman Sachs, JP Morgan, they will not, if you go to your Goldman Sachs, rep and you say, hey, can you give me a loan against my JP Morgan position? They'll say, absolutely not. And the same thing if you have a position with, let's say, Galaxy or Binance, and you say, hey, can I bring my OKX position and you give me leverage on that? Absolutely not. And so the beauty of DeFi is composability. And regardless if you compete with someone, you can make all these positions composable. And so for us, it's like the big unlock is, how do you actually get those positions to speak to one another in one place?
Yeah, it's all very interesting. And, you talk about capital efficiency, and I'm thinking about how you have these over-collateralized loans where, you actually have to give more collateral than the money that you get back as a loan, like vastly more collateral. So that's, is that, would that be one definition of capital inefficiency?
Yeah, that's a great question. Yes. So it depends on how it's structured. If we, use terms like on platform and off platform today, and DeFi is structured as off platform. And so the reason it has to be so over collateralized is because you don't know how the loan proceeds are used. And so there was a case, a few years back where, the Curve founder, for example, was using an Aave loan to go and purchase home equity. And so, had the lenders known that, would they have charged a higher rate? Probably, right? And so, from our position, it's like, how do we create the on-platform experience where the LTVs can be more competitive and it doesn't have to be as over-collateralized, because you can actually see how loan proceeds are used and use that for the net equity of the total position. And so, for us, we've actually been able to find, even under-collateralized opportunities, just because we have control for liquidation across all of the different venues where a user is deploying those funds.
Would you be able to give an example of a situation where you can actually have an under-collateralized opportunity?
Absolutely. So, let's say you have an on-chain position across, let's just use like a staked ETH example, and you would like to have a loan in order to, extend and start trading on, call it, let's say, an exchange like Binance. As so long as we have access to liquidate the positions on both sides, then you can see a world where we take the Binance position as equity for the loan. And so, for example, you won't need to have significantly more staked ETH in order to get the loan, in order to then trade on exchange. We can use both the exchange position and the staked ETH position as a form of your equity, and we can, give you a much more competitive LTV.
Interesting. Okay. So would it be fair to say that a big part of the work you have to do is establish partnerships, relationships with some of these centralized exchanges? Or am I misreading that?
No, you're absolutely right. And so, today you see that quite a bit in terms of the work that, custodians do. For example, Sifu or Zodia Markets, today they do off-exchange custody. And so they have those partnerships with the custodians in order to, give you that same leverage on exchange, even though funds are stored outside of exchange. We do the same, but on the risk side and risk calculation side in terms of, making sure that we can calculate the proper LTVs. And so a lot of the work that we do, and I'm glad you mentioned this, is really, Oracle and asset underwriting, and then making sure that everyone's aligned with the kind of standards that we've set for those asset underwriting calculations.
So we don't, the market doesn't end up in a situation like we had with 3 Arrows Capital, and just nobody knew where the money was, nobody knew who was lending to who, and it just resulted in this massive collapse.
Right. And ideally, you don't have someone pledge the same collateral 10 times when the collateral doesn't even exist. So that's exactly right. That's exactly right.
Okay. And what kinds of clients do you have? So from what it sounds to me, you're more on the institutional side, but what's your clientele, I guess? Who's your target customer, ideally?
Sure. So, our clientele today is, as you mentioned, predominantly on the institutional side. That said, in 2023, we actually had our institutional clients use our technology to launch more user-based, user-friendly products under our retail brand Upshift. And so that is our Vault as a service product. And today you see tokenized yield strategies, and that is, accessible depending on your jurisdiction, really to anyone. And so that is same, security, underwriting, and technology underneath, but the strategies are democratized for users and composable across the ecosystem. And so it takes the institutional breadth, but gives, retail access to those same tools to use across the space.
And what kinds of companies, like when you say institutional clients, what kinds of institutional clients are coming to you guys and saying, hey, we need your services? It looks like, you're doing this really well or that really well. I'll be interested in knowing what companies come to you guys.
Right. We were joking about this before. We're institutional. The term institutional is like nomenclature we've been using for a very, very long time. But for us, we define it today as, our prime client is the crypto native fund called 150 million AUM on average. And they are predominantly trading across different crypto venues. Now, we are expanding into the digital asset treasury space. And so that's been very exciting, where a lot of these DATs, for example, have, made purchases of, let's say, ETH, Bitcoin, Solana. They want to stake those assets, but now they want to run different strategies for it. And we have the institutional technology for you to be able to do that in a secure way on chain. And so we've been able to expand into, a lot of these real, we call institutions, just based off of size and breadth. And also the asset issuers. So, we work closely with, call it the BlackRocks of the world, and we consider those to definitely be the core institutions in the space. But, I think more broadly, one theme that I've noticed is the crypto space has constantly tried to bring institutions to DeFi. And what has clearly worked for us in the last year is bringing DeFi and the infrastructure that works into traditional finance. And so, we've been able to bring different picks and shovels to some of these asset issuers, to some of these, large traditional infrastructure providers, and say, here's what you can or can't use. And going back to our question of, what's fully decentralized and what's more centralized, the centralized aspect has been a lot stickier, to say the least.
Can I just follow up on that, the point you made about DATs? So are you saying that some of your clients are actually digital asset treasuries they're looking to optimize the yield on the digital assets they have in their treasury, and you're actually able to help them do that?
That's exactly right. The issue today is, DATs have an attention issue where there have been so many that have come to market that the differentiation has not exactly been very clear. Obviously they were the first that came to market and they captured a lot of attention, but for all of the following ones, if you're just holding ETH and you're just getting the staking rate, at some point that is truly not differentiated, right? And so the next question is, all right, how do we create, differentiated strategies and we're very, very clear, and they're institutionally managed about what the risks are. How do we create these strategies that can then actually differentiate myself from, let's say, the other 5 ETH digital asset treasuries that exist out there, or the other Solana ones, or Bitcoin, you name what it might be. So that's exactly right.
Yeah.
And so people are looking at things like cash carry, basis, leverage looping, and I would say we've seen really phenomenal asset managers who really understand how to mitigate those risks. And then, as you do in any market, I've seen ones where it's been a little bit more concerning to see how those strategies play out over the next 6 months. So we'll see.
Well, that's the question that I wanted to ask about the DATs, right? So from your perspective, your vantage point, do you see these extra yield, I guess, chasing strategies? Do you see them as well managed in terms of risk, or do you foresee some of these DATs collapsing if the crypto that they're holding falls below a certain value, right? Because they typically you borrow money and then you buy crypto with the expectation that the crypto appreciates more than your cost of capital and so forth. So when they're holding that crypto and they start getting into these more exotic activities with that crypto, we saw that in 2008 when they get too exotic, right? And then people don't even understand what these assets are, these strategies are, and then the contagion just explodes and affects people that had no idea that this was happening. And you kind of inferred that with the 3 hours thing. What's from your vantage point? Oh, dry throat today. Your vantage point, do you see the risk management being well executed and implemented, or not? Because you're into risk management, right? So what are your thoughts about the DATs?
Not all DATs are created equal, and not all protocols are created equal, not all companies are created equal, and not all management teams are created equal. And so I absolutely foresee that a DAT is going to blow up, and it's going to unfortunately be really, really bad for the rest of us who are doing things in the right way, who are, crossing our T's and dotting our I's, and have the right teams in place to manage that risk. But not all DATs have the right management teams in place, and it is very concerning. I think we've seen, the market definitely direct money towards DATs that have better management teams, because at the end of the day, that is who you are underwriting. You're underwriting the liabilities of the company, but you're predominantly underwriting the management team. And so, I think the market has done an okay job of, allocating funds into the right management teams. But that said, not all of them are phenomenal risk managers. And so, I think we'll see if the market, as you said, continues to go up and to the right, and we don't get large price swings. Then, I think the risk will be somewhat mitigated. But not all managers are good managers, and when you do get high volatile events and funding rates blow out and lending rates blow out, you start to see the cracks really do start to show.
So I guess we can assume that, or we can have a higher level of confidence that a DAT that works with you guys is going to have a better level of risk management. So my question is, do any of such DATs, do they disclose that they're working with you? I'm asking that because if you're an investor, a retail investor, you're looking at which DAT should I invest in? Maybe that might be something you actually would want to look at, who are they working with for risk management?
Absolutely, yeah. So all of the DATs have to, go through proper disclosure. So all of the infrastructure providers are disclosed. And I'll actually give you a data point for this, going back to some of the risk management. So there was a very large staking provider who had to go offline due to a hacking risk, and that actually took the staking ETH withdrawal queue from, from a couple days to over 45. It was 45 days is, probably some of the largest queues we've seen in the last couple of years. And so if you are leverage looped into an ETH strategy, it suddenly took you from 45 days. It's 45 days every time you unwind the loop. And so you could see a world where you suddenly get multiple hundreds of days for you to be able to withdraw ETH from your loop. And so if you did not properly manage that risk and suddenly you have large withdrawals from your DAT, you are not going to be able to facilitate the withdrawals in time, and you'll probably have some sort of run on the bank. And so what we were hearing from dads is that they had borrow rates against these that used to be 50 bips, and that borrow rate spiked to 5%. And so again, if you are not managing, your rate relative to the ETH staking rate, then you suddenly got blown out, and that rate, amplified by, call it 10 loops, can start to hurt very quickly. And so, I think that is where if you go through the disclosures, you're looking at the management team, you're looking at the infrastructure providers, and you feel comfortable with underwriting, folks based on their experience, then, a lot of people we saw have seen this before. It's not the first time this has happened, and managed the risk well. But for some people, that might have been the first time you got blown out. And at that scale, it can mean a lot of different things.
Yeah. So one thing I noticed on your site, you've got the SPAN framework. That's the CME framework for managing risk. And I was just reading through it. I mean, I've heard about it. I don't know exactly what it is. I just kind of read through it. Is this a standard for like crypto prime brokers? And I'd asked about. I was curious about how other prime brokers in the space operate. Is adopting something like SPAN standard for crypto on-chain prime brokers, such as yourself and like the Coinbases and the Krakens and exchanges that do prime brokerage? Is that?
Yeah, it's a good question. So it's not standard yet, and the reason is, the CME SPAN methodology is fantastic, and it's, very much an industrial standard, and obviously looks at things like volatility and price over time. The issue with crypto is it is significantly more complex than traditional finance in the way that different assets are priced, especially if there are pairs of assets. So for example, in crypto, let's say you're providing liquidity into a pool, and the pool has 3 assets. How do you underwrite, the price of each of those 3 assets? And so we do a lot of work to calculate, for example, the asset weight of every pool, and then based off of that, the price over the course of volatility and size and a risk ladder, and then running that, every couple of milliseconds as well to adapt to any market movement. You also look at on-chain liquidity, right? So, we take the more conservative approach by assuming you can only liquidate on-chain, even though we have CeFi integration, and that way it gives you far more conservative LTVs and discount factors than I would say some of our other counterparties. Historically, I would say people have told us we are more conservative, but we like that. And, we haven't had in the, call it almost 3 years that we've been operating, we've never had a liquidation. We've never had a client, called blow out or blow up.
So no client has been liquidated? Like it's margin call, nothing?
We've had margin calls, but we're pretty conservative on our margin calls. So even in the last 3 years with, heightened volatility, we start sending you alerts, we call your cell phone, you get emails. And again, the benefit of dealing with institutional clients is that our clientele is also tracking us on their end, and all of them have predominantly proactively topped up. And we've never had a liquidation, and we're very proud of that because not many people can say the same, and that's a very hard thing to accomplish. So it helps me sleep better at night, and I'm sure it helps our clients sleep better at night too.
Yeah. So that industry framework, what was it? C something?
Yeah.
SPAN, yeah.
Yeah. So basically, you're saying it is insufficient.
It's insufficient today, absolutely. And I think, look, as we see, because again, we always tried to bring TradFi into DeFi, but now as we bring some of these DeFi assets into TradFi, we will find a middle ground of how to properly price and underwrite these specific assets. And I think a lot of work needs to happen on both sides in order to figure that out. And that puts us in a really great position because we have a library of assets that we've already underwritten, back-tested, and priced. That's very easy for us to share with, folks like CME, CFTC, NASDAQ. And so it puts us in a really good position to be able to have those conversations.
Right. So you may actually be shaping the industry recommendations.
We hope so.
Yeah.
We hope so.
Based on what you're doing in the trenches.
Yes, in the trenches.
And what makes, I guess, August Digital different from the other folks in the space? Like, do you have like a secret sauce? Maybe you don't have to reveal it, but like if you were pitching yourself, like you said you've got BlackRock and other names that are clients of yours. How do you attract those versus other bigger names than you that are more, I guess, well known, better known?
Look, I think cross margin is a real key to that because everyone will claim to be capital efficient, but very few can actually do that at scale across all the different venues that you're currently trading. Historically, what we've seen is people can only unlock cross margin or capital efficiency against maybe a portion of the venues you trade, not majority of them. And it is a really hard question to solve and one we've spent a lot of time working on. So I would say that is really our core differentiation. And then the next is the technology itself. We have really prioritized security across transparency, and I think now that the institutions are really coming into the space, they really value the fact that they can choose exactly how assets are used, where assets are deployed to, different risk levels, LTV levels. They can take our call it underwriting framework and they can adjust it based off of what they'd like to do with it. And so I think we have that library of data in addition to security. So I would say those are the three things, really the cross margin, the infrastructure, and then the data that we've been calculating over the last 3 years that we can share very easily.
Yeah, I think it's always good when you know what your competitive advantages are. All right. So one thing, you work in finance. One thing we've been trying to do is poll our guests and see what their price predictions are, if they're willing. What do you think Bitcoin is going to look like at the end of the year?
Yeah, so look, I'm not as bullish as Brian Armstrong, who I think came out with the 1 million mark this morning for 2030. We have a ways to get there.
2030, I mean, you might as well be that's an eternity. Let's talk a little bit shorter term.
Dart out there. But I would say, look, we're I think around 112 right now. I used to have a hat for 100K, and when we crossed that, I told myself I'd get myself the 200K hat. But
when's that coming?
When is that coming? I don't think we'll get there by year end. I think we have more room to come down before we go back up. What I've heard at least is, there are folks in the OG crypto community, Bitcoin community, that haven't necessarily liked that Bitcoin's going more mainstream, that MicroStrategy and BitL hold such a large portion of Bitcoin, and there is centralization risk with those two players. So I do think we'll see lower before we see higher. But, I would say we'll probably, by year end, my take is 150K. So, not as maybe bullish as your typical 250 plus. But I think we'll see volatility, and we like volatility, so that makes me happy.
How about in terms of the cycle? A lot of people are saying there's for a decade you got the 4-year cycle. People are saying this year, this cycle, maybe we have end of this year, early next year. Any thoughts on is there a super cycle?
Yeah, so I would say this cycle has been very different than most because you've had asset appreciation, but volatility is at its lowest it's been in, call it a year plus. And so the typical strategies that would have made a lot of money, whether you're options trading, whether you're basis trading, hasn't been as profitable as it has in recent years. And so I actually think when people say, hey, we're in the bull cycle, we're kind of in just the asset appreciation cycle where, Bitcoin has been inching slowly up and to the right, and you've been seeing the same because of the digital asset treasury purchasing of the underlying assets. And so I actually don't think we've actually hit that core bull cycle we're waiting for that we've seen with the blue chips, that we saw with the meme coins, and there hasn't been that narrative yet that's been driving the next bull cycle. And so it really, unfortunately, I think it really depends on how well the risk, going back to risk, I think it really depends on how well the risk is mitigated for DATs. If it's not mitigated well, we will see a bear before we'll see a bull. But if it is, then hopefully we get, another narrative that brings us into, a true bull cycle that I just don't think we've seen yet.
Yeah, very interesting take. All right, Frederick.
Yeah, so last question that I'll ask you is, we're live here in South Korea at Korea Blockchain Week. Have you seen any projects besides, August Digital? Any projects that excite you or any other projects anywhere else that you're excited about in crypto?
Yeah, absolutely. I mean, there's a long list of them. I would say, first of all, a huge shout out to, Korea Blockchain Week for organizing this event. The regulatory environment in Korea has changed drastically, and they've been at the forefront. Folks like HashVC, a big shout out to Francis and Sung, who do a lot of work to meet with regulators on a daily basis and have the conversations to try to open, Korea to other, protocols and blockchains. Korea is, pretty relatively closed off, and so it's hard to get that, users that kind of access outside of exchanges, and so they've done a predominantly great job. And then, of course, the blockchains. We work very closely with Sui, and so very excited for them. Dojo S Chain, we're also working with them pretty closely on the Upshift side, and so excited for their launch. I can go on and on, but I would say those are kind of the two I'm most bullish about. It's very, very excited. But, the atmosphere here is fantastic. You get the excitement in Seoul that you really don't get in a lot of other cities, and so really excited to soak that in this week.
And where can people find you if they want to get in touch with you?
Sure. So, you have both August. On the August side, it's augustdigital.io. We also have our Twitter, which is less active. And then for Upshift, that's very active for us. On Twitter, it's upshift.finance. And so you can find us on both sides.
All right, there you have it, folks. Aya Kimtorovich, CEO and co-founder of August Digital. Aya, thank you for joining us on the show. Next, we have Anthony Anzalone, the Burns Banksy. So stay tuned, folks.
In this video, you're going to learn how to mint TBTC on the Ethereum network using the Bitcoin.com wallet. So first, you'll need to make sure that you have at least 0.01 Bitcoin in your wallet and some Ethereum to cover the gas fee. Once you meet the requirements, you're going to head over to the Web3 Explorer on the wallet. On the search bar, you're going to type in dashboard.threshold.network. Next, you're going to scroll down and hit Mint TBTC and connect your Ethereum wallet. Find the Bitcoin.com wallet and then press connect. And once again, make sure the connected wallet has some Ethereum to cover gas fees. Under the BTC return address, you're going to remove the Bitcoin colon, and this address will be the same address that is funded with at least 0.01 BTC. Once you've done that, you're going to tap Generate Deposit Address. Now, this will create a receipt, and you can save that receipt somewhere and then press back, and you'll see that the deposit address has been generated. So this is where you're going to send your Bitcoin. After copying the deposit address, go back to your Bitcoin wallet and enter it into the address bar. Let's switch to base currency Bitcoin, and then we're going to send 0.01 BTC to that address and press continue and slide to send. Next, we're going to go back to the dashboard of the Threshold Network site and connect the same Ethereum wallet that we used initially. And after an hour or so, you should see that your deposit was confirmed, and you're going to tap on Bridge. Now, you can see here that you have to pay a network fee for this, so make sure that your wallet is funded with Ethereum. After a few seconds, you should see your mint initiate. After a few hours, you should see the TBTC show up in your Ethereum wallet. That's how you mint TBTC using the Bitcoin.com wallet.
In the last 7 years, the price of Bitcoin has grown by 50.6% per year on average, far outpacing stocks, commodities, gold, real estate, emerging markets, and bonds. At a $2.2 trillion market cap and growing, Bitcoin is now comparable to currencies like the Australian dollar, commodities like silver, and companies like Google. Bitcoin is here to stay, but as governments around the world print money and Bitcoin vacuums up global liquidity, it is poised to grow much larger. Here's how much one Bitcoin would be worth if it grew as big as a company like Nvidia. Then gold, or the US dollar, global M2 money supply, global equities, global bonds, and global real estate. Nothing can stop this train.
We're giving away free Bitcoin all throughout our live stream conference coverage. First, you need to download the Bitcoin.com wallet app. Throughout the conference coverage, you'll see these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner and scan the large QR code. Swipe to auto-magically send the Bitcoin into your wallet. You need to be ready, be fast, because anyone watching the live stream can get that Bitcoin.
We saw all of the exciting stuff happening with Dubai and crypto regulation. Their whole system is really trying to cater towards bringing more crypto innovators, builders, businesses, and just saying, we've got a framework, we've got a safe way to do this, and it's all by the book, it's all friendly, and they rolled out the red carpet for Bitcoin.com. So we saw it as a great opportunity to join the Dubai area and expand Bitcoin.com's reach into the MENA region. We're now operating out of the DMCC economic free zone. And I implore like every crypto builder, if you're looking for that legal support, the frameworks, the stability, and some support from banking, Dubai is still ahead of the US. You can't just fly into the US and be like, I'm setting up shop here, getting a bank tomorrow, ready to rock. But you can do that in Dubai. Moving is a pain in the butt, and moving companies is a pain in the butt. And if you don't have those like local contacts that can kind of guide you through the red tape, there's red tape everywhere, including in the UAE. It just felt like the Dubai entities and the DMCC really made that process a lot easier. They've got shared co-working spaces, office space, all the legal frameworks, all the VARA support, any of the legal compliance stuff that you got to do to just stay above board. They'll make sure that you've got that clear checklist and support you along the way, just guiding you through that process. The Dubai and DMCC guys, they went above and beyond. There was active boots on the ground really like welcoming us. I can't thank them enough. It's been really helpful for us.
Stable, but exposed. If your dollar token can be tracked, frozen, or flagged, it's not freedom. Freedom Dollar is the first uncensorable stablecoin, private by design, built on Zano. Unlike Tether or USDC, Freedom Dollar hides your balance, your activity, and your identity. No tracking, no freezing, no middlemen. Hold, send, and swap Freedom Dollar privately, right inside the Bitcoin.com wallet. And now you can even spend it worldwide. Privacy isn't a luxury, it's a right. Freedom Dollar is your escape from surveillance finance.
And we're back at the Bitcoin.com studio here at Korea Blockchain Week. I'm Graham Stone here with co-host David Sensel, and we're joined by Anthony Anzalone, aka Burnt Banksy, and also founder and CEO of Zion.
Yep.
Excited to have you on the show, Anthony. Thanks for coming.
Yeah, thanks for having me. Super exciting.
All right, so you came to prominence as Burnt Banksy. Could you take us back to that moment and what you were trying to prove by burning an original Banksy?
Yeah. So the voices in my head were just particularly loud that day. But in all seriousness, this is back 2021. No one had really heard of NFTs like to the concept that they are now. And I was getting a lot of flack from my friends and family for owning these things. Like, if there's, if it's not my living room, if I can't see it, where's the value? It's not real art. So I'm like, okay, let me take something that has real value, can be in the living room, and then bring it into the digital world as an NFT. Of course, I have to destroy the original, otherwise where's the fun in that? And so we lit it on fire, hence the name Burnt Banksy. We bought it for about $90,000, sold it for about $400,000, and kind of started what you're seeing today with NFTs. We're still in the Wikipedia for NFTs today.
Okay, so how did that experiment shape your view of digital provenance and the role of blockchain in culture?
Yeah, that's a great question. I think that it really expanded my mind in the way, I understood that it would have a lot of implications of digital art. But what I didn't expect for it to happen was to show how borderless everything can be, right? Like, there's an American art market, there's there's Sotheby's in England, and that's kind of you kind of have these high profile artists, but you really don't have this global concept of an artist. Rather, you actually have a starving artist as a concept of a normal person. And so what I didn't realize the unlock was, and the huge unlock was for NFTs, was trying to remove that concept of starving artist in its entirety for the entire world. And, I had met so many people that I had never met before from Africa and Asia who wanted to be artists, but it was just one of these dreams that was never possible. And I think for the first time I've ever realized it was possible.
All right. So, I guess you could say that you started your journey perhaps as a provocateur.
Yeah, and ended it.
And you have since transitioned to founder.
Yes.
So could you tell us about that transition and what you're working on?
Yeah, that's I think that the transition to founder was something that I didn't really expect to happen. After the Burnt Banksy happened, I was working. Do you guys remember Clubhouse, that app? Clubhouse? Yeah. So back in the day. I know, I'm still waiting on it. I was in Clubhouse every day doing a bunch of other NFT projects and effectively trying to hyperscale what I was doing with the NFT stuff, but realized that there were so many problems with the industry. And I think I had really fallen in love with the ethos. I'd really fallen in with the vision of crypto. And one of these things where I had a real job, my parents were proud of me, and then I decided to change all of that. and because I really saw the problem of we could actually fix this. We need to fix this. And a lot of that was just kind of crypto is completely unusable. And if we actually want to remove that version of the starving artist, we want to make a global economy, someone's got to do something. And so I found myself in a founder position, failed a lot, made a lot of mistakes. I still make a lot of mistakes, but it's kind of impact that needs to be done.
You said that you were experiencing lots of problems.
Yeah.
Usability. Can you kind of expand upon that?
Yeah.
Exactly what was.
So when I was doing the auction, you have to also remember this is 2021, but not a lot has changed on that front line crypto. You still need a wallet. You still need to go to Coinbase or bridge it over, however you want to use. You need to know what an Ethereum or a Solana or whatever the native token is. There's a lot of headache that comes with crypto, and it's just blatantly unusable. A lot of people just think about it as a scam, and I think that is because you've been kind of hiding behind this huge barriers to entry. So when I talk about that, it was my friends couldn't participate in what I was doing. My family couldn't do anything, and we were on a global stage, which we were very happy about. But it was a global stage and a global message, but only really targeted to the small sect of people that had $400,000 of Ethereum.
Yeah, exactly. Okay.
All right. So let's talk about Zion. For those who aren't familiar, what is it? Why should people care about it?
Yeah, you shouldn't care, is what I always say. But we're just trying to make crypto usable. I think that we've built so long in this like echo chamber where there's, dexes and like swapping and lending, and that's kind of the entirety of the ecosystem. But so Zion effectively exists. The North Star is to make crypto usable. Web 2 front end, Web 3 back end, and then just actually provide a use case for crypto. So like we're lucky enough to be working with brands like Uber and Nike and have like well over 100,000 daily active users across the network, and just actually providing value to people in the form of, let's call it verification or composability or kind of whatever they want, while maintaining that crypto ethos.
Could you break down like?
Oh yeah, I can.
I don't know if I want to. In crypto language, what is Zion? Like, is it a layer one?
It's a layer one. Yeah, in crypto language, it's a layer one. It really feels like one of these like by any means necessary kind of companies. So it's like we'll work with a brand, and whatever they kind of need, it's just kind of like a smorgasbord of different things, right? Like we're walletless. We use like Google or Apple ID to sign in, credit card, debit card, but also we can use we can get like real technical and say like ZK email, ZK TLS for like, we can prove like ZK email, I can prove that you went to a certain university, or ZK TLS, I can prove that you're a top Uber rider, right? And so it's pretty bespoke in the form of like messaging. So it's kind of like Stripe in that matter, where there's a lot of building blocks, but like for the crypto, it's an L1, but it has smart contracts on the protocol level. Everything else is just kind of building blocks.
Okay, so you mentioned some of the brands you've worked with.
Yeah.
You say
Uber,
Nike.
Yeah.
Could you just give an example of like what they're using it for?
Yeah, absolutely. So Uber's probably the best example, and I can go to Nike as well. But Uber, as I kind of said, we can prove usage on apps, right? Like CKTLS. So we can go, and what we do is we have a budget from Uber effectively, where we have Lyft riders, and you can log in with your Lyft account. If you're a top Lyft rider, we have budget from Uber to legitimately just pay you to move over to Uber.
Oh, really?
Yeah. And so it's like we can prove that you're a Lyft rider, right? This is opt-in information. We're not like data crawling and listening to you on the phone. We don't store anything. We store proofs, like ZK proofs on a ZK circuit, and we can prove that you're not a Lyft rider. Or that you are a Lyft rider. We could prove that you moved over to Uber. Let's say you've ridden 5 miles on Uber, then you get, the kind of allocated budget. And it can be pretty bespoke, right? Like someone who's ridden 5 miles on Lyft is someone different than 50 miles on Lyft, which for those who don't know Lyft, it's an Uber competitor. Context, if we didn't get that. And Nike, it's similar, but it's rather than a competitor, it's Strava, which is a running app in the United States. So it's like we could target the people who run the most in a local area. Those end up being Nike customers. And so this is like one of the angles we're taking, which is marketing, which is we know real people, we get real data, and we're GDPR compliant. But we also get like the lowest cost for any user targeting.
Why does this need to be on the blockchain?
Yeah, it's a good question, because we don't want to store information, right? Like if we can't just like steal Lyft data, we can't steal Uber data, but we can cryptographically prove, right, via the transport layer of the internet, ZK that, and store the proof so that we can use the proof like, yes, that is that. So the reason we need it on the blockchain is because otherwise we'd violate every data privacy law on the internet.
Oh, interesting.
And so having it in a decentralized way and a secure way, right, is really, really important to us. And, additionally being able to build like a verification layer where we have a series of proofs, like we have an Amex proof, an Uber proof, a Netflix proof, so that you can kind of get this like data layer of the internet is really what we're building for.
Could you explain about these proofs? So, is the idea basically that the information is there, but nobody can see it unless they have the key?
No one can see anything anyway. Like, not even the internal machines can see them. The information is never stored anywhere. The only thing is like, I could scan, like another one we're working with is like you can scan a passport, and I can prove, okay, yes, this person is a citizen of the United States, but you're not seeing anything else of that data, right? You're not seeing the name, you're not seeing the location, and something like that works really well in places that have really, really high, bribery and corruption rates, right? Where it's like, we want to do voting here, but people are genuinely scared for their lives, and so it's like, you look at like, let's say NSA attacks, right? Like in the back door, it's like, yeah, Facebook has all of our data. They store all of our data. So the reason we do it on the blockchain is because we don't want to store anything, and the proofs are just looking at things like binary. It's either a yes or a no.
So you said that, so that's the backend, Web3 backend. So there's a Web2 front end.
Yeah.
What does that entail?
Like, imagine if I'm doing all this stuff, like with Uber, and it's like, great, now download the MetaMask.
Yeah.
And then, oh, sorry, you didn't actually have enough, ETH in your account to be able to do that. That sucks.
You lost your...
Go to Coin. Yeah. It's like, oh, yeah, did you remember those quirky 12 words? That sucks. You lost everything. So it's, we for the past 4 years, I would say we worked on that, like, first part of, like, what we call making crypto disappear. And then we kind of got to a realization that we cannibalized ourselves in actually building that, because it was like, I'll go to someone in Web2 and be like, we made crypto disappear, and they're like, okay, cool. It already was for me.
Yeah, it never was.
Yeah, I don't care about this.
Yeah. So but the Web2 front end, I imagine it's per customer, or is it like a...
No, it's like log in with Google, or it's similar to a wallet, but it's a meta account. It's a smart contract account, effectively. So you can do it on your phone. Yeah, you can do it on your phone. I did it on a treadmill once, which is pretty cool. You can do it on legitimately any device, TVs.
Samsung
really cool.
refrigerator.
Dude, you laugh. Yeah, someone did it on a Samsung refrigerator. It's freaking awesome. And you're not really constrained by anything. It's also like credit card, debit card, no like USDC, but it is stablecoin. And like, if you want to use Bitcoin, you can, right? Because the big part of this is like, there's the world out there that doesn't use crypto, but there is still the world that like will use crypto. And so we wanted to make sure that like even Bitcoin wallets are still compatible, and even Bitcoin can be still compatible with everything we do. Although we know that there's 7 billion people out there, and there's probably 700,000 crypto people out there.
I believe you described Zion as an infrastructure layer, comparing it to something like Stripe.
Yeah.
Yeah. Could you explain what your like business model is? How do you make money?
Yeah, I think like a really good way to think about it is, it's like Plaid. Are you familiar with Plaid?
Yeah.
Where you like log in with your bank? Okay, so instead of logging in with your bank, we can log in with anything in the world, right? Whether that be your AT&T account or your forget we're in Korea. Whether that be your Uber, whether that be your Nike, and you can get that information, right? Similarly, you can get your banking information. And so it's like, the way that we make money in a couple of ways depends. Like on the product side, we get revenue because we're like facilitating, let's say on that marketing angle, right? Like we have budget to target users and we get a percentage of that. But on like the infrastructure layer, it's, every proof we charge a very fraction of a cent. And think about that attuned to like a gas fee, right? So it's basic gas fees, but we don't call them gas fees. It's just like processing fees.
Does Zion have a token?
Yeah, it's Zion.
Funny how that works.
I thought about that.
XION.
Yes, exactly.
Now, how does that fit into like where do the token? Like,
It powers
does value accrue to the token in some way?
Yeah. There's a buyback and burn mechanism, but effectively it powers everything, right? And so it's one of these things where like we're talking to Uber, we're not really mentioning Zion token, but to that point, revenues will be used to buy back and burn the Zion token. And so the way that I look at a lot of this stuff, it's like AWS credits in a way, right? Like I'm using. I'm on YouTube right now, probably watching. I don't know where you guys post this, but I'm on YouTube watching. Yeah, YouTube. I don't know where it's hosted. I don't know how they're paying for that, but I know that I'm watching this incredible interview with three handsome men, right?
Absolutely. All right. So, looking at your website, the roadmap you've shared, it's like framed in ages.
Yes.
Could you get into that? Like, what does that mean?
Yeah, it's a good question. And it's funny because I find what I do, and like we talked about this a little earlier, where I like end up cannibalizing myself, which is, we started with like the age of burning, which let's get attention, right? Like there's an issue, let's draw an issue to that. That was the Banksy. Then it was, oh my God, this is completely unusable technology and we need to actually be able to reach out to the world. So we needed to abstract everything. And for the past 3 to 4 years, it was the age of abstraction. Now it's like we're sitting there and they're like, great, okay, we did that. Congratulations. Why should people care about crypto? And took a lot of like soul searching effectively. But effectively, the answer to that is we can prove everything on the internet, right? Whether that be money, art, real estate, everything in the world we can prove on the internet, because before this, the internet was just a cesspool of nothingness. And like, you have the dead internet, AI is just hyper scaling that, like, this destruction of the internet. So you need that, like, proof layer effectively. And, you know, what we realize with that and like where that's going to go is we understand that that is such a wide target that we simply can't do it ourselves. And so open source everything, find that next Steve Jobs, find that next entrepreneur. We'll say, great, like we found one, Phil George, NOS, who does the marketing. And we understand that he is going to build a multi-billion dollar company, if not trillion-dollar company, completely revolutionizing that marketing industry. You know, we were working with airlines for loyalty, and we understand that is another trillion-dollar industry, that loyalty, right? And that's not something we can do alone. And so we are looking for the entrepreneurs. And we call this the age of unicorns, which is that like blitz scaling. Great, we proved out the proofs. Let's build, replicate, and hyperscale that.
How big is the team, and are there like a decentralized governance, or is there anything like that? Or
I would say like the actual team is like 30, but we have a bunch of projects working on us, probably size between like 10 to 20. I would say is like that sweet spot where, you know, we're placing that in, they're hyperscaling, they're growing, and, you know, I would say the Zion ecosystem in terms of people is probably close to 1,000.
all right, maybe a tough question.
No way.
Why wouldn't some of your current customers, like let's say Uber or customers you might be supporting in the future, why wouldn't they just build their own infrastructure? Why would they want to use Zion?
Well, we don't actually, that's a good question, but we don't actually like pitch. We're not working with the Web3 teams there. Like, we're not telling them it's crypto. We're going to their marketing team and we're saying, hey, do you want to spend 80% less? And normally people are like, yeah, I do. And that's the sell, right? So like, it doesn't matter. The infrastructure doesn't really matter. It really, really doesn't. The fact that we're a crypto company doesn't really matter. But it's the only way, as we said, that we can get you this information. We can save you a bunch of money. And like, I think for the first time, what we really realize is we need a benefit for this industry, not just being like, I mean, decentralization, security, scalability, and then just kind of moving on with that.
Yeah, that's awesome.
Thanks, man.
I'm really enjoying this conversation because
I called you handsome.
Of course.
Besides that, there may be
hearing the truth. But I mean, obviously we are like neck deep in the crypto industry.
Yeah.
We love talking about ZK roll-ups and you know, L1s and stuff. But a lot of what you're talking about really is like reaching to people who don't need to care about this.
Yeah,
right.
And they shouldn't.
They shouldn't need to care about it. Other than that, it can improve their life in some way, or if you're a business, it can make things more cost effective and things like that. When you go to companies or you talk to people who don't care about crypto at all, do you bring it up ever?
Well, it's funny, like we've built our distribution in such a way where we're so far disconnected from that actual conversation, which is really, really good. Like in the example of EarnOS, like it's the Uber marketing team talking to a marketing agency employed by a product that we built that is then like deployed on us, right? So it's so far away where we end up being like that core piece to be able to provide it, but it really doesn't matter.
Yeah, that's awesome. I wanted to you mentioned like airline loyalty points.
Yeah.
I'm just a little curious about that. I don't know if you can talk about it.
Yeah, that's an interesting one because I got yelled at the other day. So I'm going to call it Airline 1 and 2. But we're talking to a few airlines because what we did was, it was like a complete accident. Like in an internal hackathon, one of our, like it was our CTO who was like, hey, actually this is pretty interesting because I fly a lot and these are not the airlines. I'm just going to use two airlines. But let's say I spend a lot of my time in Korea, right? And I flew Air Korea. I had huge status loyalty on Air Korea, but I'm moving over to England for some reason. Bad move. our CMO who's filming right now lives in England, so
Matt is also
wonderful.
English,
Okay, good.
so,
I'm
yeah.
not getting a lot of hits here at once. But you want to unfortunately start flying British Airways a lot more.
Bad move.
Bad move.
You need to escape that dystopian hell.
You know we're not talking to these because
All right, yeah.
but but so there's this thing called like a status match thing, which British Airways would be like, great, like you can get a loyalty test if you prove to me that you're an actual loyalty member on Korean Airlines. And so the way it's done right now, it's actually you just take a screenshot, and it is horribly efficient.
Really?
The reason our CTO built it is because he's like, yeah, I've just been editing screenshots for people, all my friends.
That's wild.
Yeah, and so he built this in an internal hackathon, and it was in tandem. We ended up getting a cold email from one of these major airlines, and we're like, hey, we're exploring this, and we're like, oh, we actually already built this. And so we started talking to one, worked really incredibly well. So then we're like, oh, we can make money off of this. So now we're like, we have conversations kind of globally with a bunch of different airlines, which is, it's something really, really small, but it's, you log in with, your Air Korea account, you log in with your British Airways account, and that's it, right? It's like, okay, we can prove cryptographically that you actually are a Korean Airlines account. Here's your status match. And I come from burning the Banksy, which was like loud and PR, but you then get to like what makes crypto, this is not sexy. It's a button.
That's awesome. I think it's cool.
Yeah, and so it's like little things like that.
I just imagined the poor people at the airlines who have to look at screenshots all day.
Screenshots all day. It's like a crayon, like.
This is like looking at yeah.
Well, why did you get yelled at?
Which time?
Didn't you say didn't this story start off with?
Oh, because we haven't signed them yet.
Okay, yeah. So you can't. Yeah.
So I can't really talk about the names of it yet.
Oh, you got yelled at for disclosing a name you shouldn't have.
Yes, exactly.
All right. Are you? Do you pay much attention to the crypto realm? I mean, like it's.
Yeah, I still exist like on crypto Twitter. I live on crypto Twitter.
Okay, so maybe let's zoom out. What excites you in the crypto space these days?
Oh crap, nothing really.
Stable coins.
Dude, okay, like stable coins. No, we're going into this one.
Do it.
Because like 3 years ago, I would say like we originally like the first thing that we would like, it's like, well, stable coins obviously need to be the front. Like no one wants to do Ethereum, blah blah blah. And now we're getting like everyone and their mother is like, well, that's what we can, so let's launch a stable coin. And it's going to be the same thing with NFTs, where everyone in the world's going to have an NFT collection. And then they're going to get sick of it when crypto crashes. And then we're going to like go back to USDC, USDT. And it's just like, we completely prolong the inevitable of like a winner take all on this. But it's like, in the meantime, I guess we're just all having our own stable coins and increasing fragmentation. So it's like, we did it, I guess.
So you think it's going to be a winner take most situation for stables eventually?
I think so.
Yes.
I think so. Or like, you're going to have like a lot of whitelisting people, but it's all going to kind of settle down to the same thing. Like
Paxos is doing?
Yeah, like yeah. And it's just like, it's frustrating, I will say, because we were so close. Like, I will say, we were so close to being like, oh, it's either USDC or USDT. They're going to win it. And then it was like, or maybe a third contender. And it's just like, here comes everyone. I'm like, great, this is going to be fun for fragmentation. I can't wait.
It's interesting that you compare it to NFTs. I like that.
Yeah.
That's a good clip. Stable coins. Proliferation.
It's the next one. It was meme coin. You always have this ICOs, NFTs, meme coins.
That's interesting. I like that.
Stable coins.
I like it. What time was that?
I want to ask you about Bitcoin, but before that, do you know what happened to where the burnt Banksy is, the NFT?
No, I actually like really, I continuously try to find the person, and because I will say that the person who bought it was called Galaxy, so I did think it was Mike Novogratz, but I've talked to Novogratz and said it wasn't him. So now I'm at a complete loss.
Okay.
It was like one of those new accounts funded by a Binance by a Binance centralized exchange wallet. So like nothing done before.
Trying to be anonymous.
And I respect it, but I wanted, I always wanted to know. But
has it moved at all?
It's still right there.
Wow.
I know.
Was it you?
I would, dude. That would be funny. That would be great, honestly. I'm like, yeah.
All right. So Zion, you're pretty deep in the weeds with ZK Tech and that kind of thing. But let's talk about Bitcoin for a second.
Cool.
Do you care about Bitcoin? Do you care about the whole idea of non-state money?
Yeah, I love Bitcoin. Like Bitcoin is this industry. You look at when Bitcoin goes up, we all go up. Bitcoin goes down, we all go down. And I think Bitcoin was, we've had distributed systems forever, right? We had Leslie Paxos with the white paper, right? And so we've had distributed systems, but Bitcoin was the first use case of crypto, and it really spawned everything that you see today. I've been in this industry. I remember when Bitcoin used to be, it was originally digital money, but now it's digital gold. And I've seen it kind of make that transition. And I like the transition. You have characters like Michael Saylor now, which is really cool. You've always had them for a while. But, I definitely do agree because it's one of these, like, the first use cases where it's like, hey, this worked. Now let's run with a million other things. And the next thing that ran after that was DeFi. And the thing that'll run after that is like, well, consumer, let's just call it, right? Which is, you have stage one of crypto, which was Bitcoin, stage two of crypto, which is, let's call it like Ethereum, Solana, et cetera. And then now, like, we're entering this new stage three of crypto, which is all of these things have been proven out. Let's hyper expand.
Do you think NFTs are going to make a comeback?
I think no. No, because I'll tell you why. I think they'll be renamed. Like, you look at RWAs, which were synthetic assets, which were tokenized securities, and, number go up, great, number go down, boo, but then we can rename it, and it's something completely different. You look at ICOs, IDOs, ICO, but what I do think, like, I think that they'll ideally, and we don't use the word NFT when we sell anything, but we have, like, a ticketing platform, we have a music platform, we have an art platform, and I think that, like, it was funny, like, caught up in the last cycle, no one cares that it's an NFT, like a non-fungible token. It does not matter, especially when you were like fractionalizing these things and then trading it. It didn't really matter anymore, and it was just jargon for the sake of jargon's sake. So it's like, do I care about NFTs? No, but do I like digital assets? Yeah, and I think that that's 100% the future. You're probably gonna get like really, really cool artwork that a lot of people use to signify communities. You're probably going to get really, really efficient ticketing systems. You're going to get a Spotify competitor. All of them will probably be a token that's non-fungible, but who cares?
You're not going to be called NFT.
Yeah, exactly.
Yeah.
All right, Anthony, as we wrap up, anything you'd like to plug? Where should people?
Zion.
Zion.
That's it. Right? Yeah, I'm good. Yeah.
Easy. So thank you, Anthony, for your time.
Yeah, it was a lot of fun, guys.
Yeah, up next we've got Luca Netz of Pudgy Penguins. So
NFTs.
stay tuned for that.
Love it. We're giving away free Bitcoin all throughout our live stream conference coverage. First, you need to download the Bitcoin.com wallet app. Throughout the conference coverage, you'll see these golden tickets. from within the Bitcoin.com wallet app, use the QR code scanner and scan the large QR code. Swipe to auto-magically send the Bitcoin into your wallet. You need to be ready, be fast, because anyone watching the live stream can get that Bitcoin.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in. Install now for free.
Are you a Bitcoin holder ready to explore the world of decentralized finance? With TBTC, you can lend, borrow, provide liquidity, and engage in a wide range of DeFi activities, all securely and free from centralized control. Unlike options like WBTC, where Bitcoin is held by centralized custodians, TBTC is secured by a network of independent nodes, ensuring that no single entity ever has control over your assets. TBTC empowers you to seamlessly integrate your Bitcoin into the DeFi ecosystem, unlocking the vast potential of smart contracts and dApps while maintaining the security of your Bitcoin. Fully backed one-to-one with Bitcoin reserves and protected by a decentralized network of nodes, TBTC ensures that you can always reclaim your Bitcoin or swap your TBTC without relying on intermediaries. As the blockchain space continues to evolve, TBTC on the Threshold network offers you the confidence to put your Bitcoin to work, knowing your assets are secured by a decentralized network, not by a central authority.
What if you got pages for exploring crypto? Read news, check prices, discover new projects, and stack rewards along the way. Over $1 million in rewards paid out so far, and we're just getting started. Download the Bitcoin.com wallet today. The wallet that pays you.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, if, void, country, engine, complex, new, fate, purpose.
Do you think your crypto is private? Think again. On Bitcoin, Ethereum, and most major blockchains, every transaction you make is public, traceable by anyone, anywhere. What you send, who you send it to, when you send it, how much you hold. All visible, forever. That's not just transparency, it's surveillance. Confidential assets on the Zano blockchain changed the game. Built for privacy from the ground up, Zano's system extends its powerful protections, like untraceability, unlinkability, and amount concealment to any token. This opens the door to fully private financial tools. Imagine a USD stablecoin, but shielded. Imagine Bitcoin wrapped and transacted anonymously. Imagine enterprise tokens that move without exposing sensitive details. Confidential assets make all of this possible. And now, with the Bitcoin.com wallet, you can hold, send, receive, and swap Zano's confidential assets, all inside a single, easy-to-use, self-custodial app. Privacy isn't just an add-on, it's the future. Update your Bitcoin.com wallet today and step into the next era of private crypto.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in. Install now for free.
In this video, you're going to learn how to mint TBTC on the Ethereum network using the Bitcoin.com wallet. So first, you'll need to make sure that you have at least 0.01 Bitcoin in your wallet and some Ethereum to cover the gas fee. Once you meet the requirements, you're going to head over to the Web3 Explorer on the wallet. On the search bar, you're going to type in dashboard.threshold.network. Next, you're going to scroll down and hit Mint TBTC and connect your Ethereum wallet. Find the Bitcoin.com wallet and then press connect. And once again, make sure the connected wallet has some Ethereum to cover gas fees. Under the BTC return address, you're going to remove the Bitcoin colon, and this address will be the same address that is funded with at least 0.01 BTC. Once you've done that, you're going to tap Generate Deposit Address. Now, this will create a receipt, and you can save that receipt somewhere and then press back, and you'll see that the deposit address has been generated. So this is where you're going to send your Bitcoin. After copying the deposit address, go back to your Bitcoin wallet and enter it into the address bar. Let's switch to base currency Bitcoin, and then we're going to send 0.01 BTC to that address and press continue and slide to send. Next, we're going to go back to the dashboard of the Threshold Network site and connect the same Ethereum wallet that we used initially. And after an hour or so, you should see that your deposit was confirmed, and you're going to tap on Bridge. Now, you can see here that you have to pay a network fee for this, so make sure that your wallet is funded with Ethereum. After a few seconds, you should see your mint initiate. After a few hours, you should see the TBTC show up in your Ethereum wallet. That's how you mint TBTC using the Bitcoin.com wallet.
So I got into crypto around 2017 during that cycle, that ICO boom.
2017, I was first introduced to Bitcoin. Actually, my first love of crypto was Monero.
I got into crypto in 2017, mainly out of desperation. I started hearing about it and basically, I'm like, okay, this is my ticket.
I got into crypto around 2017. Yeah, it seems quite classic at this point, but yeah, the big bull run basically. Got into mostly ETH at that point.
Discovered Bitcoin in probably mid-2016. Read all I could about it. Got really super interested in it. Put in a little bit of my money, and then yeah, just started building things for it.
I probably got into crypto around 2018-ish, and I knew about it for many years prior to that, but never really got into it.
I started my journey in crypto in 2010. Back when I first installed the Qt miner exe.
I'm a full stack engineer, mainly deal with front-end web, but I've had my hands in a few different parts of the code bases.
I am a media product manager. I basically handle a lot of the Bitcoin.com news media.
I'm the marketing operations lead at Bitcoin.com. I manage the marketing team, so we've got video team, designers, copywriters, and yeah, we're just trying to spread the word about economic freedom and our products, make sure that everything looks cool.
And right now in particular, I'm kind of building a new exchange product with some of the new cool stuff that's coming out in Hyperliquid, DYDX, and trying to figure out how to make a new decentralized product that still looks like a custodial exchange.
I am the tech lead for revenue, which means I'm responsible for finding revenue streams.
I work with the film and video, do editing, filming the conferences, making different content of that sort. Yeah.
So I'm basically leading up the engineering org, mostly managing all the engineering side of things at this point. Making sure we stay on track is basically what I'm doing, yeah.
Japan is one of the most peaceful countries in the world. The crime rate is quite low.
Everything works and it's safe. You can walk anywhere, you can just go anywhere. You never have to worry. You can leave your backpack on the train and you'll get it back. Like all of that stuff I really like.
The infrastructure is fantastic. You can go wherever you want to. Any time of day, day and night, everything's going on. It's full of energy. People always say like New York's a city that never sleeps, but I've been there and it does sleep, whereas Tokyo doesn't sleep.
The middle class experience in Japan is second to none. What in many countries would be like a 3-star restaurant, you can get that like without really going out of your way.
Super clean, super safe. You know, you can walk anywhere, you can take the train anywhere, lots of good food. It's got like all of the pros.
It's fun, exciting, there's always something going on. People are really kind and friendly. Food's amazing, and they've got amazing toilets. I can't think of any negatives about living in Japan. Maybe I think the language barrier is a bit tricky sometimes, and also the bureaucracy.
It's kind of disconnected from the rest of the world. It's easy to sort of lose touch with reality, I guess, with what's happening in the rest of the world.
They tend to misinterpret rules versus laws. That creates a lot of issues, especially for the crypto industry.
You know, everything's Japanese, you gotta speak the language, and if you don't, you're kind of always gonna be an outsider, I guess.
So it's hard to, I guess, like break into that culture.
I think number one piece of advice I have about visiting Japan is read up on the local customs, for lack of a better word, or mannerisms. Be polite, don't be an asshole tourist.
I personally think you shouldn't spend a lot of money on food. The ambient level of service and quality is so high that you can go to relatively inexpensive places and it'll blow you away.
You're gonna have to take the subway, you're gonna have to take the JR, you're gonna have to take the Shinkansen. Now, yeah, you can stop every station, get your little ticket and do whatever, but just get a transit card. It can be an app on your phone, it can be like the physical card like I have. That way, you just put money on it, and then you can get in and out of the train. If you're buying individual tickets, it's not going to make any sense to you at all.
I guess if you're traveling to Japan, is to mostly just go out a little bit from Tokyo and enjoy. Because I really like you get 1 hour, 2 hours out in Tokyo, like Hakone or Izu or somewhere like that. Everything changes. It goes from being this big city to becoming nature. And if you go far enough, you'll be the only tourist, right? If you go off the beaten path, you get a car, then you can go to the real place.
You can go anywhere and find something interesting to do. So I think like a lot of people just come and do the circuit of like Kyoto, Shibuya Scramble, maybe try and stay in an area that's a little bit off the beaten path and explore that area. There's lots of stuff.
I would avoid temples in Kyoto. Just go to like any medium-sized city outside of Kyoto, Osaka, and Tokyo, and you're gonna have a much better experience.
I think for sure you should spend some time to like scope out an area you like before like, I don't know, committing to like an apartment or something like that.
Be ready for the bureaucracy, and everything is going to be in Japanese. So either you gotta, get your Google translation game going, or you gotta find someone to help you.
Try to learn the language, try to learn the culture, but still be yourself. You're a different animal. Try to stay yourself.
Just do a lot of research. If you have friends living in Japan, talk to them, get as much information as you can before just jumping into it.
The things that make Japan great, like it's so clean, it's so safe, those are only possible because of the restrictions. Be prepared to be spending a lot of time sorting your trash, dealing with local regulations.
It's not the same as your home country, so just roll with it. Makes it more fun. Don't expect it to be like your home. Don't judge the things that are different. Just accept that that's how it is and go with it.
So the best thing about crypto, I think, is everything changes and that you never really know where you're going. When I started, if someone told me about NFTs or meme coins, I would have been like, what are you talking about? What are you talking about? I
think there's just always something new to learn, something new is happening in crypto. The trends come off often and go away just as often. So you gotta ride the waves.
I get to see what's happening in this sort of new age of fintech and be ready to pounce on like these potential investment opportunities.
It can be a little bit stressful at times, especially once you get into the groove of working on a project and needing to change it like straight away. But I think learning new things is great, and because it's like building up my skill base as well as like creating new things for the company and the crypto community in general.
It's kind of a Wild West. You can kind of just play around with it, get it right, experiment. And because it moves fast, if it messes up, that's fine. Because everyone in crypto is used to things crashing and burning. Build it again, try different things, see what sticks.
We're giving away free Bitcoin all throughout our live stream conference coverage. First, you need to download the Bitcoin.com wallet app. Throughout the conference coverage, you'll see these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner and scan the large QR code. Swipe to auto-magically send the Bitcoin into your wallet. You need to be ready, be fast, because anyone watching the live stream can get that Bitcoin.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in. Install now for free.
Are you a Bitcoin holder ready to explore the world of decentralized finance? With TBTC, you can lend, borrow, provide liquidity, and engage in a wide range of DeFi activities, all securely and free from centralized control. Unlike options like WBTC, where Bitcoin is held by centralized custodians, TBTC is secured by a network of independent nodes, ensuring that no single entity ever has control over your assets. TBTC empowers you to seamlessly integrate your Bitcoin into the DeFi ecosystem, unlocking the vast potential of smart contracts and dApps while maintaining the security of your Bitcoin. Fully backed one-to-one with Bitcoin reserves and protected by a decentralized network of nodes, TBTC ensures that you can always reclaim your Bitcoin or swap your TBTC without relying on intermediaries. As the blockchain space continues to evolve, TBTC on the Threshold network offers you the confidence to put your Bitcoin to work, knowing your assets are secured by a decentralized network, not by a central authority.
What if you got pages for exploring crypto? Read news, check prices, discover new projects, and stack rewards along the way. Over $1 million in rewards paid out so far, and we're just getting started. Download the Bitcoin.com wallet today. The wallet that pays you.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, if, void, country, engine, complex, new, fate, purpose.
Do you think your crypto is private? Think again. On Bitcoin, Ethereum, and most major blockchains, every transaction you make is public, traceable by anyone, anywhere. What you send, who you send it to, when you send it, how much you hold. All visible, forever. That's not just transparency, it's surveillance. Confidential assets on the Zano blockchain changed the game. Built for privacy from the ground up, Zano's system extends its powerful protections like untraceability, unlinkability, and amount concealment to any token. This opens the door to fully private financial tools. Imagine a USD stablecoin, but shielded. Imagine Bitcoin wrapped and transacted anonymously. Imagine enterprise tokens that move without exposure.
Okay, we are back at the Bitcoin.com news live stream desk powered by Threshold Networks. I am here with Frederick, co-host, and an illustrious guest, Luca Netz. Thank you, sir.
Happy to be here.
Yes. So to get started, I interviewed you about a year ago at Token 2049. It was one of my first conferences.
Yep.
Thank you for doing that for such a, what's it called? I was such a newbie back then. So I appreciate that.
Anytime.
I want to use that as a framework, though. That was a year ago. Here we are 1 year later. In that interview we had at Token 2049, you told me that Pudgy Penguins was a Trojan horse for consumer crypto. I thought that was aptly put. How is that vision playing out so far?
It's playing out so far so well. I mean, look, at the end of the day, I think crypto is intimidating. It's taboo for the average person. There's no better way to invade the hearts and minds of everyday people than with a cute blue Pengu. We make them fall in love with our character. We make them fall in love with our story and our products. And eventually we educate them and get them down the funnel to the crypto universe. But I think it's a case study that has worked out super well up until this point. The Walmart toys have been onboarding people every single day. We've now been in Walmart, I think, for 2.5 years. QR codes are being scanned, custody wallets are being made, NFTs are being claimed through a gasless experience. I think we'll look back at Pudgy Penguins as really being the pioneer of this bridge, and I'm happy to play our role in shaping this future.
Very, very cool. So it's safe to say that this strategy is working, and I imagine you have a further roadmap ahead. We'll get to that.
I think the best is yet to come.
Awesome. Great. Okay. A year ago also, you were just rolling out Abstract chain. Can you update me on how that has gone? Where does it stand today?
Yeah, we launched mainnet for Abstract, I think 7-8 months ago. I think one thing we solved was the consumer journey. The consumer journey in crypto has been broken for a long time. I think our portal product is one of the great examples of that, of a solution to that problem. We've created a chain that I think if you compare it to basically every other great chain's first year, I think we're beating them by a significant margin. But we have a long ways to go. Building a blockchain is not easy. There's a lot of moving parts. There's a lot of politics. Actually a little more challenging than I thought. But we always embrace the challenge, and we have momentum that I think we're super excited about. I mean, Abstract is the biggest blockchain from a user base perspective in Korea. We've absolutely won the Korean market, and just shout out to all my Korean friends. Appreciate you guys so much, and I know they're loving the chain and the ecosystem, but we have a long ways to go. But the beauty is we're here for the next 10, 15, 20 years. We knew what we signed up for, and I'm really excited and proud of our early results, but I know we need to take it a lot further.
Cool. All right, there's some follow-up questions I have about that. The first is, you said it was more challenging than you thought.
Yeah.
What has been the kind of the surprise challenges?
A chain is only as good as the apps that are built on top of it. So though you can do everything in your power to create a chain and an ecosystem that you think people love and that has momentum, ultimately it starts and stops with the builders building on the chain. And that's a variable you can but also can't control. It's a little bit of a catch-22. Obviously, you can go to hackathons, you can go and look and search for talent, you can procure and poach talent, but ultimately it comes down to the end builder. So there's a couple of variables in building a blockchain that aren't really relevant to the core team building that chain, especially if you want something with momentum and you actually want to compete in the blockchain race. And so I think that's been a little challenging. Also, I think there's a lot of different politics in terms of, responsibility for other people's projects on the chain. I think anybody who's like half smart knows that we have no responsibility for what others do on our chain, and we don't want to be a permission chain. We want to be permissionless. There's natural drawbacks that come with that by not having a walled garden. Those will probably be the two challenges that have, challenges that branch off of it, but nothing that concerns me and thinks that we won't figure it out and that we won't compete. I mean, to be frank, I don't think there's 5 ecosystems in crypto that are better than Abstract. I think the quality of builder we have here is bar none. or at least in the top 5. And we just need to keep cultivating that culture slowly but surely. I'm sure it will all work out. And at the end of the day, nobody believed in us in our first year at Pudgy, right? Our first year at Pudgy was choppy. I could have told you a lot bigger problems than the ones I just told you. And then we figured it out. We get a groove, we get a cadence, and we start doing everything that we need to do.
Very, very cool. You also mentioned that you've done really, really well in Korea. Congratulations.
Thank
awesome.
you.
Why? Why have you done well in Korea?
I think, one, we really care about Korea. 2, I think Korea is the hub of Web 2 culture and Web 3 culture in the East. I think it's really hard to refute that.
Interesting.
I think when you look at Korean culture, they love Western IP, they love cute. It turns out they love the Pengu and they love the Pudgy Penguin. That has segued, I think, into a lot of other places where they've, basically been a part of our community, then segueing into abstract. And ultimately, I think it also comes down to the fact that we really care about Asia and we really care about Korea. We've stood up a whole entire iglooing subsidiary in Asia. We have our own teams, our own leadership, and we understand that if you have to win here, or if you want to win here, you have to be here. And so it's something that we are taking very seriously, and it's also a perfect fit. I think Asia appreciates culture in a way that I think the West doesn't. The West just ends up creating culture as a byproduct of our freedoms and, the melting pot that is the United States of America. But nobody participates in fandom of culture like Asia, and Korea is a perfect example of that. And I think they're just a culture that really respects respect. We show them respect, and we have prioritized a lot of our builds and partnerships in this region.
What do you find is different about Korea in terms of the culture when you compare it to something like another place like Japan, Singapore, Hong Kong? What makes it different?
There's a lot of similarities, but one thing I learned while I was here on this recent trip to Korea is just how transcendent K-culture is. 8 of the top 10 women on Instagram are K-pop idols. 9 of the top 10 music videos in 2024 were K-pop music videos. K-pop Demon Hunter is now the most streamed and viewed movie on Netflix. The list goes on and on and on and on. And it is just transcendent. It's transcendent. I don't know what it is, to be frank. I think it's just been ingrained in Korea for a long time. And Tokyo and the Japanese have a very similar cadence. But I would tell you the difference between, I think, Tokyo and just Japan and Korea today, and I think the Japanese would agree with this, is the energy in Korea feels a lot younger. I do this thing where when we throw our events, I because I think it's the right thing to do, I stand in line, I shake everybody's hand, just to show them that I respect them, and I look at them eye to eye. There's no power difference in my relationship, at least with our community. But the one thing I do also when I do that is I observe who's coming in, who is showing up to these events. And man, 22, 23, 24, 25-year-olds, there is no, maybe a couple anomalies of older people coming, but it's all the young generation. And I think that's the core difference with what's going on in Korea versus the rest.
I live in Japan. I've been there for about 20 years, and I agree.
Yeah,
I agree. Just coming to this conference and seeing that, so yeah.
But I love the Japanese. Tokyo is a special place, so good for you.
I'll ask both of you because you live in Japan and you visit Korea a lot. So Japan has an older population. Does that have something to do with it, like having the younger people in Korea versus like Tokyo?
There's something there. I think actually the statistic is along the lines. I think Japanese is having a younger people. I think Korea is not, because you can just see it. But in Japan, I mean, I'm not familiar with the data off the top of my head, but I do remember hearing something that the birth rates are down in Japan. Maybe there's just not as much young people there. I wouldn't know, but again, you've got to give where credit is due. Japan is still the king of IP. Even the most bullish Korean person would probably say that at this moment, just because of their catalogs. But it's not trending in that direction. And K-culture is taking over the world. I mean, it is so much more meaningful. The clip-ons, everything is coming out of here. I thought it was coming out of different places like China or Tokyo. No, I don't think so. I think it's coming out of Seoul.
Interesting. Awesome. All right, so I have one more backwards-looking question, and before we move forwards. Last year, you said that certain decentralization ideas or kind of techniques had to be maybe sacrificed or pulled back to optimize for UX.
Yeah.
That was, I think, very prescient, given that like the success of Hyperliquid since then. I wanted to know, and now the rise of these perp decks meta. What in this vein, what trade-offs have you made with abstract chain?
Yeah, it's a great question. So last year I told you that consumer adoption and decentralization were not synonymous, and I was right. I will always be right on that statement. It's impossible to refute that. There's decades of examples to that. Social networks are a perfect example of that. What's the most decentralized social network on the planet? It's 4chan. What are the most centralized social networks on the planet? Instagram, Facebook. The list is robust, but it's a perfect example of, at the end of the day, decentralization prioritizes a different onboarding experience and consumer journey than centralization does. I think the conclusion that I've made and where I think the future of blockchains are going is I think all blockchains will have a centralized interface. One interface, one domain, one hub, one portal where you can do everything on chain, where you don't need to go and download an extension and go to a new site and go to another site to perform different functions. One website, one destination, one experience, one journey, one platform to become familiar with. This is obvious. We pioneered this, I think, in our portal product. I think you're seeing a lot of chains follow suit, so I'm happy to be validated by other chains' builds. I think every chain is going in this direction for a multitude of reasons, but frankly, the onboarding experience needs to be done through a centralized interface. However, the backend can still be decentralized, and I think it should. But that's the compromise that I think we've made. We've leaned into a centralized destination for everybody to participate and consume and use our chain in our portal.abs.xyz product. The back end is very much still decentralized, and it has all of those properties. And I encourage everybody to go in that direction because I think it's important for the integrity of the chain. But I believe in centralized interfaces, and I believe there's going to be two cohorts of chains. One cohort of chains that want to be decentralized network states, which I think are important to humanity. That's one bucket. The next bucket is chains that are built to win, to be performant, to have the most users, and those chains will all have one central interface for everybody to interact with because it solves one of their biggest problems, which is the consumer journey.
Yeah. And any examples of some of those chains, like the decentralized ones versus the...
Yeah. Ethereum is a perfect example of a decentralized network state. I would never expect Ethereum to have Ethereum.com, which would have a wallet built in or a swap built in. I wouldn't expect that from them. Ethereum's function is to create a financial infrastructure that's important for humanity. Their function is not anything else. And I want them to perform that function as a human. A perfect example of these centralized interfaces coming to play in this experience, Abstract and Portal.abs.xyz is one example. World Chain and the World app is another example. The entire chain lives in the World app. Another example is the Base TBA app, right? Obviously, you can use Base without that app, but I know what Jesse and crew are going for. They want all of the net new onboarding, all of their users to use that app as much as possible because they believe in that experience. They believe in the retention and the lifetime value that experience creates. And it's an unbeatable recipe. And the elephant in the room, which is a interesting insight that I think most people don't know, which is blockchains are horrible businesses. The revenues that they generate via sequencers do not cover the revenues necessary to maintain the engineering costs for these chains. By owning the end user and owning the central interface, you can make money a lot of different ways. And I think that's a huge reason for why I think all of the chains that are looking to be performant and to win and compete with the end user are going to go in this direction.
Awesome. Yeah. That was going to be my last question about that, but I heard you talk about this on another podcast.
We can lean in if you want.
Yeah, I mean the importance of basically this is like a refutation of the FAT protocol thesis, right? Where most of the value is going to accrue. It's going to be as close as you can get to the user, as you say, owning the user, and so. Obviously, you probably, because you think this, you're leaning into this with Abstract and through Portal Is it portal.xyz? There. Was that rough?
Yeah. It's how we look at it. But again, I think everyone's going to go in this direction. Chains leak all the value to third parties. Makes 0 sense, and that's why you see these blockchain tokens that are down only. It's because they have no momentum. They're making no money on sequencers. They don't control their end user, and the only way they can keep the chain running is by selling the tokens. And that's a bad business. You do not want to be in that business, and I feel bad for all the community members who are betting on chains who are in that business. That's a losing recipe for the community. It's a losing recipe for the chain because eventually they'll run out of tokens. And I just don't believe that's how the future is going to work. And you're seeing this new revenue meta. How silly to call it a meta. It's the future. It's where this is all going. So you're either going to make money or you're not. I'm going to be in the bucket that's going to make money.
Yeah, I mean, this reminds me of Anatoly and Kyle Samani talking about how they expect transaction fees for blockchains to close in on 0.
Yeah,
and they got a lot of pushback with that. But again, this all seems to be kind of in line with what you're saying. So for Abstract, how do you measure success then? What does success look like? What metrics?
End user, how much money the end user is spending on the chain, how many net new end users we have, what's their lifetime value, what's their retention, are they coming back, is this a part of their lifestyle? A lot of metrics, but the same metrics that any great platform, social media app, SaaS is, I'm not looking at it through, transactions and volume and TVL, all these Fugazi crypto metrics. I'm looking at this product like I would if I was running an Instagram or a Facebook and we're working backwards.
Gotcha.
So what is, and forgive my ignorance here, not too familiar with abstract chain, but okay, so if you're not making money on fees, you talk about fees and sequencer fees and not being able to maintain the profitability of a chain. Now, so what is the business model that you're proposing that will maintain that profitability that you're trying to implement?
So the portal product is one domain. If you go to portal.abs.xyz right now, you'll be prompted to put in an email. When you put in your email, you're going to be given a code to your email address to basically sign in. Once you're in that platform, that is your wallet. It's a smart contract wallet. And then once you're in the platform, there's about 4 or 5 different tabs. You have your wallet, your profile. This is where you can make friends, see your assets, send transactions. Then you have a trading terminal. You click to that terminal. You can make swaps easily. Then you have a Discover terminal. On that Discovery terminal, you can explore all the different games and DeFi applications on the chain. Then you have a profile terminal where you can, see your rewards, adjust your profile, again, make friends, socialize. And there's also streaming where you can entertain and see where other people on the platform are basically functioning. Basically, you can go to this one portal product without having to go anywhere else, and you can use the chain and everything that the chain does. You can buy NFTs, you can buy meme coins, you can, go and play your favorite application, you can make friends, you can send money, all without having to leave the website, right? And so it's one cohesive, curated experience as if you were using Instagram, and the business model is simple. Eventually one day we'll charge a fee on every swap, right? Because I own the swap platform, I'm not leaking that value. Obviously, every time a transaction is sent, I make money on the sequencer. Maybe every time I bring somebody to an app, I get a referral fee from that app. Maybe every time somebody sends a tip to a streamer, I take a 5% rate, right? And so those are just 5 business models, simply put. And as the platform expands and we add new features, maybe I have a token launcher directly on that platform, and I let you allow tokens on the chain, and I own that value. And so the beauty is because you own the end user, because everybody on the chain is going back to one website every single day, I can go and create a bunch of different features that can ultimately make their experience better and hopefully make me money.
Awesome.
Yeah. I agree. I think it is the future, and I think it's inevitable because, like you said, no one's going to be doing MetaMask or this kind of browser extension stuff. All right. So, the last topic I have is on NFTs and meme coins. For the past year or so, the percentage share of volume and I would say attention has decreased versus other parts of crypto. What do you think accounts for this? And you think it's going to reverse?
Yeah, meme coins are here to stay. They have huge PMF amongst retail. It's the one thing that every Uber driver and barista understands somehow, some way. I actually don't really understand that, but it's the case. They're only going to get bigger, and I think the goal for Pudgy Penguins and Pengu is to lead the charge in terms of what they should become, because I think meme coins are going to get a lot better of a rap and will have a lot more momentum and a lot more, or a lot less of a ceiling, I would say, if they followed the Pudgy Penguins playbook. If there was meat on the bone, if there was an engine under the hood. Right now, outside of Pudgy Penguins, Pengu, when you look at meme coins and you look under the hood, there's not much. There's nothing much to be proud about, right? It's really a narrative and a meme and a community. And I think it's a total disservice. I think it actually leans into the cons that people speak about crypto. And I just refuse to let that be the future of this category, because I think culture is so important for the industry. Culture is the only thing that I think meets people where they are, and it's not trying to sell them on like this new narrative of hyper financialization, which is obviously important, but I think crypto is sometimes too hyper financialized. And so I think for us, we want to innovate in terms of what meme coins look like in the future. I think they should be somewhere between a meme coin and a brand coin. I think you have to have products on shelves, you have to have movies, you have to have TV shows, you have to have games, you have to have partnerships with the world's biggest brands, and that's only going to bring credibility to memes. That's only going to make people prouder to trade memes. It's only going to bring more PMF to the entire industry, and I think it's going to take this kind of silly category that a lot of serious people kind of look down on, and it's going to add a lot of credibility, and it's, I think, going to be a huge way for retail onboarding. And so our purpose at Pudgy Penguins Pengu is to pioneer that. We're eons ahead of everybody else there. I think everyone would agree with that. And I just believe when you look at what makes a token appreciate, what makes a token valuable, it comes down to supply and demand. And this recipe of building IP, this recipe of building brand, is the best function for creating demand and crunching supply and giving everybody what they want, which is an asset that appreciates, a collectible that appreciates, and something that they can be proud to own and own for the long term.
I hope you're right, because the other side of that is infinite meme coins.
I will be right, I promise. Crypto is an industry that follows the leader. Pudgy Penguins Pengu will lead. We are leading. We will have much more success than we've already had. And when we continue to succeed and hit those milestones, more and more people will follow in our footsteps, and that will be the change of the paradigm. Everyone followed Ethereum. Everyone tried to be Ethereum beta. It's actually one of the cons of crypto. I don't like that it's this way, but I know that that's not going to change anytime soon. And as Pudgy Penguins continues to separate itself from the pack in terms of what it is to be a meme and an NFT, everyone's going to build the same. Everyone's going to do GIFs and Instagram and blockbuster partnerships and huge retail distribution. And when that happens, it's only going to be a huge net positive for the entire industry.
Very nicely said, sir. Thank you for being on.
Thanks for having me.
Really appreciate it.
Thank you, Luca. Thanks for having me.
Yeah, thank you. All right, up next, we have Token Narratives. We'll be back shortly.
I got to run.
Yeah.
Welcome back to another episode of Token Narratives. I'm Graham Stone, joined as usual by Bitcoin.com News Gigabrain, Mr. David Sensel, and we've got Cameron Lee, friend of the pod, back.
Friend of the pod.
Podcast. It's a podcast.
Podcast. Welcome back, Cameron. It's been a while. When was you were on about? That would have been early episode.
Really,
less than 20.
One of the early, yeah.
We're at
early
73 now, I believe. 72, 73.
Like that.
Wow.
So over a year ago, I think was
Feels about
last,
right.
Yeah.
I'll say time is kind of a blur for me, so but it feels right. Feels
all right. So what have you been up to, Cameron?
So I'm obviously we're our project, we build DeFi protocols, and the one we're most known for is Trueflation, the independent measure of inflation. But what I'm shilling here really hard in Korea
shill away
is the kind of underlying technology of this basically allows anything measurable to become a market. And so I'm trying to get people hot on this idea of building like perpetuals on things like Rolex aftermarket prices or rainfall in Nepal. I want to see people do some crazy things like maybe go 5x long on OnlyFans subscriber counts or something like this, right? And these markets sound crazy, but like a little later I can tell you, like you can actually get kind of serious with it and actually hedge with these kinds of things. I think you look at derivatives in the TradFi market and it's all pretty ridiculous like this, but I think the internet version is gonna be a lot more ridiculous.
Yeah.
So that's what I'm shilling here right now.
Interesting. So recently there's been a sort of a resurgence of the pump fund live stream thing. And I've been trying to think of ways that I can have my pump fund live stream.
Oh, you're gonna do a token?
You're gonna do a creator token, huh? Creator coin.
But then when you're telling me about this, I'm thinking, okay, maybe it's pump fund. You're live streaming, and at the same time, there's like a prediction market or a betting.
Totally.
Right.
Totally. Yes.
Live stream. Like what's gonna happen with?
Like just imagine like there's rainfall and there's the Han River here in Korea, right? We've seen these videos of the Korean guys like just losing everything and like, they're streaming and they're like, oh, and you watch the chart and you watch their positions. But like, what if they're doing this like 100x long on the delta of Han River height? You know what I mean? Like, I feel like there's a lot of fun in this.
Yeah.
You know? So will it be that? Probably not. My ideas aren't always the best.
Yeah.
Right?
But maybe not the Han River
Yeah.
levels.
But something ridiculous.
Yeah. That reminds me of that story of the WNBA.
Yes.
Prediction.
Right.
Yes.
So how did that one go again? So people were throwing certain objects onto the
phallic objects onto the court.
Right. And then someone's like, wait a minute, I'm going to make a prediction market and then I'm going to throw such
exactly.
objects.
Yeah.
And when this is happening, I'm messaging my team like, see, these people will bet on anything, man. The people want fun financial instruments. And I intend to help give them that, man.
Okay, so how is this related to, you said the technology behind Trueflation or something?
So try not to get too deep into it, but basically we wanted to make the inflation metrics, permissionless, censorship resistant, all these kinds of things. So this required the technology of, blockchain technology,
Put it on the chain.
We put it on the chain. But then when we had that, we're like, well, you can't build these crazy markets because, dude, I have seen some things. I've seen prediction markets when we try to talk to them, they're like, oh, we just settle manually. So there's just a guy that's just like, oh, I read the news, it said this, so click, you guys win. I'm not naming any names, but there's people doing this crazy stuff.
Of course.
So we've got the attestations and all cryptographically verified and all that stuff. So when we have that, it's like, so this kind of technology we built for just like inflation metrics and economic metrics, we kind of built out. Now you can do fun stuff with it.
All right. Before the in the green room, before the show, there's no green room. We were you were mentioning about how OnlyFans subscriptions is maybe an economic indicator.
Yeah.
Was that it?
And this is where it comes like, so my personal style is maybe to try to get attention. Like, oh, don't you want to trade BTC versus OnlyFans subscribers or something, right? It's silly, it's a joke. That chart, probably a lot of people wouldn't trade it, right? But derivatives exist because people need to hedge their bets. They need to do these things. Maybe they're not quite as degen in the TradFi world, but the OnlyFans, the adult kind of things, when spending here goes up, it is predictive of economic downturn. So people really do use these kinds of numbers. And I think the thing that will follow after maybe some of my silly ideas get out is that people will realize, oh, well, we can actually build real products that we can hedge with or use or actually do this. So yeah, I just find it very interesting, like the correlation of data that you would think is just silly, right? Like actually this happened just last night because I was saying like, yeah, man, OnlyFans versus this. And he's like, well, like this guy works in data all the time. And he's like, well, it's actually predictive of blah, blah, blah. Like people actually use this data to make predictions in economies and stuff. So yeah, I found that interesting.
Yeah. Could you take us back a little bit to Trueflation? So,
yeah.
Correct me if I'm wrong, but did I see that the U.S. government is publishing inflation or certain numbers data online
Economic numbers, yeah.
on the blockchain?
They are.
And are they referencing Trueflation?
I don't think the government is.
Okay.
We do have some major institutional firms using us, and like I think probably the one that gets me excited is like I really like Raoul Paul and Real Vision.
Yeah.
And
You're a big fan. Yeah.
This guy Julian Vittel.
Yeah.
I love that guy.
Yeah.
Right?
We often bring up his charts.
Yeah, I love Julian. Right.
Yeah.
I love the M2 chart, but they only use them, and I think ARK Invest and there's a few others. They don't even use the government's numbers anymore. They just like, oh, and here's the Trueflation numbers. Warms my heart. Warms my heart a little.
Yeah.
You know.
Nice. And so you were saying that Trueflation's numbers are like 45 days ahead more accurate than the official numbers published by the government or something?
Yeah, and people sometimes misunderstand this. They think that it means that if we say something, then 45 days later, the government is going to publish the exact number. This isn't the case. We just, when our numbers pivot, inflation's going up, then it starts going down, or vice versa. You will find that after that, about 45 days later, the United States government will publish the same pivot. Things will start going the other way. You'll find dollar strength. The DXY index will also pivot. 10-year bond yields, Bitcoin pumps, these kinds of things. And we're finding more and more correlations.
So, why is it that you're ahead of the curve there with Trueflation? Do you have better data sources?
Yeah. I mean, like the question in hindsight. So when we were going through this 4 years ago, it was like, oh my goodness, how are we this is so hard. Looking back in hindsight, it's very easy to summarize and simplify. We just took a software approach to a problem that should have been done with software a long time ago. These guys, I'm not sure if they're still doing this, but I think they are. They call you up. How much did you pay for eggs this week? They're doing census, all these kinds of things.
Yeah.
I've heard when the budget cuts, they even they're doing less. So the numbers are getting worse. So we literally just got better data, faster. It's really just not to sell ourselves short, but it's looking back, it's oh, okay, yeah.
Yeah, interesting.
And so we're doing the same thing now with the unemployment numbers. You've seen this get revised. Have you seen this?
Yes, I was going to ask you about the revisions. Yeah.
Exactly. They're just hey guys, we made 1 million new jobs. And then later they're well, psych, So yeah, we're putting a new methodology to that. If it's not out now, it's going to be out very soon.
What accounts for the constant revisions, you think?
Okay, I'm going to try not to bore the audience, but what I had to learn is that actually in data, revisions are very much normal.
Yeah, I know that.
You know this?
Yeah, I do. But the revisions have gotten bigger.
Yeah.
Of late.
Yeah, and it's really tough because I try not to. My real internal beliefs is just trust nobody, trust nothing, right? They're all perhaps lying, right? But even if you take this negative side out of it and you just look at the incentives or this and that, I think it's the political influence.
Really, it's that simple.
It's just you can have a job and you can have a methodology, but at the end of the day, somebody pays our bills, right? So we just try to keep the incentive structure so that we are incentivized to not do this. But if you're working at the BEA or the BLS, and boss man calls up, he's like, I want to get reelected. You're like, well, what if we change this?
Yeah. Wow. That's dark. That is dark. Yeah. And it means we need alternative, maybe private sector data sources.
Sure.
Yeah, absolutely.
Okay, so what are you up to exactly here in Korea? Why are you at Korea Blockchain Week?
So actually, I popped by here to see you guys. But if it weren't for this, right. I had to give Solana Startup Village and Chainlink were doing something. And so we had a keynote to kind of describe the product, and it was actually really neat. The developers, I actually sat through all of their pitches for the hackathon. it was about 3 hours of people pitching these things. But before that, I was just telling them about the kind of crazy stuff they could build with Truth Network. But watching these pitches and everything and seeing what the developers are going through, I'm squalid conditions. You know what I mean? Like they're like sleeping in bunk beds. You know, the guys are talking, doing some panel, and they're like coding their app right then. But it's also like same kind of thing in ETH Tokyo, I think last week. But it is also kind of inspiring and kind of cool to see the energy and the drive and all of this. And so, yeah, it was.
What was the average age of these?
Quite young.
Was it
Quite young?
Yeah.
I didn't ask, people. They looked young to me. But the one guy who did talk to me and offered up his age, he was like 22 or something like that.
Nice.
And like like working on raising money, doing this is cool.
Any standout pitches?
Boy, there were a couple actually. One was doing fully, I don't know, homomorphic, I don't know what it's called, the encryption, like the FHE, it's like, I can't say the word.
Oh yeah, I know all about it.
yeah, FHE, right? So it's really kind of like forward, fully encrypted kind of thing. It's kind of like ZK, but a little bit different. And he seemed to have something interesting going on, a little bit above my head. I would say there was one that was doing medical data on chain. I've heard this since 2017.
Exactly, yeah.
But it was a slightly different kind of take on it that felt a little bit interesting. Let's say, I'll kind of leave it there. And then a lot were really, really not great. But the Solana actually had a panel of about 6 judges that were all venture capitalists.
Oh, cool.
And they were being very kind, right? But they were asking like questions that wouldn't be hard maybe to me, but were just like pushing them enough to kind of see the types of questions they would be getting if they were pitching. So I thought it was very constructive, very positive. I think it was a great experience overall.
Cool. All right, so we got all caught up on what's going on with Cameron. Yeah, nice. So let's
Did we mention that we are live here at KBW?
Can't remember.
Yeah. Anyway, so yeah, just looking at all the people walking by.
Yeah, we are live at KBW. Yeah, there are a lot of people around. It's cool. As a reminder, for anyone who's watching the show right now, we got $2,000 of Bitcoin to be given away during this live stream. All you have to do is get into the comments, follow us on X, follow our partner Threshold Network on X, make a comment, ask a question. First prize is $1,000 of Bitcoin. We got 2 $500 prizes of Bitcoin. Come on, do it.
Comments, please.
Yeah.
All right, so let's get into, as we usually do with token narratives, a gut check on the market.
Okay.
Seems we've had a bit of a little bit of a correction here the last few days. So,
yeah.
I mean, as we talked about yesterday, I think it was like the biggest liquidation event since March.
Yeah.
I believe.
Really?
$1 billion.
So,
more than $1 billion.
I mean, a lot of people are saying that the basically just basic theory is the market was overheated. Too many people were longing and they needed to get flushed out and nothing to worry about. I don't know if you have any is that just too basic of a take?
No, I don't think it's too basic of a take. I would add that since we are on this live stream, I haven't spent nearly any time looking at the market or looking at crypto Twitter to feel like I've been informed.
So you're telling me you haven't been trading 10x between leverage like
No, only my pump.fun creator coins. What is it? Bag World? Is that
Bag World? Yeah,
yeah, that's the one. Yeah. No. So I think your overall take on that is kind of what I would say. One of the problems of going to conferences is during the conference you really lose touch. At least I do with the price of things at the market.
Yeah.
Yeah, I'm gonna throw something in. Like, I actually am a terrible trader, and the product that I'm here to pitch so much, like making all these crazy. I know people like it. I'm not good at it.
Yeah.
You know what I mean? Like, I don't follow it enough. I don't, the charts and all of this. So really, like, we were talking about Real Vision, and they have this like a 12-week lead time for the global liquidity. I'm basically on the I make like 2 trades every 4 years. You know what I mean? Like buy when it's low, and then sell when it's like start getting uncomfortable. Like I've tried the others. Don't get me wrong.
Yeah.
All the coins I buy, zero, zero. I've got just a graveyard of coins in my wallet.
Yeah. So you're staying in your lane.
I stay in my lane.
You're doing what works for you. I'm sure that's worked out pretty well, actually.
Well, I mean, we're here working in news. Obviously, we're not good traders, or we'd be doing that.
I wouldn't be here right now.
Yeah, exactly. But I mean, if you're asking like gut check, are you still bullish? Yeah, this just doesn't seem that surprising or dangerous or bad.
Yeah.
So yeah, still bullish.
Still bullish.
Still think we have a long way to go for the this cycle. So
yeah. I mean, if this were, let's say, the top of this cycle, that would be the biggest rug pull. You know what I mean? I'd be like, what? Where do you put my money?
Yeah. So one of our first interviews today was with Aya Kantarovich from August Digital. It's like a prime broker, custodian infrastructure. What they're doing is basically trying to help risk management, like for institutional capital in crypto.
Cool.
One of their clients is some of these DATs, right? Who are trying to do more with the assets under management, right? Especially like not the Bitcoin ones. But anyway, so I asked her like, what's your take? What's your gut check? And I thought it was really interesting. She's like, this cycle, we're still not in euphoria territory. There's still could go much higher. Okay, on her comment on the recent pullback was she thought it can go quite a bit lower.
Okay, yeah.
On this pullback, but that's a good thing. That's just setting us up for further appreciation over the next 6 months.
Yeah.
And her one word of caution, I guess, was that she is concerned because she working with some of these DATs, right? Like she sees what would you call it? The
lack of sophistication.
The renegade ones or the the fly by night DATs.
Yeah, the scammy ones.
The scammy ones, and so she's concerned that basically she said if those ones get too much ahead of their skis, then we could be in trouble. So that's
so she's thinking that someone would just get into crypto, do something maybe not above board, and cause damage to our entire industry.
Radical.
Yeah.
That's so weird.
She's going out on a limb there, but she might be right. I moderated my position about DATs a lot.
Yeah.
And there are a couple big reasons. Number one is if you look at the distribution of how much coins the underlying spot asset that they're holding, it really is kind of like a Pareto distribution where 20% hold 80% of the coins. Okay. And then you have a long tail of just scammy DATs that hold a very small amount of the coin. And if those big holders, those big DATs are professionally run, much less likely to do really, really stupid things, although it could happen. So I do think the DATs are maybe the most concerning thing in crypto right now, but much less so than I thought initially, 2 or 3 months ago.
Yeah.
So I'm not super up on this conversation. What were your biggest concerns?
So I mean, when you see things like was it 3 or 4 months ago when you see Michael Saylor doing presentations like Bitcoin, 21 million supply, target price of 21 million a coin. 21 million, the whole side is 21 million for everything. You're like 21 million. It just that the whiff of scamminess is there, right?
That's
when you see that, right? And he's on a big stage presenting people. Everyone's like, 21 million a coin, 21 million supply. It makes sense. The numbers check out. The math works.
I do feel like though that is the number one way. I'm not really a big go out and talk to people personality kind of thing. But if I were to be and I really wanted followers, you just go out and pump, just tell them their bags are gonna pump. You know, like, oh my God, didn't Arthur Hayes just say like 3.5 million of Bitcoin this cycle or something like that in 3 years? Like, just throw out a big number. I should, 21. What's the high? Should I do, guys? My prediction for Bitcoin, $50 million by tomorrow.
Yeah.
Right.
And then Sailor's like, son of a bitch, tweet that.
Exactly.
He said 50 million. We got to go harder, guys. We got to go harder.
No one's gonna follow me anymore.
210 million.
Yeah.
A coin. 21
Do I
million.
have 211?
It is possible to gain prominence by being a bear, but few and far between.
Yeah, it's a little harder. Yeah.
Especially in crypto.
Yeah.
I mean, it's hard enough in traditional finance.
Yeah.
But in crypto, I feel like you go to a conference as a public bear, you probably get a beating. You get booed.
Yeah.
But anyway, so things like that kind of freaked me out
That's a good reason.
when they first started coming out. But then you talk to people who are more financially sophisticated or in that realm, and they're like, but their financing works well. They know the team knows what it's doing. So Sailor might say some outrageous things, but the people who are structuring all this, at least for strategy, they're probably just like mega nerds who have a price target of like 210,000 or something.
Yeah,
like that,
exactly.
Yeah, and then like speaking with, as I mentioned, Aya Kantarovich earlier today, like, she's on Wall Street or somewhere in New York. They got like rooms full of quantitative analysts.
Quants, yeah.
Right?
That's what the young people call it.
Maybe from Korea.
Yeah, exactly. And they're like risk management to the extreme, right? Like
right.
so.
Yeah.
I find actually risk management to be way more fun than I should.
Okay.
Right? Because like I told you we build like DeFi protocols. One that it's not quite ready to push right now, but we have this one where we built this yield bearing stable coin. It's like, it is what it is. And you've got Athena, and like I'm pretty sure it's not a hot take at this point, right? But like these yield bearing stable coins are really just like net asset value of one investment vehicles with the risk of losing money. Like they're not stable coins, right? And so we built one of these, and we built out this whole risk. So I spent like a year focusing on like risk management and stuff. And at first I was like, oh my God, risk, the one thing in my life like I usually pay no attention to.
Yeah.
And actually it took about a year, and I actually it's fun.
Yeah.
It's more fun than it should be.
So we did an interview, Frederick and I did an interview with this guy who worked on Jane Street for 2 decades.
Thomas
and he got into
of
Jito Foundation. He works for Jito Foundation, but he was at Jane Street before that. And he said that they started looking at crypto in 2017. And my first question was like, so were you like hesitant or taken aback in 2018 when the market fell out of its fell down, and then in 2022? And he was like, honestly, that kind of volatility is exactly what we love.
It's a dream.
He's like prop trading firms, if they're good, they make money on volatility.
Yeah.
And he's like, we don't really care about the price. Like
they just need volatility and liquidity.
Yeah. So I was like, damn.
Yeah.
And so because I bring this up because he was like, it's all about risk management, right? Which is what our specialty is, right?
Right.
If you have volatility and you're really good at risk management, you print money. So.
Yeah.
I do not print money.
Yeah.
I'm very bad at risk management.
And so
my risk management is like risk. Yes.
Yeah. And
yes.
Actually, just before this we got on the air here, I was speaking with a developer of a copy trading app.
Okay.
And just a little stat that very cool app, by the way. Seems like I want to give it a try. I'm not going to name it right now because I can't remember what it was called. But basically, he's like, they've analyzed like 100 million addresses, right? And what percentage of the addresses actually make money?
Less than 0.01.
I couldn't.
Okay, yeah, you're on the right track. I said I think 10% make money, but it's more in
0.0.
order of
My
magnitude.
guess probably would have been closer to 10% because it feels
way.
It feels like everybody's making money.
Yeah.
I mean, everybody's getting insanely rich except me.
Yeah.
It's like it's less than it's less than 0.1% of pump.fun buyers make more than $10.
Wow.
Yeah, like it's just
So yeah, less than a percentage of actively traded EVM or crypto wallets are in profit. So your strategy, Cameron, of making a couple of trades every decade,
Yes.
buy the bottom, try to sell the top. I think that's probably the right strategy for
That
most
works
people.
out, but I actually have one more.
buy low, sell high.
Yes.
strategy.
The old buy low stuff. All right, hear me out.
Yeah, exactly.
What are you gonna do?
But actually, you know what? I do have my own personal risk management. I love the memes. I love the memes, right?
Okay.
Sometimes one will catch my eye, or a friend will recommend it, like, bruh,
Yeah.
this is the hot one right now, right?
Yeah.
Yeezy came out. I was just like, thing is, I have a rule, hard rule, $100 max.
Yeah.
They're all zero now,
Yeah.
but it didn't cost that bad.
Yeah, it's like if you go to the casino, you got to have your rules.
Exactly.
Right?
Exactly.
I wanted to ask you guys, kind of speaking about risk management, something that I've been trying to do with my crypto portfolio, meager though it may be, is do some risk management on it. And one way that I've identified to do that is to diversify into gold. So I'd love to hear your thoughts on
Like
that.
XAUT or whatever it is.
I do. It's not actual gold yet. It's gold on crypto rails.
Yeah.
But
Tether gold.
gold exposure.
Okay.
gold.
Okay.
So yeah, I'd love to hear your guys' thoughts on, like, does that make sense? What do you think?
I just want to pause for a second and just mention, I think we've all now said that none of us are really amazing at trading. I just don't know if I should really be giving those kinds of answers.
Fair enough.
Well,
so Cameron abstains.
Exactly.
No, I
Don't vote for me.
I think it's great. I mean, but here's the conundrum, right? If you have a lot of money, whatever you want to consider a lot of money. I think Jordy Alexander said 10 million is not a lot. But if you have a lot of money, then having a good chunk in gold, I think is important.
Yeah.
But if you don't have a lot of money,
Yeah, it depends where you're at in
right, like
invest and in your life and your
right, like if you have 100, let's just say you have $100 to your name.
Yeah.
Does it really matter? Does it really matter to like hedge your wealth?
Might as
with,
well put it on black.
Yes, exactly. Put it on. Or Bitcoin 5 on.
Or better yet, like buy a course and learn something.
There you go. And I have to say, if I were to do gold, I'd totally do the coins, the real ones. Some of them are really neat, like really fun designs, like little gold meme coins.
The problem with that though is that, like, it depends on the country you're in. So like
pay a premium.
I did research in Japan. They have like special tax rules for gold. So there's a markup, and you have to go to certain areas and stuff. Because I was looking at buying some Japanese gold coins, and then I saw the markup versus the actual price. I was like, I would love to have a couple of Japanese gold coins.
Yeah.
But my but token 5 has got a moon first.
Yeah, I just can't understand. So the question you're asking, like, diversify this or that, like, yeah, if you're managing a lot, you got to diversify and do these things, right? Like all these kinds of things. But I think just crypto's so much more fun. You know what I mean? Like even on-chain gold, like, get some just because it's fun. Because why not? You know, you might get rugged. You know, like, who knows who's managing some of these things. But
Tether's probably pretty safe.
Tether's probably good. Isn't Paxos doing gold too?
Maybe, they're going to be
Pax G or something.
very safe. Yeah.
Like I like these. Dude, I'm big into, like, I think RWA's on chain. Personally, I'm into equities. Like you're seeing now that, like, they're doing startups raising money.
Yeah.
I think it's a little hard. It's a little hard with the here, I'll hold your gold and here's a token that says you have this much. That part's a little hard for me. But the real exciting one is when stocks are natively issued on chain. You're seeing this with Legion. They just did their thing with Van Eck.
Yeah, Galaxy.
And they even got
issued at 5%, I think, on Solana.
Super cool. This kind of thing, like, because when you can take, like, your OpenAI stocks, put them in Aave, borrow to go buy Fartcoin, like, now things start getting interesting, you know?
Yeah.
I think I got a little off topic, but
no, I mean, that's a huge theme, and so far, it has, from what I've heard, the on-chain stocks They launched on a few platforms, and they really
Most of them are not actually on chain
seen.
stocks; they're derivatives. But yeah.
Yes, exactly. You don't get dividends or anything. But anyway, they haven't seen much adoption from what I've
or traffic, right? Like the transaction volume has been very low.
I did have a look at the platform. Forget what it was called, but the problem for me, like I would love to like ape into a bunch like any stock. I'd rather do it in the crypto realm than in like a brokerage account.
Yeah.
But when I went on the platform, they only had like the top 20 stocks. I was going to say coins, but top 20 stocks, and like I was looking for a specific one I was looking for they didn't have. So
but see, also
it's a long way. It's got a long way to go.
But there's a little distinction here, though. For me, it's about the native equity, like on-chain native.
I see.
Because like, dude, who cares? You're like, oh, my stocks are up 8% this year. Like 8%. That's like a day in crypto. You know what I mean? Like up or down, right? But like, so I think these kinds of like more established ones, like I don't see the appeal. Like, why would you go from, whatever, name your meme coin to that, right? But when it's actually just like some startup in Bangladesh or something like that, you're like, that's kind of legit. And then the speculative nature of crypto, it's all, the equity's all there. It's up and down. It's going to go nuts. I think that's where it starts getting exciting.
Yeah, and then as you mentioned, the money building blocks component of it. That's exciting as well.
Yeah, and it's global too. So like you said, it's in Bangladesh and you're Japan, buyer in America. Yeah, it's awesome. Yeah.
Just got to work on those pesky regulations,
Yeah, what was it? For the stock thing, there were like these huge limits too, right? Like, so there are a couple of different platforms, but all of them, one of them I remember was like, you have to be KYC'd.
Yeah.
Okay. And the KYC is a wallet listed KYC. So like, for example, you can't, the stock goes into your wallet, you can't move it out.
Beautiful.
Except to another whitelisted KYC wallet. So like
very
very limited, very limited. And I understand why, like this regulated equity in the U.S. But
I feel like you just got to get more creative. The developers have to get more creative, and like you don't break the law. You just kind of find that gray area where it's kind of okay.
I mean, I said the easy way around this is what you're going to see is someone is going to make a wrapper for that.
Okay.
Right?
Yeah.
Right? So you could take that crypto wallet address and then basically put the wallet, assign it to a smart contract, and then issue a token
there you go.
off of it.
Yeah.
So, I mean, there's like infinite ways around this kind of thing. If it ever gained traction.
Yeah.
Obviously, it'd just be better to release it as a fully free token. But yeah, there'll always be ways in crypto on permissionless chains.
It is kind of impressive how good some of these guys are at just ruining things. You know what I mean? They're just like, okay, so we've got crypto. It's like you can move your money around the world anytime, this and that. They're like, let's ruin it.
Well, yeah, I mean, in that vein, I think the locked token thing is one of the funniest, right?
Which one?
So you there's an ICO or you invest in a startup.
Yes,
right?
yes.
And then you get locked tokens, right?
Yes.
Look, the tokens are locked.
Sure.
Because we want to make sure that people are invested in the system, right?
Absolutely. Long-term beliefs.
There's all these like OTC markets now to sell locked tokens.
Yes.
Right?
Yes.
Like so.
Nature finds a way.
So yeah, exactly. Like all that locked Solana and Hyperliquid. Yeah, those can be sold. Traded and sold before they're unlocked, right?
Yeah, so, like some of half the Solana DATs are just full of locked Solana.
Yeah, exactly. So it is funny. Yeah, nature does find a way, right?
It does. It's like, what are they called? The desire paths. I think now I'm way off topic. You know, like when you're like walking and there's like a corner, and there's grass, and
exactly. And then
it's called like a desire path.
Yeah, and in architecture and urban planning, that's just straight up called bad design. No, I mean seriously, those are perfect examples of it.
Yeah.
Like you see them on universities all the time.
Yeah.
Like a university quad.
Yeah.
Have you been to universities? They have sidewalks on all sides.
Yeah.
And then there are these like deer paths.
Diagonal paths.
Deer paths that's like usually like 6 or 7 of them.
Yeah.
Right? And
I don't want to go that way. I want to go this way.
you got to give people what they want.
I mean, it would have been pretty obvious to figure out how to make that path work. You're just like, okay, that door is over there.
Yeah, yeah.
And there's a lot of classrooms over there, and that's the door for it. So what's the straightest line?
So, and if they don't do it, then you just get these like ugly paths, like these. Anyway, yeah.
Yeah. All right. Definitely on crypto topic there somehow.
Yeah.
Love it.
David, did you add this Bitcoin ossification article?
Yeah. So, you guys, you want to go into that?
Let's go in. This will be our last topic, I think, for the show.
This is an interesting one. Go ahead. So.
Yeah, I mean, you can set it up if you like.
So I haven't been paying really close attention to this, but there's been like a brewing fight in the Bitcoin community. I'm sure you've noticed between the opcode people and what is it, the node?
Yeah, Knox.
Yeah.
Is that Luke Dash Jr.'s? Was that his or his? No.
It could be. It's one. He's involved. I forget which side it is.
Okay. Got it. Sorry. I just love that guy.
So that there was the Knox thing with something. They got up to like 25% of nodes, I think, like running the Knox protocol, which was filter. The idea with Knox was that it would filter out more of the spam.
Yes.
Right?
Okay.
And
the Bitcoin core people were like, no, this is permissionless. You got to accept everything.
Yeah.
You got to be impartial, unbiased. And so you're getting like this renewed fight for kind of Bitcoin's soul, I guess.
Yeah.
Right. Whether
it should be just money, or whether it's all about just whatever people can do with it.
So funny though. I find it so funny where we are now when you look back to the block size
You're
wars.
giving me flashbacks.
But the roles are kind of reversed. Right?
Yeah.
Bitcoin
Really?
Core is now like, no, dude, we're impartial. This is permissionless. You know.
No way.
And the Knox people were like, no, this is supposed to be. This is supposed to be a useful chain. This is supposed to be a useful thing only for money, for exchanging value. All these like JPEGs on Bitcoin are spam and it's not being used how it was designed to be used, kind of thing.
But I mean, can I just throw something out on this? Like, dude, really, I'm getting flashbacks. And just when I heard about this, like someone said covenants or something, I'm like, wait, people are still developing Bitcoin? Like, I thought they stopped like 5 years ago or something. But so doesn't it seem kind of obvious that like Bitcoin is like the main chain, and then you could lock it up somehow and then do things on like a EVM or whatever side chain and then do your DeFi there, but it always settles in Bitcoin? Like, isn't that like an obvious thing?
It exists already.
Stacks or something like that.
There's so many of them.
Many.
Sponsored of our
wonderful, yeah.
of our live stream here. Threshold.
I haven't been following Bitcoin in a while. And
But-
so is this part of it, or is that?
No. This is. I mean, that's related in some way, and it's going to be what we're going to talk about now.
Okay.
So, this kerfuffle kind of has been brewing for the past, I would say, month or so. Really, kind of reaching a crescendo in the past week. And so this article though is from Michael Saylor.
Okay.
And he pretty much is saying, don't change Bitcoin.
Okay.
Changing Bitcoin is bad. Ossification is good.
Okay.
I mean, that's kind of the gist of it, I would say.
Yeah.
And so then to your point, I mean, like, what do you guys think, right? Is ossification is usually said as in a somewhat derogatory way, negative.
Especially in software, yeah.
But here he's like, no, this is good. We don't want to change Bitcoin.
Yeah, I mean, I get it. And as you mentioned just a moment ago, Cameron, you can do the higher speed stuff. You can do all the DeFi with wrapped Bitcoin already.
Yeah.
So you don't need to really change anything on the mainnet Bitcoin with the protocol itself. So, yeah, maybe if it ain't broke, don't fix it. I get that.
Yeah. And I'll even say, I actually like, so everything's cool. All these guys building their little side chains, that's all good, right? This is all perfectly fine. Everyone's happy with that. I think as long as you can do that, I mean, like, I'm not really right to be speaking on Bitcoin because I've been ignoring it for a long time. But I mean, like, I don't think Bitcoin needs JPEGs, right? Like,
But
I don't get it.
I mean, I don't think so either. But it's a permissionless chain, right? Like, isn't that the point? Like, I mean, that's what Bitcoin Core is saying. Is like, wait, hold on a second. You're deciding now what gets on Bitcoin and doesn't. Isn't that the point of Bitcoin? Is that it's permissionless?
Yeah, you're gonna see. I'm gonna stop myself, but I was about to go off on like democracy, and well, actually, I will just very quickly. I mean, like you get to any of these permissionless open networks, and you get to something that's similar to democracy. And in democracy, it's basically ruled by media or whoever has the biggest voice. So I mean, but what all of the chains now mostly have like their benevolent dictator. And when you take that away, like, I guess they're just dealing with very hard questions that are
It's very much political system.
Yeah.
Yeah.
It becomes that. Yeah.
So some chains have their benevolent dictator.
Yeah.
And then some chains just like, I don't know if the devolve is the right word, but they become very complex political systems with competing interests and.
Yeah.
Yeah.
Yeah, it's really scary because it's not that expensive. Like let's just like try to throw numbers on it, just pull something out of thin air, right? Like $10 million budget for some marketing campaign to get everybody in Bitcoin world to believe that this change is good or bad or whatever. It's not that hard or expensive to change opinions.
Yeah.
And then when you got opinions change, then you got this social consensus, and I got to think about it and like.
Yeah. And then to your point, like you got someone like Michael Saylor who has a lot of influence.
Yeah.
And that actually means he has a huge amount of power over Bitcoin.
Yeah.
Right? Because he's constantly in the news talking about Bitcoin. He's a huge holder. Obviously, he's like extremely invested in it. So what he says actually holds
a lot of weight,
and will influence the way Bitcoin evolves.
Yeah.
Having skin in the game, I think, is kind of a good. I feel like it's listen, like you're holding big bags.
He wants the best for Bitcoin.
Yeah.
Well, he wants the best for the number to go up, which it's not 100% clear whether that's best for Bitcoin.
Sure, yeah.
I mean, I personally, I'll just say this. I've been very vocal about this, but I think if Bitcoin ossifies now, I think it will lose its place. I think it doesn't have to be the winner. Like Bitcoin is still worth a tiny amount of money, right? Like,
sure.
And if it ossifies now, I just think there are too many big problems on the horizon, right? Like the security budget. I always talk about that. The goddamn security budget, and then like quantum, right? That's gonna have to be addressed at some point.
Yeah.
Those two things kind of we know are gonna happen.
Yeah.
So one argument I think we talked about before, Graham, that I found really, really compelling was from Jeff Garzik. I interviewed Jeff Garzik at Vegas.
Yeah.
And he said the security budget and quantum he's not worried about at all.
Okay.
At all. He was like, because there's still a decent amount of developers working on Bitcoin.
Okay.
Way less than before, but they're still there. He said what he's really worried about is if Bitcoin continues on this path of ossification, eventually, and you're already seeing this over the past 10 years, those developers go do something else because otherwise they're just kind of like, I don't know, these like custodians like mopping up, doing nothing.
They lose their edge.
And they just go, they do something interesting. He said,
you're a developer, you want to build.
And he said, so let's say security budget gets worked out, quantum gets worked out because there's still a small group of people working on it. But 50 years from now, when it really has ossified and there's no one working on it and some new problem comes up, who's gonna fix it?
Yeah.
And he was like, that's what I worry about. He said that to me is the existential threat for Bitcoin.
Really?
Yeah. Well, there's got to be a way to incentivize people to keep paying attention.
Well, I mean, the answer is you can't let it ossify to that point, right? Like you have to maintain some like ember of development in order to get people to work on it, right?
This guy sounds so bad, and like just before all the comments are going to be calling me an idiot, like this guy, I don't know what I'm talking about. I haven't paid attention to Bitcoin in a very long time. Hearing this conversation coming up, I'm just like, I'm sorry, I thought it ossified a long time ago. Like,
I mean, it has.
What's changing? I just don't know.
Small changes, very small.
Which is, I always thought that was like the promise of Bitcoin. This post like 2018, 2019 or something like this. Just like, slow and steady. We're not doing all this crazy stuff. Like,
Yeah.
yeah, I don't know. I'm just
certainly has ossified. Yeah.
to my view.
It has ossified, but the point is, if it continues on this path, we do know, like I said, that there are things that have to be addressed.
Yeah, really.
Right, like
yeah.
so those have to be taken care of at some point.
Yeah, and right now, I mean, there's this opcode thing, right? So there's a proposal to make some changes, which means it's not ossified completely, right?
Yeah, yeah.
So that's why this debate is coming up.
You know what they could do? They could change the mint cap, mint like 30% to developers, right? Distribute it over a 3-year vesting curve, right?
Heretical. I mean, but honestly, I've talked to some really smart people, and they've said to me straight up, they're like, "Oh yeah, the supply cap's gonna be removed."
I mean,
like,
that concerns me.
100% in the future, it's gonna be removed.
Yeah.
But honestly, I don't know. I mean, how? Anyway, so that
I'm not even gonna touch that conversation.
All right. Well, I think that was pretty interesting debate.
Yeah.
No, it's really neat. I'm learning about this now. It's really neat.
All right. I think let's wrap it up here, guys.
Okay.
So, yeah, Cameron, thanks a lot for joining us.
Thanks for having me.
Yeah,
This is fun.
Yeah, very interesting to hear about what you're up to and
Yeah.
to get your uninformed takes on
Exactly. Let's let this guy that has no idea what we're talking about tell all of our listeners things.
No. It's more like, let's let this guy who has no idea what he's talking about talk with 2 other guys who have no idea what they're talking about.
But let's do it with authority. You know, like
Bitcoin's for the people.
But the people are retarded.
Yeah. All right. You know what? After this, we've got an actual expert.
Yes, we do.
Lovely.
On the live stream. I was going to say on the pod. So I love that so much. But yeah, we got a Hasid Qureshi coming up. So stay tuned for that. We'll be right back.
Looking forward to it.
Nice.
we're giving away free Bitcoin all throughout our live stream conference coverage. First, you need to download the Bitcoin.com wallet app. Throughout the conference coverage, you'll see these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner and scan the large QR code. Swipe to auto-magically send the Bitcoin into your wallet. You need to be ready, be fast, because anyone watching the live stream can get that Bitcoin.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in. Install now for free.
Are you
And we're back. We're here with Brian Meller, who is Chief Financial Officer at Stable. Thanks for joining us, Brian. So let's get started off. For those who may not know, who is Brian Meller, and how did your background in finance and venture capital lead you to crypto?
Sure. Well, thanks for having me. It's fun to get a chance to talk with you guys. But my background in traditional finance, working in venture capital and private equity, was actually a really good segue into working into blockchain. I previously joined Block One in 2018 to lead up their ESVC project. So that was the $1 billion that was earmarked from our token sale to invest in the EOS ecosystem. So I would say a really good interaction in terms of like traditional finance going to blockchain. That was us helping to grow the network and the ecosystem. And then from there, went back after leaving Block One after a few years to work more in the venture capital space, and then got tapped to join the Stable team.
Okay, so
can I ask?
Go ahead. Yeah.
The VC work you did was mostly in back in like Web 2 stuff, or did you also do Web 3 stuff in that VC phase?
At Block One?
No, you said you went after Block One. You went back into focus on more VC stuff.
Yeah, it was a mix. It wasn't heavily crypto based, but it was. We had some good plays. We had some good exits. So I'd say it was a mixed bag.
Okay, so let's get into Stable. You recently joined as the CFO, Chief Financial Officer. So what exactly do you do in that role, and what excites you about Stable?
Sure. I think the really exciting part about joining a startup is that it's all hands on deck. Like while I may have one title, I'm doing a lot of other things. So whether it's building out the team, that's been a core focus of ours, is getting us to scale in terms of players on our team, but also there's a cash management aspect that needs to be done. We had a successful fundraise. You probably saw the news this week about PayPal investing. There's a lot of money that we got to make sure that we're properly investing and putting the right conditions in place. But then in addition to that, we have to look at what our go-to-market strategy is. And I think that is something that sets us apart from a lot of other blockchain plays, that we have a very defined go-to-market strategy in terms of where we want to get our market, what the customers are, and how we're going to deliver that. So it's from all hands on deck to very detailed focus. All right,
sounds familiar, right?
Yeah. Let's back up a minute. What is Stable?
Stable is a layer one blockchain that's focusing on payment rails. It's the most simple way, but we kind of a couple core principles that we're putting in place where we are focusing on USDT and getting that spent across borders and helping to provide liquidity or access to liquidity to those that normally are unbanked. But I would say another focus of ours is that we removed a lot of the complications that exist in blockchain when using stable currency. So our main focus is that we pay your gas fees in USDT, and the complications of having a token that's volatile in gas has been removed. So it's an easy to use stable currency platform.
Is that seamless? Is the gas payment seamless? I mean, do they have? Yeah.
You won't even know.
Yeah, I mean, that's to me a non-starter with like my mom.
Yeah.
She's not using Ethereum to do any transactions.
So the best part about it is, talking about your mom and like the things that she's using, same thing you would use whether in the US using something like Venmo or using FPS in Hong Kong. You want to send an amount of money to someone, you type in that dollar amount or that amount and you do the transaction. Again, another thing we removed is we did the name abstraction. So right now, if you were to tell your mom, hey, here's my wallet address, she probably would say, I'll just write you a check. And she wouldn't really be encouraged to go farther with it. What we've done is we use human readable names, and that's the address. So similar to how some of the other payment platforms do it now, you get to type in the address, that's your identity, and that's where people can find you and reach you and send you currency.
And that's built in at the
in our wallet. In our wallet that we announced the wait list earlier this week. That will launch later this year. But that's our key component. There is how do you make using stable currencies easy and seamless.
All right, and what stage are you at right now? What level of adoption have you seen?
Right, our mainnet's coming, but right now we're currently in a test net that we have a lot of really exciting partners. You can kind of guess who they are, given like who our announcements and our investments are, but they've been working with us one-on-one. Our business development team's been busy getting those partners in line. And right now they're doing a lot of financial sides are testing how it works, building their systems. And then we will be launching our mainnet and our mobile app later this year.
So it's a layer one. Is it EVM compatible? Is it more permission? Is it permissionless? Where does it,
elements.
where does it land on all these various spectrums?
It's a great question because I think a lot of times we focus on just the user aspect where we make it very user-centric. But in addition to that, and this is something that we found to be unique, is that we also made it very developer-centric. So we did EVM compatibility because we knew that would get greater adoption. So it's a great system, it works well, and we want to make sure that we provided a service and a system of tools for the developers that they could use out of the box, have familiar with it, and they don't have to learn a new system to build what they want to build. And then we're permissionless. So if you want to build it, you're welcome to join and build on the chain and get to scale.
All right. And some of the corpo chains that have been launching recently, they've integrated privacy elements to them. Do you have features like that?
Sure. So there's multiple aspects to how Stable is building the stable chain. There, if you want to build a dApp that has certain levels of complexity to it, you're more than willing to do that. That's why we make a great developer suite where you can kind of dive into the tools and see what's there. But yes, we looked at how things want to be built, and we're not there to tell people you must build it exactly this way. So there is flexibility in terms of where they want to go and how they want to build it. But I'd say, kind of to your point on some of the fintech companies building their own, I would say that is that's a box that you have to elect to play in, while you can't really have the full control. We give you that permissionless system that it's safe and it's clear what you're going to be building. So I'd say we took a very unique a very wide approach to how we want to address the overall market.
What would an Ethereum maxi say about stable chain?
Sure. So, I mean, one of the things that we're not issuing a stable token of our own. We are just a payment rail. So if your system is using, if you're on like a mainnet of another blockchain, totally fine. We are just doing the payment settlement on our network. So I would say that someone who's like an Ethereum maxi in that regard would actually like this because they can do what they need to do on the mainnet where they're paying those fees and incurring those costs or those loan transactions. But I'm pretty sure they want to get their money received quickly and without fees. So I think they would be supportive of us because we are using ERC20 based tokens. It is accessible. So I think it helps them build out the dApps that they're trying to build. We just solve the payment component.
I see. Sorry, I'm going to show my ignorance here. So if I have USDT on ETH mainnet, do I have to bridge over to stable? How does?
Yeah, there'll be a bridge.
Yeah.
You have to. There is a little bit of aspect to that. You have to the wallet address on stable if you're trying to send to a stable wallet, but it's a seamless interaction. We've removed a lot of that complexity for you.
Okay. Yeah.
All right. Let's maybe zoom out and talk about the stablecoin market in general. Obviously, it's been the narrative in the last few months is that stablecoins are like crypto's killer use case for this cycle. And, we've got like, I think $230 billion of stable coins on chain. How do you think about the whole stablecoin thesis? Are stable coins gonna like, is that the future of financial rails?
I think obviously stablecoins have been getting a lot of attention. I think that attention is what built up to passing something like the Genius Act. Laws get passed and regulations get put in place because there's success and because there's traction in the market where governments listen to the people of what's necessary, and the government, a good government would serve the people properly. So I think the attention that you're seeing in stablecoins is a return of the attention that they were giving the governments, if that makes sense. Like, it's all in a part of the ecosystem, but I would say that yes, I think there is a fundamental problem with the way that money's been moving previously, where there were limits to getting banked and there were limits to transactions. And there was money that was going to third parties that you didn't even know. So you want to move money through a SWIFT transaction from the US to Korea, for example. And I know this personally from having, we're a sponsor of this event, having to move the money. We're doing an event tonight. And with all those things, payments had to be made. You asked earlier about being a CFO. One of the frustrations I had was wiring money internationally.
Oh my goodness.
And it is surprising to find out the rules in real time. I know how to set the wires. I know how to transact, but different banks, different processes, they want to split payments in half. And I think a frustrating thing that I experienced with actually our photographer for our event, I sent her the sum of money and, very professional business. And unfortunately, we chose on the SWIFT to take on the wire fees. However, there was an intermediary bank that we weren't aware of and she wasn't aware of when it deposited, and she got taken equivalent of 95 US dollars. So the question to her was, well, how do you pay me that back? Well, I can't send her $95 because I'm paying her another $95. Yeah. And it's that compounding, fee. And, the way we're solving is I'm going to see her at the event tonight. I'm going to pay her in local currency. Yeah. So that's a really good example of like why the current rails that we have for payment are broken. And what Stable's trying to do is build that payment chain that allows you to move money seamlessly, cost-free. And I mentioned earlier about how the financial institutions will use our system, but we made with paying gas fees in USDT, but for peer-to-peer transfers on Stable, it's free. So our system and our model and our paymaster we build on Stable in our wallet removes those fees. So in the future, if I wanted to send USDT from me to another event, I can just pay it instantly without having to have a fee.
This USDT is issued on Stable?
No.
Okay.
So it's
all bridged over.
Yep. So we're using a layer 0 component to get that for us.
Gotcha. And is it called USDT 0 then? Or?
Yeah, we're working on the final name.
Yeah. Gotcha.
Could you explain Stable's business model?
Sure. So Stable's business model is pretty simple. We want to make moving money from point A to point B frictionless and free, or low cost. And I would say in order to do that, we had to build not just the rails in terms of like the chain itself and get that up and running, making sure it's fast, sub-second finality, and, paying gas fees in the native currency of USDT. But in addition to that, we're building a wallet, as I mentioned earlier, and that wallet is really what's going to help users embrace USDT or any stable currency they want to pay that's compatible. And part of that is right now, go back to your mom's scenario, where we were talking about how she would never use a system that's going to be more complex. We want to make sure that we are making it addressable. So there are lots of remittance out there that goes between countries, and the exchange rate that they're paying for this remittance is unfair. It is unfair that these people are trying to send money back and it's at a horrible rate. And I think that's where USDT has been huge. Paulo and the team at Tether have pioneered how to build a currency where it gives that financial freedom. And our business model is how to amplify that. So if Tether and Paulo and everyone there built out like an amazing car, we're the highway to make it go faster. We're just supercharging what's already been built.
Okay, so sorry, I just want to dwell on this a little more. So Tether, they make money by throwing their dollar earning yield on the treasuries, right? Like they've got all this tons of like billions of dollars of locked up in treasuries. They're earning yield. That's the main way they make money. So that's their business model, I guess. How could Stable make money?
We are focusing on, in terms of like that revenue aspect, is the partnerships with financial institutions where we are going to be working with them on integrating our system and our chain, and we will then work out how that works out in terms of the long run. But it's again, it's free for like peer-to-peer, and it's free for a financial institution to build on our chain. But if there's certain integrations they want, it's kind of the consulting aspect of it is what we're really focusing on there.
Okay, interesting. So not necessarily like and you won't necessarily be charging like an intermediary fee, more like consulting fees to help people get things set up?
No, so that's what we're working on in terms of like, my day-to-day job you mentioned earlier is where that model looks like. But I would say at our core is the peer-to-peer money transfers for free. So that, again, we're not going to be charging a fee. We're not looking to get involved in that. That peer-to-peer, very different than like when you have peer-to-peer now, in the US using Venmo, where there's middle parties involved. Even though it feels peer-to-peer, there are so many steps in between. Ours is truly peer-to-peer. There's a wallet in the middle. You're sending the money back and forth, and that's it. But in terms of like our revenue generation, we're focused on like the enterprise side of like the integrations and things like that. But we're not going to be a blocker in terms of like putting ourselves in the middle of money flowing freely.
Right. So potentially you accrue just a lot of usage, and you'll figure out ways to monetize that down the road. Growth stage right now.
So just like how we built our wallet, if a company wants to integrate and they need our help building it, we'd be more than happy to work with them to build that type of component.
All right.
How do you think about competition in this this area, right? Like you have like Tempo, and I guess Google is also making a layer one that's focused on financial rails as well.
I would say that if there's competition, it means that there's something that someone's going after.
Yeah.
It's if there wasn't competition, if we were the lone horse in this race, I would be more concerned. I would say that if we're the only ones who are building this and no one else is talking about it, it would be a pretty dead topic. But if you have the likes of Google, as you mentioned, or Stripe, or any of the other, I say that we're in the right market at the right time. I say that we have early mover advantage. Having started this, we're getting ready to launch. Rather than talking about it, we're actually doing it and delivering it. So I would say I welcome other players in the market. As I said earlier, like whether it's USDT or another currency that's equivalent, you can move that on our chain. We're just trying to be that network that's agnostic to who the players are, and we want to just keep the money moving freely.
So it's very USDT focused. What about other stablecoins on stable?
Yeah. So our, I would say the UST focus is obviously we have a great relationship with Tether, and
Right.
Paulo has been very supportive of us. And so our key part is twofold. I would say paying gas in USDT, that's at a core of our product.
Yeah.
And that works. In terms of other tokens, so we have an investment earlier this week that was announced through PayPal and their PYUSD.
Right.
That's equivalent. So you asked earlier about our layer zero. That layer zero allows all those currencies to exist at the same time. So you'll still be paying in certain currencies, but that layer zero allows for interoperability and swaps and everything like that. So I would say we are excited for other people to enter the market because we're just going to be a great network, that highway that everyone's welcome to.
Yeah. All right. So we're here at Korea Blockchain Week. I'd love to get your thoughts on, I mean, you're here in Korea. Why? Like, how do you view the market here in Korea and Asia more broadly?
Sure. I had the pleasure of living in Hong Kong for 4 years prior to moving to Dubai, and I've seen how the crypto market across Asia has grown, getting to go to the conferences, Japan and Korea and Singapore, as well as Hong Kong. And I would say that the excitement in Korea has been notable, as you can hear everyone today. But with that, I would say, in a macroeconomic sense, the retail trading that happens in Korea is a really strong indicator that Korea is hungry to embrace this. Obviously, there's different components that need to catch up to that, but I would say overall, Korea has been a very warm welcome. We have, we know there's a great developer community here. We know that's a great interest. So I'd say Korea is a hot market for everyone right now.
Do you get any pushback or I don't know, questions from institutions in Korea, maybe the government, about a US dollar denominated stablecoin over here? Because I imagine that they're worried.
So from our side, we're just that highway. So because we're not an issuer, because we're not taking on the token, like we're not minting the tokens, I would say that's a conversation that other people have to go through. Whatever exists in terms of stable coins and wanting to be on our network, that's a freedom that we provide. But I wish everyone luck in those conversations. But also I would note Korea does focus on what is best for the people, how to develop the network, how to develop the ecosystem. So I would say that there's a large draw here currently, and that I think that there would be the resounding desire to have something more.
Yeah, I mean, definitely people like Koreans and throughout Southeast Asia, they want US dollar denominated stablecoins, but again, we've talked about this before, and spoke with Arthur Hayes about this at WebEx in Tokyo. Most likely there will be more pushback from governments. I don't know if you saw the Bank of England's proposal to limit the caps on how much an individual can hold stablecoins. So I think you're going to start to see that from, obviously this is not your problem. But yeah, I mean, it's going to be on your radar to some degree, I imagine.
And I would say, like, if something that could be viewed as a problem in terms of like a financial aspect, it means that there's a shift happening, and that disruption needs a response. And you can't really stop something that's moving. You have to embrace it to a degree. I think that's really what the U.S. did, because, you know, as I mentioned earlier, being at Block One in 2018, there was a very different feeling in the U.S. in terms of like cryptocurrency. And, you know, in a paradigm shift that's happened in the past 5 years, now it's the leader putting out the Genius Act. So I would say the impossible is not always really impossible. I think there's a lot of things that people may not see today, but that can change relatively quickly. And then the other part is, I would say, having a stable currency, using the USDT as an example. When you have commerce here in Korea or anywhere else in Asia or anywhere else in the world, that they need to do cross-border transactions that are small denominated. Right now, if you have someone who's making, let's say, small services here in Korea and wants to sell them online, but they have to pay, mention that $95 fee, they most likely aren't. That limits their market. That limits their exposure, their ability to earn and to develop that model that they're trying to make. So I would say it'd be very hard to say we can't embrace a currency or international currency through stablecoins that allow for that expansion of sales and commerce worldwide.
Yeah. All right, let's talk a little bit about your plans. So you've got $28 million in seed funding. Is that right?
Yeah, we raised today.
So how long does that runway last, and what milestones are you looking at, just to ensure that stable isn't just like another short-lived experiment?
So, I mean, I'm in a very comfortable position, you know, having raised $20 million, and it wasn't just, I would say not all money's equal. I would say we have money. We got backed by some like leaders in the space, whether it's Blue Pool Capital, Franklin Templeton, you know, teams at Tether. We've really got to be embraced by like leaders in the space. So I think one, we owe it to those investors to make sure we deliver on time. And I think I mentioned earlier, but we're super excited. Like that runway is going to get us well through our phases of delivering, having our mainnet launch later this year and having our mobile app. We are definitely well positioned to be in a revenue generating sent well before that fundraise, that runway comes to an end.
All right. David, any last questions?
Yeah, I can have a last question. I love that phrase, all money isn't equal. I mean,
yeah,
it is really, really true.
Yeah.
I saw stable, and, you know, I'm in the news, so read a lot of news, and so-and-so raises money. And then I looked at the backers, in your case, and I had this exact same reaction. It's like, oh, okay.
Yeah.
You got to take these people very seriously because of who is backing them. Yeah. So in that respect.
And we love our investors. I think that's the fun part is they're not just writing checks and hoping for something great. Having been in the venture capital side for the past 15 years myself, is that I know that I was always very passionate about who I invested in. I wanted to see success. And I think that's a motivator from having really good backers, is that they're just not writing us a check. They're making the connections. They're helping us with the plans. They want to see where they can take us to the next step. So I would say it's not like a spray and play method for them. They're really looking to get us to success. And I think, you know, tantamount to like we had announced that Q4 was going to be our launch for all these things. And, you know, I wouldn't be as casual right now at a big conference sitting down if I knew we weren't going to meet those deadlines. So I think that's kind of the nice, you know, we scaled our team, we got everything going, and I think we are excited for it's one of the first times that like the year end is actually an exciting point for me, because I get to have all these things launch and be part of a great team.
Yeah. All right. So I just had one last question. To me, this is just my interpretation. Feel free to tell me that I'm wrong, but it feels like this conference is your coming out party in a kind of a way, because I do the conference routes. I've been to all the major conferences this year. Obviously, you haven't been present, but you're here. Is that right? Am I getting that? Am I reading that correctly?
So we looked at the the timeline of conferences over the years. We reviewed that calendar and we identified Korea Blockchain Week as like where we wanted to be. So we put the effort in. Our marketing team was working tirelessly, getting our stage done, getting our booth done, setting up the meetings. And, that was a lot of effort. We want to make sure that we did 110%. We weren't looking to be at a lot of places and running around before we had something like concrete. So a nice thing we timed with this event was that we had our mobile app waitlist launch this week. So, thousands of subscribers already on the wait list, and that's just really well timed for us. We also timing with the PayPal announcement this week, we've had a very busy week. We didn't just like rest on one laurel of having sponsoring a conference. We really dovetailed it with a lot of things that were coming out this week, and I think you'll be excited to watch, or everyone here will be excited to watch over the next few weeks. We have more things trickling out, but again, I think our immersion from like not stealth, because we had an announcement of our fundraise previously, was we were really focused on making sure we're hitting those deadlines. So that runway is a nice question in my seat where I don't have to worry about the runway. I know that we are well backed, well through the time that we need to build and getting to a state of like direct revenue.
It's always nice when all that planning kind of materializes, right? Like that.
It's been a journey.
Yeah, very cool.
All right, thank you, Brian. As we wrap up, is there anything you'd like to let people know, or where can people find more info about Stable?
Sure. We're easy accessible, stable.xyz, but also check us out on the socials, easy to find. Twitter has a great list of you can go on Twitter and see our mobile web app wait list and get there for the updates. And, we really built that in where it's not just a regular email sign up. It is creating all the back end for you for when the mobile app launches. We'll be ready to go and get in there and start transacting in USDT day one.
Okay, great. Thank you so much. Brian Meller, Chief Financial Officer of Stable. And we're back. We're live at Korea Blockchain Week. I'm your host, Graham Stone, here with David Sensel, and we're very excited to have Hasib Qureshi back.
Thanks for having me.
Hasib is the managing partner at Dragonfly Capital, which is a crypto-focused venture capital firm. Welcome back, sir.
Thanks for having me.
Doing this
Good
again.
to be here.
Yeah, it's good to see you.
Yeah, that's why I saw you guys in Japan. Here we are in Seoul.
I know.
Yeah. Token, you want to talk Token next?
Token is next. Yes. The tour does not end. It's kind of this. It's like the grand tour at the end of every summer, where like people do Korea Blockchain Week, then they do Singapore, and like all of Asia just like is on this caravan, going around from conference to conference. So it's an experience.
Yeah, for sure.
You're staying in this time zone though, right? So by then,
close enough. Yeah,
jet lag
1 hour
right?
difference.
Yeah.
But I just came from the States like a couple days ago, so I'm jet lagged as hell. But but by next week I'll be fully active.
Fresh as a daisy.
Yeah, close enough.
All right. Well, you look okay, and I'm sure you're going to have sharp takes as usual. Let's start off with, I want to hear more. Last time we were talking about the latest stuff in crypto, but I'd love to hear more about Dragonfly Capital. Broadly, could you start off like with your general thesis behind the firm?
Yeah. So we've been around since 2018. We manage about $4 billion AUM. We invest early stage into everything in crypto. So layer ones, layer twos, DeFi, CeFi, infrastructure, whatever. If it's crypto, we touch it in some way or shape or form. Our thesis, by and large, so one thing about us is pretty different from a lot of the other venture firms, is that we're very global. So we actually have an office in Singapore. I spend a lot of my time in Singapore, as well as an office in New York City. So we have this kind of East meets West global perspective on what's going on in crypto. And I think if you look at the stablecoin story, it's very obvious that most of the stablecoin adoption is outside the US, even if it's US dollars that are being distributed. So having that global perspective really helps us in identifying a lot of the trends very early on, and also understanding the demand side, not just the supply side of what's going on in the crypto economy. So that's a big part of, I think, what makes us different. Just a thesis, I don't know that I'm going to tell you anything all that unique. I tend to believe actually that being thesis driven in crypto is kind of a mistake, in the sense that you want to be very responsive and quick on your feet, right? There was a moment in time when everybody thought like, oh my God, play to earn is a thing, GameFi is gonna be huge. And then within a year and a half, it's like, wait, never mind. We never said that.
Fat protocol thesis.
Well, you also had all this stuff going on with like BRC20s on Bitcoin. Then that went away pretty quick. And then you've got, all these micro cycles that happen in crypto. And if you're too thesis driven, you're going to be like stuck on a thesis and not be able to change your mind and respond to the way crypto's changing. Like, I have never seen any industry move as fast as the crypto industry moves with respect to this is the thing, this is not the thing, within 3-4 months. So that is a big reason why I think the job of a crypto investor is to be responsive to reality, right? What I often tell our team is that our job is to change our minds as quickly as possible. And that's how I think how you stay ahead of the curve and don't end up getting mired in being attached to something that you believe was true after it's already been invalidated.
Does your team have geographic focuses, or is everybody looking at projects all over the globe?
A little bit of both. So we have people who are in Asia domiciled just there, just to particularly focus on Asian deals. We have folks in the US. Obviously, if you're in the US, you're probably going to be the first port of call for some founder who's in the US. But we pretty much cover the globe. We've invested in companies in Israel, in Western Europe, in Eastern Europe, and in different sectors in Asia. We've invested in a deal in Africa. So we cover the globe. But the reality is that the Anglophone market, like if you speak English, it's kind of all one market. And so I think it's really more about language regions than it is about physical geography. Because the reality is that all of crypto lives on Twitter, and that's true even for Japanese crypto. It's true in large part for Korean crypto, that a lot of it also lives on Twitter. And so if you're on Twitter, you're hearing from those people one way or another, right? And we live online more or less, more than we live in our particular regions. So crypto's always kind of been that way. It's not like traditional venture in that respect, where it's like, oh, you're a New York VC, you're going to see the New York deals. If you're a Bay Area VC, you're going to see the Bay Area deals. Crypto doesn't really work that way. So, I'm competing with 1KX in Europe, I'm competing with Hashkey in Singapore, and I'm competing with A16Z in New York City. So it's all kind of one big market.
Right. Now, besides investing in projects, do you provide any support or mentoring for them? Is there any element of the accelerator model with Dragonfly?
So we're very known for our portfolio support because we back projects very early. So a lot of the stuff every VC will do for you. So things like we'll make relationships, we'll do intros, we'll find you clients, we'll connect you with market makers or auditors or this or that or blah, blah, blah. So there's kind of table stakes stuff that every VC will do. And then there's the stuff that only certain VCs will do if they really have the platform to be able to accommodate that. So things like we give you dedicated support on hiring. We have a lot of special relationships with exchanges, with brokerages, with all this other stuff that can't necessarily be, you can't necessarily get from any VC. And then we've got the things that we do of just as a partner, sitting down with the founder, helping you think through strategy, through positioning, through go-to-market, which are the really big questions that end up influencing the outcome for a startup of, did you make the right decision in this fundamental question at the core of your business? That's a lot of why people ultimately choose us, is not because of the services, but because of the strategy and the advisory relationship. So that's, when you talk about winning a deal, if it's like me against Paradigm, me against A16Z, me against Polychain, a lot of the reason why I win that deal is not the services. It's like who I am when I come into a deal versus Chris Dixon, versus Matt Huang, versus whoever else is going to sit down with you and help you think through the core decisions of building your company.
Interesting. Do you have any advice for founders who are looking at taking on venture capital or perhaps getting into some kind of accelerator program?
Any advice? I mean, every VC is in the business of branding their money. In reality, all money is green, right? No money doesn't land in your bank account and pay payroll. So the job of VC is to make you believe that their money is special. And the way in which you do that is different for every person, right? But a lot of strategic investors, what they will do is they will staple commodified services to their investment, right? So what I mean by that is, let's say you're getting money from an auditor or from a market maker, and they'll say, great, I'll give you a discount on my services alongside my investment, right? The reason why I think this is not the kind of capital you want most of the time, I mean, if that's all the capital you can get, to be clear, get the capital you can get. But this kind of stuff is, the way I describe it to founders, it's things that money can buy, right? You can buy auditing services. You can buy market making services. Even if they don't invest in you, you just pay the money and they'll do it, right? The most valuable money you can get is the things that money can't buy. You cannot buy the relationships that a Dragonfly or an A16Z or a Paradigm can get you. You cannot buy the credibility that they can buy you, right? The doors that get opened on their own from having that kind of investment. That's what you ultimately want as a founder. And for a lot of that stuff that you get, it's actually worth money. And so it's part of the reason why when you're raising a round, if you're a very competitive round, like let's say you're I don't know, you're an Athena or an Agora or one of these deals that everybody wants a piece of, right? Almost always when they go with a top tier VC, the top tier VC did not offer them the highest valuation, right? Almost always somebody else offered them a higher valuation, but that higher valuation is pure money, right? It's just green money in your bank account. You can use to pay payroll. But a lot of the problems that you need to solve as a startup actually do not get solved with money. And you see it when you have these companies that raise shitloads of money and they crash and burn and they never go anywhere, right? Everybody in crypto has seen it 1,000 times.
Yeah.
It's because a lot of problems money can't solve. It is a beautiful thing when you're a founder and you have a problem and the solution to it is just money, right? That's actually a great position to be in. Most of the problems you'll have as a founder, money is not the solution to your problems. That's where having a really valuable VC can grease the wheels.
Yeah, that reminds me, like I was talking with Brian Miller of Stable yesterday, and he basically said the same thing. He's like, yeah, we got 28 million in startup money. He said that's not what I liked about it. It was from Tether.
Right.
It was from
Exactly.
from these people. And it was like
Exactly.
that was the valuable thing.
That's right.
Not the money. So again, echoing exactly
That's
that.
right. That's right. It's really surprising again and again. People see it over and over again of how low ROI marginal capital is in crypto, where like some project raises $100 million and you're like, great, what did you do with it? And they're like, I don't know. We threw it at random people and we sponsored conference. Very great ROI at sponsored conferences, obviously, as we can see here. But so like they don't know what to do with the money because they raise all this capital. There's all this excitement, but there's no amount of money that can get you a strategic partnership with Tether.
Yeah, exactly.
Right? You cannot buy that. There's no price tag for it.
And to the point, like when we got, I was looking at who to interview.
Yeah.
And I was like, oh, okay, Stable. Haven't really heard of them. Oh yeah, they raised some money. And then I looked at who, and I was like, ooh, definitely want to talk to them.
That's right.
Because it is almost, it shows you that they're serious.
Yeah.
And it's serious people.
Serious people back then.
That's right.
Yeah.
That's right. That's right.
So it worked on me, right? Like just like going through lists.
Yeah.
Stuff like that.
Yeah. Makes sense.
I'd like to dig into one of your recent investments, which is Inversion. Would you be able to summarize what that is and why you, Dragonfly, invested in Inversion?
Yeah, happy to. So we've long had this thing in crypto where we all believe that if a traditional business integrates crypto, that's really bullish and it's good for that business, right? We all kind of believe this. So when we see, Nubank integrated USDC, we're like, yeah, awesome, Nubank, you're going to crush it. And the reason why we believe this is we believe that there is low-hanging fruit that businesses have yet to actually capitalize on to integrate crypto into their business, especially around financial services, right? So Inversion is like, okay, if you believe that, if you really believe that, then you should also believe that it's possible to go take a traditional business and cryptoize it and create value for shareholders, right? If you believe that, you should also believe that. And I believe it. Many people in crypto believe it, but nobody's actually done it. We've all been sitting around waiting for these companies to like realize what we're doing and adopt this technology, right? And so Santi, the founder of Inversion, was basically like, you know what, fuck it. I'm just going to go do it. I'm going to go acquire one of these businesses, PE style, and cryptoize it from the inside. If the leadership at these businesses doesn't get it, then the right solution in capitalism is for somebody to go raise the money using token style capital formation tactics to raise the money, go acquire real world business, and shove crypto inside of it to improve their bottom line. It's a crazy idea. It's an absolutely bonkers idea, but it's a huge idea if it works, right? And so it's one of these things that if you understand the core argument, you realize like, yes, that should exist. There should be private equity. There should be like a Berkshire Hathaway for crypto. There should be activist investors who are putting crypto into businesses the way that people are now starting to do this with AI, right? So you heard stories about like General Atlantic and Khosla, or not Khosla, I think it was GC, going out and acquiring traditional businesses, rolling them up PE style, and just shoving AI into them to massively improve their margins, right? The same thing should be possible for financial services companies in stablecoins and stablecoin finance, but we shouldn't have to wait around for it to happen. If it's true, it should be possible to do it in a crypto native way. That's Inversion.
I think you just hinted at one of the use cases, but I'd love to hear an example of like what the ideal company that you could take over and cryptoize. Like,
yeah.
To help people
So,
understand.
It's right now. It's not clear what the first target for inversion is going to be, but a lot of the initial conversation has been around telcos in Latin America. So the telcos in Latin America, they have a huge number of users, and you have many of these telcos. They have the ability to enter into financial services for their customers via like SMS banking, but very underutilized. And of course, in a lot of these countries, very high inflation, and a lot of demand for dollars, right? A lot of remittances, and like, Mexico, US is one of the largest remittance corridors in the world. So if you can just take one of these Mexican telcos that has huge amount of distribution, shove USDC in there, allow them to have, basically mobile banking directly in USDC, allow them to get yield on the blockchain, flip some percentage points on what they're doing. And even maybe if you're a telco, you can even think about taking something like DPIN, something like Helium, to actually improve the bottom line and some of the offload that they're managing. All of a sudden, you can massively improve the margins on these businesses and make them extremely competitive relative to some of the newer fintechs like Nubank that see the exact same thing and are doing it. So Nubank, their USDC product, Nubank is a big challenger bank in LATAM, huge business. They're already using USDC banking. It's an enormous product, but all the incumbents are just sitting around twiddling their thumbs. They do not understand the space. They're all run by these old Mexican families, and they're just like waiting to get disrupted. And so the way you solve that problem is that you go in and you do the disrupting, and you own it end to end, right? That's the idea.
So seems like it could work, right?
Yes.
Now,
it totally could work. It totally could work.
But also,
yeah, go ahead.
I would say it also makes sense though. Like, why would these telcos necessarily want to do it by themselves, right? Like, better to almost have someone come in and do it for them that has expertise and connections within the space.
Yeah.
So even from that angle, it makes sense.
They just don't get it. I mean, look, these are old school businesses that are very risk averse.
Yeah.
Right? Like, they don't even understand what's going on with AI, to say nothing of crypto. Crypto is even farther afield than AI is. So I think if you believe in the underlying story, this will eventually happen. Private equity with crypto, like the two will get married at some point. The question is who's going to do it.
Yeah.
And the initial private equity firms were built on this idea that there's a generational change that's happening in the ability to make companies more efficient through digital transformations, right? That was like basically, the internet, telecommunications technology, fax machines, all this stuff. These were all big trends that required capital to organize, come in, and make businesses more efficient through raw force of will.
Now, let's say it works and Inversion starts acquiring some of these companies. They start using crypto rails to improve their business. Is there a world that actually provides a tailwind for growth of the crypto economy in general?
Because the whole idea is that these people were not on chain. These are real users who have real problems, who are not on chain today. And if inversion works, they will all come on chain. And once they come on chain, they're now part of the GDP of blockchains, right? So like all the yield products that we have, well, great, your addressable market just increased, right? All the other shit that you want people to do to come on chain and buy meme coins or NFTs or whatever, the addressable market just expanded, right? You do this in more and more countries. What you're doing is you're increasing the connective tissue between the old world and the new world, right? And that is a big part of the reason why, whether or not you think that the economics of inversion are attractive, the flow-through effects to the rest of crypto are going to be massive if it works. That's a big part of the reason why, just as crypto investors, we want this to be true, to say nothing of the economic upside.
Yeah. Yeah, I mean, and also like just getting people to get a coin, a crypto token is so hard.
That's right.
I mean, that is like my anecdotal experience. That's the hardest thing.
Yeah.
And then once they've gotten anything, then it's just easy to go and do whatever you want.
That's right. That's right. Totally.
All right. So I wanted to ask about Dragonfly's Bitcoin-related investments, if there are any, and if there aren't any, why not?
Yeah. So we haven't done a ton that's like Bitcoin specific or Bitcoin only. Obviously, we're investors in many exchanges. So like investors into Bybit, we're investors into BitGet. We've done many exchanges over the years that trade Bitcoin, but I don't think we've done any investments that are Bitcoin only to the exclusion of everything else. I think that's largely just a function of the fact that the market out there is just really, really big. Bitcoin obviously is extremely important, but the most important Bitcoin businesses have largely already been built. right? Bitcoin is sort of a perfect product. It's awesome. It's exactly what it needs to be. But the rest of the investable universe, like the rest of the universe of products, whether it's on-chain yield or stable coins or these emerging market fintechs that offer yield to their customers and blah blah blah, all this kind of stuff. Although Bitcoin is usually a component, where it's like, hey, you're building something in LATAM, you're building something in Africa, you're building something over here, you can use it to buy Bitcoin, but also you can use it to get stablecoin yields. You can use it to go into DeFi and do this and that and blah, blah, blah. The picture is just really big. And I think the universe in which there's like Bitcoin stuff over here and everything else over here, I think that picture is really eroding. And really, it's all part of a continuum. Bitcoin is there if you want the digital gold. And if you want other financial assets, like, well, yeah, people own gold. They also own a lot of other stuff. So that's our mental model. And so I think there are, of course, some investors that are only specifically looking at the Bitcoin universe or things that are specifically Bitcoin only. And that's not the philosophy with which we look at the space.
What are your thoughts on like Bitcoin L2s and sidechains and things of that nature?
So I've been pretty bearish on Bitcoin L2s and Bitcoin sidechains. I think the reality is that most Bitcoin holders, they see their Bitcoin in a very specific way, which is that this is my long-term hold, don't touch, hold this forever, and like never look at it, right? It's just like, I put it away in a vault and I close my eyes. And when you're looking at what do you want to be trading every single day, putting into assets, locking up, blah, 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 the reality is that most people, for a lot of that, it's really more stable coins than it is like fluctuating assets. And we've learned that increasingly over time, whether it's on Ethereum or on Solana or on any of these other chains, it's largely stable coins that are winning the day and that are getting the most mind share. And so I think the reality is that Bitcoin itself is not really designed for this. And trying to jerry-rig these like side structures that are, there are 20 of them all competing with each other and nobody has a clear lead. It's just not the kind of cultural setup for there to be a clear breakaway winner, a great UX, a great developer community. Like all those things are the sort of prerequisites that you need for one to emerge as being ascendant. And instead what you see is this kind of Game of Thrones where they're all fighting each other and they're all like kind of stabbing each other in the face. And whereas in the Ethereum world, the Solana world, the avalanches, etc., there's just a lot more consolidation. And you need that consolidation for developer mindshare, ecosystem, and the developer tooling for all that to coalesce into one place, make it easier for founders to build.
So if that were to happen, this Game of Thrones thing were to end, there was a red wedding, and there's one L2 or sidechain standing alone, then you would become more interested, maybe?
I think it makes it a lot more viable. It makes it a lot more viable. But fragmentation is the death of blockchains. It's like you got Bitcoin, then there's all the Bitcoin forks. And all the Bitcoin forks are there. It's like, it's exactly that, right? They're all just Game of Thrones fighting each other to matter. And you really want to be Bitcoin. You want to be sitting above the fray, never worrying about, who's fighting who. If you're one of the clones, and you're fighting to be the number one, it's fucking brutal.
Yeah.
All right, let's switch gears a little bit. We're at Korea Blockchain Week. We're here in Asia. We met a few weeks ago or a month ago in Tokyo at WebEx, right. And I think perhaps inspired by your visit to Japan. I believe that was your first.
Not my first time, but my first conference. First conference in Japan.
So you shortly after that posted on X kind of a thesis or thoughts about you're bullish on Japan as an ecosystem.
Sleeping giant, I believe you called it.
Sleeping giant.
Sleeping giant. That's right.
Yeah, I'd love for you to if you can explain that thesis
about Japan.
Yeah.
So it was my first conference in Japan. Japan is interesting relative to Korea because Japan's a lot bigger than Korea. It's got like 3 times the population. It's got significantly larger GDP, but it is much smaller in terms of its footprint in the crypto industry. And we all know that intuitively. Is that Korea, it's up-it listing, this thing popped like crazy, blah, blah, blah. Japan, nobody ever talks about Japan listings, right? And it's also well known that Japan, something like 3 to 4% of Japanese citizenry trades crypto. Korea is one of the highest in the world. It's like 20-25% of adults trade crypto, right? Actively trade, which is insane, right? So that's a big part of the reason why Korea has such an outsized footprint relative to Japan. Now, part of the reason for that is that Korea has a law that makes crypto trading tax-free. And that law has had an expiration date that it expires like at the end of the year, and every year the politicians push that back again and again.
I didn't know that.
Because it's so unpopular to have that tax law go into effect that basically people are like, yeah, it's never gonna happen. Because like there'll just be a revolt in Korea.
I didn't know that last piece.
That's right. That's
Okay.
right.
I actually spoke with someone a few minutes before this who said exactly the same thing.
That's right. That's right.
Here.
So it will be.
They're going to
feel confident that it's
Everybody, well, I don't know, but
political
Koreans
suicide.
know.
Okay.
Yeah, it's
Actually
political
go-
suicide.
go ahead.
So if you remember, back in 2017, Korea tried to ban ICOs, right? And Korea, of course, at that time, kimchi premium, all that stuff was very, very bullish on ICOs. So Korea tried to ban ICOs, and there was a fucking revolt, right? Like the politicians got recalled. It was like craziness, and people were like, "I'm sorry, never mind.
That's awesome.
ICOs are okay." And so ever since then, Korean politicians have learned: do not touch crypto. If you know it's good for you, do not touch crypto. So every Korean politician pays lip service to crypto and the crypto traders, and so they don't ban ICOs. They are very they're very cautious about this tax law. It never goes into effect. Keeps getting rolled back. Now Japan, on the other hand, has a very punitive tax law for crypto.
Terrible.
Right. So crypto is taxed on unrealized. It used to be taxed on unrealized gains, meaning that if you hodl your Bitcoin, every year you owe taxes on your Bitcoin, even if you never sell, which is crazy. They recently fixed that, but up until like 2023, I think, that law was in effect. Now, still, the tax law in crypto is very high, much higher than for stocks, the marginal tax rate on crypto. And so as a result, there's not a lot of demand to trade crypto. But not just that, there's also a lot more social stability, I think, in Japan that gives people less incentive to YOLO and trade crazy coins. So in Japan, youth unemployment's a lot stronger. There's a lot more confidence in government. There's a lot more social trust and social cohesion. There's a lot more stable government. Korea has a lot more issues in those regards.
I mean, if you've been watching the Korean news, or
That's right.
if you have, like Korean coworkers, I hear stuff like, "Oh yeah, there's another coup happening." Like,
yeah, exactly. Like just recently, the president declared martial law. Then was voted out of office, and then thrown into jail. And
exactly.
It's just like extremely volatile environment relative to Japan, right? And so that I think results in a very different attitude among young people, which is a big part of the reason why you see such high penetration of crypto trading, right? In a way, I think it is tied to a lot of frustration, right? So a lot of the people talk about in the U.S. this cultural nihilism. I think it's much more relevant in Korea than it is in Japan. I think in Japan, actually, young people feel pretty good. Young people feel a lot of confidence that they're going to have a job, they're going to have a career, they're going to be taken care of. Social safety net's going to be stable. Government's going to be there for them. That, I think, results in less YOLOing into assets. And so I think that is also part of the difference of why Korea is so active in crypto relative to Japan.
But you said that you think there's a bright future for crypto in Japan, though.
Yeah.
Moving forward.
I think it's because the politicians now realize that there's stuff that needs to change. So there's a lot more willingness to loosen some of the regulations, to change the tax law, to make it more in line with equities, and just more increasing government acceptance, right? So Japan very much takes its cues from the US. Seeing the US become very softened on crypto, I think Japan is trying to play catch up. So I got that sense very much in Japan. I'm sure you guys got that sense as well, is that things are changing on the ground. Japan has been very pushed by the companies and the conglomerates ahead of retail. In Korea, it's the opposite. Korea, retail out in front, right? Retail is driving. And although a lot of the companies, you see Kakao, of course, with Clayton. You see Hanwha and SK, they've been investors into some of the stuff in crypto, but it's not as embraced at a corporate level as you see in Japan. So it's there though. Korea is definitely very, very friendly environment. And I think I expect that to increase in the coming years as well.
So basically for Japan, you're saying that it's been pushed down for so long, and that means that there's a lot of room to grow.
That's right.
So that's why you're in general bullish on it.
That's right. Trend lines are all in the right direction.
Ball underwater.
Ball underwater, right?
Yeah.
Care to speculate on as to how one might express that view? Is it are
you asking me to give investment advice?
Is it like buy Japanese conglomerates that are moving into crypto?
Japanese projects or something like that? No, you don't. You don't
okay,
have names, but I'm just in terms of how, like for me, for example, I live in Japan.
Okay. Oh, you live in Japan?
Yeah, yeah. I
did not know this.
We both live in Tokyo. Oh, sorry, I live in Tokyo. He lives in Okinawa. So
No idea.
Yeah.
Okay, wait. So I'm speaking to the choir. You guys already know this.
Yeah. Well, I mean,
I should be asking you guys about what's going on in Japan. What the hell?
no. But so I'm not. My job is not to be like a VC or
Okay.
So I want just general framework advice for what should I be looking for to find and express like my bullishness on crypto in Japan.
Well, look, I'm certainly not going to name specific companies.
I don't want you.
Buying in
I don't want
Japan,
you. I don't want.
because I don't know the first damn thing.
Yeah.
But I would say
Are there like themes though that you think would be powerful?
Are there themes? Look, I do think that if you look at like what Sony did with Sonium, I think it's very clear that Japanese companies are going to be doing more. And I think the floodgates have opened with Sony getting into the game. That probably you're going to see more of that. Now, what is the level of success going to be? I think Japanese companies, unfortunately, they have very limited risk appetite. Right? You saw with Sonium. Sony was really playing it safe.
Yeah.
What they were doing with Sonium. I think that was a mistake. I think when you do crypto, you kind of got to go balls to the wall. Like you look at Stripe, right? Stripe with what they're doing with Tempo. That's exactly the kind of energy you need to bring if you want to be competitive in crypto. I think it's going to be hard for Japan to do that. But overall, I mean, look, I'm going to give a very lame answer, which is that at the end of the day, if Japanese tax law changes and the attitude of Japanese companies improves, they're going to own the same shit that we own. So I think the answer is just own crypto and you'll do fine.
So Japan coming online is just going to like boost the broader crypto market because
that's right.
A whole new boatload of people getting into the assets we already own.
That's right.
And also maybe just thinking out loud here, but you can kind of do the copy trade version where you can look at like successful businesses in maybe Korea or.
All right, this is you giving investment advice. I did not say that. This is your
no. I'm just thinking out loud.
Yeah.
But again, I'm trying to look at where to anyway.
Yeah. All right. Are you pair trading Korea?
No.
Crypto companies?
Nothing like that.
I think he is.
I'm not.
Okay.
Yeah. I mean, I've been bullish on Japan for a while, and I'd like to put my money where my mouth is. So.
Yeah. That's smart.
But I'm a terrible investor. So.
Well, look,
there's also that going.
Long Japan is great. I love Japan. I think I'd probably live there more than I would maybe invest there. But that being said, I'm obviously not a public markets investor, so not my game.
Yeah. No, I hear you.
Yeah. All right. I think that pretty much wraps it up. David, do you have any last questions?
No. I think,
No.
It's gonna be a little bit everywhere.
I don't know. What's your thoughts? Okay. Well, thank you for having me.
Thank you so much, Hasid Qureshi.
Absolutely.
Dragonfly Capital.
Thank you.
We'll be right back with our next interview, which is going to be Tristan Thompson, the NBA player who's branching out into crypto. Excited to hear what he has to say.
Right. He's slightly taller than me.
A man of short stature, I've heard.
Okay. Okay, so got the golden ticket right here. All you have to do is scan this. Make sure you've got the Bitcoin.com wallet installed. Scan this QR code right here. You're going to get $100 in Bitcoin instantly in your Bitcoin.com wallet. Are you zoomed in on that? Scan that QR code. The first person to scan the code is going to get $100
within the app
in Bitcoin. You got to scan the code from the QR code scanner within the Bitcoin.com wallet app. First come, first serve, $100 in Bitcoin.
We're giving away free Bitcoin all throughout our live stream conference coverage. First, you need to download the Bitcoin.com wallet app. Throughout the conference coverage, you'll see these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner and scan the large QR code. Swipe to auto-magically send the Bitcoin into your wallet. You need to be ready, be fast, because anyone watching the live stream can get that Bitcoin.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in. Install now for free.
Are you a Bitcoin holder ready to explore the world of decentralized finance? With TBTC, you can lend, borrow, provide liquidity, and engage in a wide range of DeFi activities, all securely and free from centralized control. Unlike options like WBTC, where Bitcoin is held by centralized custodians, TBTC is secured by a network of independent nodes, ensuring that no single entity ever has control over your assets. TBTC empowers you to seamlessly integrate your Bitcoin into the DeFi ecosystem, unlocking the vast potential of smart contracts and dApps while maintaining the security of your Bitcoin. Fully backed one-to-one with Bitcoin reserves and protected by a decentralized network of nodes, TBTC ensures that you can always reclaim your Bitcoin or swap your TBTC without relying on intermediaries. As the blockchain space continues to evolve, TBTC on the Threshold network offers you the confidence to put your Bitcoin to work, knowing your assets are secured by a decentralized network, not by a central authority.
What if you got pages for exploring crypto? Read news, check prices, discover new projects, and stack rewards along the way. Over $1 million in rewards paid out so far, and we're just getting started. Download the Bitcoin.com wallet today. The wallet that pays you.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, if, void, country, engine, complex, new, fate, purpose.
Do you think your crypto is private? Think again. On Bitcoin, Ethereum, and most major blockchains, every transaction you make is public, traceable by anyone, anywhere. What you send, who you send it to, when you send it, how much you hold. All visible, forever. That's not just transparency, it's surveillance. confidential assets on the Zano blockchain changed the game. Built for privacy from the ground up, Zano's system extends its powerful protections like untraceability, unlinkability, and amount concealment to any token. This opens the door to fully private financial tools. Imagine a USD stablecoin, but shielded. Imagine Bitcoin wrapped and transacted anonymously. Imagine enterprise tokens that move without exposing sensitive details. Confidential assets make all of this possible. And now, with the Bitcoin.com wallet, you can hold, send, receive, and swap Zano's confidential assets, all inside a single, easy-to-use, self-custodial app. Privacy isn't just an add-on, it's the future. Update your Bitcoin.com wallet today and step into the next era of private crypto.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in. Install now for free.
In this video, you're going to learn how to mint TBTC on the Ethereum network using the Bitcoin.com wallet. So first, you'll need to make sure that you have at least 0.01 Bitcoin in your wallet and some Ethereum to cover the gas fee. Once you meet the requirements, you're going to head over to the Web3 Explorer on the wallet. On the search bar, you're going to type in dashboard.threshold.network. Next, you're going to scroll down and hit Mint TBTC and connect your Ethereum wallet. Find the Bitcoin.com wallet and then press connect. And once again, make sure the connected wallet has some Ethereum to cover gas fees. Under the BTC return address, you're going to remove the Bitcoin colon, and this address will be the same address that is funded with at least 0.01 BTC. Once you've done that, you're going to tap Generate Deposit Address. Now, this will create a receipt, and you can save that receipt somewhere and then press back, and you'll see that the deposit address has been generated. So this is where you're going to send your Bitcoin. After copying the deposit address, go back to your Bitcoin wallet and enter it into the address bar. Let's switch to base currency Bitcoin, and then we're going to send 0.01 BTC to that address and press continue and slide to send. Next, we're going to go back to the dashboard of the Threshold Network site and connect the same Ethereum wallet that we used initially. And after an hour or so, you should see that your deposit was confirmed, and you're going to tap on Bridge. Now, you can see here that you have to pay a network fee for this, so make sure that your wallet is funded with Ethereum. After a few seconds, you should see your mint initiate. After a few hours, you should see the TBTC show up in your Ethereum wallet. That's how you mint TBTC using the Bitcoin.com wallet.
So I got into crypto around 2017 during that cycle, that ICO boom.
2017, I was first introduced to Bitcoin. Actually, my first love of crypto was Monero.
I got into crypto in 2017, mainly out of desperation. I started hearing about it and basically, I'm like, okay, this is my ticket.
I got into crypto around 2017. Yeah, this seems quite classic at this point, but Yeah, the big bull run basically got into mostly ETH at that point.
Discovered Bitcoin in probably mid-2016. Read all I could about it. Got really super interested in it. Put in a little bit of my money, and then yeah, just started building things for it.
I probably got into crypto around 2018-ish, and I knew about it for many years prior to that, but never really got into it.
I started my journey in crypto in 2010. Back when I first installed the Qt miner exe.
I'm a full stack engineer, mainly deal with front-end web, but I've had my hands in a few different parts of the code bases.
I am a media product manager. I basically handle a lot of the Bitcoin.com news media.
I'm the marketing operations lead at Bitcoin.com. I manage the marketing team, so we've got video team, designers, copywriters, and yeah, we're just trying to spread the word about economic freedom and our products, make sure that everything looks cool.
And right now in particular, I'm kind of building a new exchange product with some of the new cool stuff that's coming out in Hyperliquid, DYDX, and trying to figure out how to make a new decentralized product that still looks like a custodial exchange.
I am the tech lead for revenue, which means I'm responsible for finding revenue streams.
I work with the film and video, do editing, filming the conferences, making different content of that sort. Yeah.
So I'm basically leading up the engineering org, mostly managing all the engineering side of things at this point. Making sure we stay on track is basically what I'm doing, yeah.
Japan is one of the most peaceful countries in the world. The crime rate is quite low.
Everything works and it's safe. You can walk anywhere, you can just go anywhere. You never have to worry. You can leave your backpack on the train and you'll get it back. Like all of that stuff I really like.
The infrastructure is fantastic. You can go wherever you want to. Any time of day, day and night, everything's going on. It's full of energy. People always say like New York's a city that never sleeps, but I've been there and it does sleep, whereas Tokyo doesn't sleep.
The middle class experience in Japan is second to none. What in many countries would be like a 3-star restaurant, you can get that like without really going out of your way.
Super clean, super safe. You know, you can walk anywhere, you can take the train anywhere, lots of good food. It's got like all of the pros.
It's fun, exciting, there's always something going on. People are really kind and friendly. Food's amazing, and they've got amazing toilets. I can't think of any negatives about living in Japan. Maybe I think the language barrier is a bit tricky sometimes, and also the bureaucracy.
It's kind of disconnected from the rest of the world. It's easy to sort of lose touch with reality, I guess, with what's happening in the rest of the world.
They tend to misinterpret rules versus laws. That creates a lot of issues, especially for the crypto industry.
You know, everything's Japanese, you gotta speak the language, and if you don't, you're kind of always gonna be an outsider, I guess.
So it's hard to, I guess, like break into that culture.
I think number one piece of advice I have about visiting Japan is read up on the local customs, for lack of a better word, or mannerisms. Be polite, don't be an asshole tourist.
I personally think you shouldn't spend a lot of money on food. The ambient level of service and quality is so high that you can go to relatively inexpensive places and it'll blow you away.
You're gonna have to take the subway, you're gonna have to take the JR, you're gonna have to take the Shinkansen. Now, yeah, you can stop every station, get your little ticket and do whatever, but just get a transit card. It can be an app on your phone, it can be like the physical card like I have. That way you just put money on it, and then you can get in and out of the train. If you're buying individual tickets, it's not gonna make any sense to you at all.
I guess if you're traveling to Japan, is to mostly just go out a little bit from Tokyo and enjoy. Because I really like you get 1 hour, 2 hours out in Tokyo, like Hakone or Easy or somewhere like that. Everything changes. It goes from being this big city to becoming nature. And if you go far enough, you'll be the only tourist, right? If you go off the beaten path, you get a car, then you can go to the real place.
You can go anywhere and find something interesting to do. So I think like a lot of people just come and do the circuit of like Kyoto, Shibuya Scramble, maybe try and stay in an area that's a little bit off the beaten path and explore that area. There's lots of stuff
I would avoid temples in Kyoto. Just go to like any medium-sized city outside of Kyoto, Osaka, and Tokyo, and you're gonna have a much better experience.
I think for sure you should spend some time to like scope out an area you like before like, I don't know, committing to like an apartment or something like that.
Be ready for the bureaucracy, and everything is going to be in Japanese. So either you gotta, get your Google translation game going, or you gotta find someone to help you.
Try to learn the language, try to learn the culture, but still be yourself. You're a different animal. Try to stay yourself.
Just do a lot of research. If you have friends living in Japan, talk to them, get as much information as you can before just jumping into it.
The things that make Japan great, like it's so clean, it's so safe, those are only possible because of the restrictions. Be prepared to be spending a lot of time sorting your trash, dealing with local regulations.
It's not the same as your home country, so just roll with it. Makes it more fun. Don't expect it to be like your home. Don't judge the things that are different. Just accept that that's how it is and go with it.
So the best thing about crypto, I think, is everything changes and that you never really know where you're going. When I started, if someone told me about NFTs or meme coins, I would have been like, what are you talking about? What are you talking about?
I think there's just always something new to learn, something new is happening in crypto. The trends come off often and go away just as often. So you gotta ride the waves.
I get to see what's happening in this sort of new age of fintech and be ready to pounce on like these potential investment opportunities.
It can be a little bit stressful at times, especially once you get into the groove of working on the project and needing to change it like straight away. But I think learning new things is great, and because it's like building up my skill base as well as like creating new things for the company and the crypto community in general.
It's kind of a Wild West. You can kind of just play around with it, get it right, experiment. And because it moves fast, if it messes up, that's fine. Because everyone in crypto is used to things crashing and burning. Build it again, try different things, see what sticks.
In this video, we'll show you how to earn Bitcoin, currently at over 30% APY, by staking Verse tokens in the Bitcoin.com wallet app using the low-fee Polygon network. You can also stake Verse on Ethereum, but for this walkthrough, we'll focus on Polygon. To get started, you'll need some Verse tokens. This is what you'll be staking to earn Bitcoin. You can earn Verse for free in the Rewards Center or buy or swap into it directly in the app. You'll also need a small amount of Matic, also sometimes called POL, which is the gas token on the Polygon network. You'll be using Matic to cover transaction fees, which are less than 1 cent in most cases. Now that we have everything we need, it's time to stake Verse to start earning Bitcoin. From the home screen, go to Web3 Explorer, then select Earn Bitcoin on Polygon. Next, you'll need to connect your wallet. Make sure to connect your Polygon wallet that has Verse and Matic in it. Then hit the Stake Verse button, enter the amount to stake, and confirm the transactions. The first transaction approves use of Verse. The second deposits your Verse into the staking smart contract. And that's it! You're now earning Bitcoin in the form of TBTC, a decentralized, one-to-one Bitcoin-backed token. You can claim your Bitcoin rewards at any time by tapping Claim Rewards. Just like when you staked your Verse, you'll again need a little Matic to cover the fee. Your rewards come in TBTC, a decentralized version of Bitcoin that's usable in Web3 apps and faster to transact than mainnet Bitcoin. It's always backed one-to-one with real Bitcoin on the Bitcoin blockchain, and you can swap it to mainnet Bitcoin anytime. You can unstake your Verse anytime, instantly, and without penalties. When you do, you'll get your Verse back, plus any unclaimed rewards. And that's it. Stake your Verse tokens in the Bitcoin.com wallet app to start earning Bitcoin today, fast, simple, and self-custodial. Try it now.
Are you a Bitcoin holder ready to explore the world of decentralized finance? With TBTC, you can lend, borrow, provide liquidity, and engage in a wide range of DeFi activities, all securely and free from centralized control. Unlike options like WBTC, where Bitcoin is held by centralized custodians, TBTC is secured by a network of independent nodes, ensuring that no single entity ever has control over your assets. TBTC empowers you to seamlessly integrate your Bitcoin into the DeFi ecosystem, unlocking the vast potential of smart contracts and dApps while maintaining the security of your Bitcoin. Fully backed one-to-one with Bitcoin reserves and protected by a decentralized network of nodes, TBTC ensures that you can always reclaim your Bitcoin or swap your TBTC without relying on intermediaries. As the blockchain space continues to evolve, TBTC on the Threshold network offers you the confidence to put your Bitcoin to work, knowing your assets are secured by a decentralized network, not by a central authority.
Welcome back, folks. Frederick with Bitcoin.com on the Bitcoin.com live stream. I've got my co-host, Jason, who's our Chief Operating Officer. And we've got a special guest today, the one and only 2016 NBA champion, Tristan Thompson. Tristan, welcome to the show.
Thanks for having me. I think Jason's on here. It means this must be, this is big time. The guy with the suit on. We're all dressed up casual. When the suit shows up, we'll be ready to play.
I just want to spend some time with some people from Toronto.
And you know what? I mean, Jason is with us every day, you're with us just for the next 30 minutes or so. So we appreciate it. So first, the first thing that I want to ask you before we even get into crypto is, usually I ask people like how you got into crypto and things like that. But for you, two things. Tell us about your path to the NBA and then tell us about your path to crypto. So I think that'll make more sense for the viewers.
No, I think for myself, Tristan Thompson from Toronto, Canada, 14 years in the NBA, went to University of Texas, moved away from home at 16, went to boarding school, sacrificed my teenage years for a bigger goal, which was to make the NBA. My goal was to always just put my family in a position where I can have my mom retire and not have to work. Jamaican descent, mother that worked 3 jobs. So for me, the sacrifices I made was to just make my family proud and make them happy. In the NBA, won a championship.
Almost drafted by the Raptors.
Almost drafted by the Raptors, went 4. Valanciunas went 5, I went 4. I've had a lot of success, been super blessed and fortunate. 14 plus years in the NBA, great memories. And for me, now to transition to the next part is I think for athletes, life happens so fast where you kind of get in this matrix and you don't really put yourself in a position to wonder like what's next, right? For me, maybe from my upbringing and understanding the reality of life, Father Time's undefeated, unless you're LeBron James, that you can play forever and ever and ever. But for me, it's about what was next? What was next? What would make me excited? What would give me that same burning sensation when I was 19 trying to get drafted? Uh, now in life, right? And for myself, it was crypto and Web3. You know, I've been for me being the elder statesman of the team and being the locker room, I've always been the guy who's been talking about financial literacy, right? Always educating guys. I think it's our job as athletes to pay it forward to the younger kids, the younger generation. So for me, it was from a financial side. I'm always a guy telling guys what to ask their financial advisor, telling guys get audits, doing all that. But if I'm going to be giving out this financial literacy, I got to cover the whole scope. And with crypto and Web3, that's another form of financial literacy. So I said to myself, I have to educate myself in this space and learn what it's about, so I can use those tools to help, those behind me. And with doing that, I was very fortunate to be around some great OGs in the space, like a Ryan Fang that kind of took me under his wing. Ryan Fang, the people that don't know, is one of the co-founders of ANKR. He's had some great success, and he's really kind of helped me understand the space and grow in the space. There was a moment where last summer, I would call it crypto school, where I hired like 3 tutors that Ryan helped find for me, and I was learning from what was blockchain, what was L2, what was DeFi, what was yielding and staking, right? Because I felt like if I'm going to be in this space, which it brought me a lot of excitement, I got to really understand and take it from a ground zero level and build it up. And I'm here today sitting with you, amazing gentlemen who have done some great things and have a great platform, and I'm happy to be here.
Yeah, so you're mentioning staking, right? And I just want to know, when you're talking to these guys that you're surrounded by, like, what's the openness to what this is? Like, beyond financial literacy, which everybody needs. I think like you focusing on that speaks to me. Like, of course, like, doesn't matter like where you are in life, like you can always learn more. But like, what are these guys saying when they're hearing that you're out here talking about Web3 or crypto?
I mean, they're inspired because I think, one thing about athletes, we're people try to pigeonhole us and put us in a box, right?
Yeah.
And I think it's the saying that LeBron uses, like, I'm more than an athlete.
Yeah.
And when that lady on Fox said, just shut up and dribble, that kind of motivated a lot. And you could almost, if you look at after she made that quote, you could almost see a bunch of athletes started to expand themselves off the court, field, wherever it may be, and really started to become businessmen. And really, wherever their passion and field was, whether it was real estate, tech, being VCs, being builders, people really used it as motivation to see what's next. And for myself, being in the space, my teammates would ask me what I'm doing. They'd see me on Aerodrome yielding, doing a USDC, CB, BTC pool, right? And they're like, what are you doing? I'm like, I'm yielding. I got to make sure my range.
Yeah.
And doing all that. And I think it caught their attention. They're like, yo, explain to me what's going on. Yeah. And really, especially from DeFi, I think DeFi is the one area for the Web2 community where it's a very easy and safer entry. I wouldn't want to say entry drug, but an entry treat to get into the space, because it's very digestible, and it's something that they can understand.
Yeah, but you mentioned something off camera about just the UX, right?
Yeah.
Because I was saying, like, I can't just share this with like my mom, and you were talking about how it just needs to be stupid easy, right?
Yeah, I mean, I think that's one thing that I take a lot of pride in terms of what can I bring to the space, right? Bridge the gap. And it's no different than in sports. For me, at one point I was a rookie. Now I'm one of the older guys on the team. There's that disconnect between players and coaches, right?
Yeah.
How can I be a valuable asset to a franchise? And one way I could be is help bridge the coaching staff and the younger players, because I'm in that middle spot where I understand the language of the young players, because the younger players are way different now, but also understand what the coaches need. And it's no different than Web3, right? It's like bridge the gap where, like, listen, there's so many great founders here. There's so many people that have great idea, great tech. But the problem is that they're not able to explain what they're building or what they do, what their project's doing, because they don't have the vocabulary or don't know how to grab the mainstream or the Web2 audience. And for me, I look at it as like a light bulb. It's like, let me be that person. Let me be able to explain this where we're talking to our aunt and uncle, where they're going to understand this, where they feel comfortable. Because one thing about human beings, when you use big words or words that they're not familiar with, they turn the brain off. Yeah. Whenever you belittle a human being, they're going to tune you out. And that's when you already lost them. So for me, it's like, how can I explain what's going on in crypto and Web3 where it's digestible? And they'll be like, oh, I get this. It's not as complicated as one may think.
Right. So basically making it relatable to your audience, and you're saying, a lot of these projects, they can't do that. They can't get the mainstream attention because they can't find, I guess, the best way to relate to a more generic mainstream audience. But one thing you said, the name of the person who introduced you to crypto is Ryan.
Ryan Fang. So Ryan Fang, yeah. So he's
orange pill debate.
Yeah. So he's especially with myself, whenever I'm gonna go 2 feet into something, I know when I'm not the smartest. I know when I'm the least experienced, but I'm okay taking my ego and pride to the side and putting myself in a vulnerable position and saying, help me, teach me.
That's how you learn, right?
Yeah, right? Because I don't want to, listen, I don't want to be the smartest in the room. If I'm the smartest in the room, I'm in the wrong room.
Right. That's a good attitude.
Yeah.
So that's great. So you've now started your own ventures. You've got Tracy AI, you've got basketball.fun. You're the chief content officer for Tracy AI and the lead advisor. You're also kind of leading this project, basketball.fun, with Insomnia and Improbable. So tell us a little bit about those two projects, what they're about, and how you're finding life as as a crypto executive, essentially.
Yeah, no, I think for getting in the space, you got to figure out, I have this builder mentality, right? To get to the NBA, you got to build this up. You got to build this career, right? You're not just born an NBA star, right? I wasn't the guy that was always the fastest, probably one of the strongest, but not always the fastest, tallest, most sharp. I had to work for my skill, right? So it's no different than being in the space, work to build something, right? So for me, it's like, what's an area that I see that there can be improvement? And for me, it's sports entertainment. That's an area that I feel that can have, it's a lot of old dogs that don't want to learn a new trick. So let me be the young pup that's going to come and shake the room. Almost be a disruptor, but be a disruptor in terms of showing that there's more to this, right? That we could do more and open and broaden the horizon. So for me, whether it's basketball.fun, what we're doing is on-chain fantasy basketball, but the thing I love about it is it's empowering the fans, right? We always preach about how our fans are the most important to our sport and our business.
Right.
Well, it's time to put our money where our mouth is and really create a platform on-chain where they can take their knowledge and what they feel about the value of a player and really put it to use in a prediction fantasy basketball platform.
Wow. So I know that sports, like sports statistics, sports analytics is kind of a pretty large ecosystem, especially with bettors,
prediction market, everything. Yeah,
you talk about poly markets at all?
Yeah, well, listen. Poly market was basically our form of news. When it came to the election, right? They became more credible than CNN and Fox News, right? So that just shows you something, that a community of people, regardless, they say maybe some people were working in the White House or had the intel. It is what it is. But the fact that a large community could come together with an idea and a feel or a sentiment about something and it actually come to fruition and be correct, shows you that we can, it's not just in politics. We can do this in sports. We can do this in entertainment. We can do this in so many other realms of life. So for me, that put up a light bulb. Is like, why not bring that to sports? And why not bring that on chain for basketball?
So, and then you've got basketball.fun, which is more like, I guess, you are, is it tokenizing players and then
so we're
determining the value?
Yeah, so we're making the community determine the value of players, right? Like, listen, at the end of the day, we all know how great LeBron James and Luka Doncic and Giannis is, right? But it's about those role players when creating these fantasy sports teams, the value of those players, right? Like, I'll give you an example. ESPN and NBA.com might say Drew Holiday is just a okay role player, but really there might be a community that really believes he's actually just as valuable as Jason Tatum and Jaylen Brown, and they're willing to put tokens behind it and increase his value because they know he's going to be able to do in the game night in, night out, where they're going to end up being able to win and gain rewards. And the one thing about this, right, in anything in terms of like betting and prediction markets, that everybody wants to know who's the best. A leaderboard, right? A leaderboard. And obviously, the better you are with your calls, the better you are with the right predictions, you're going to be rewarded more, right? And I think that's what this is. We're going to reward those that are actually great at what they do and make people really feel like they can challenge the Stephen A. Smith of the world and those people that are in the suits and ties that have these positions.
Stephen A is waiting to be disrupted. We got to disrupt Stephen.
Yeah, man. I think,
No.
and yes, and I think
Take away his power.
Yeah, I think the time is now that we really empower it, and it's for me. My mission is not just from a whole fan engagement and betting and prediction market, but it's also identifying talent. I think the meta right now, I think, is amplify. I think that's the next step in this space. Amplify, being able to take a bunch of information and how to apply it to the everyday and really like use it for good, right? For my whole goal is like in the NBA, there's about 6 international scouts for every team. So if you times that by 30, it's about 70 people in position to cover billions of people to find talent, right? So what if we create this community where there could be a talented kid in Tanzania, right? If this community buys into and tokenizes him and builds him up and almost builds this rapport about him, and if he actually pans out to be a player, it's like finding the talent at an early age where you don't rely on the suits and ties and the scouts to do that, right? Empower the community to empower their own.
Right. It reminds me of the difference between, those political polls where they say this person is leading versus what you talked about earlier, poly market, where you can see the wisdom of the crowds, where everybody says, look, we think this person is winning the election, and they put money behind it, versus a smaller number of people who are, quote unquote experts who make the predictions, which are often wrong.
Yeah,
right?
and one thing about human beings, and this is one thing I loved about what I created with Tracy, with AI, right? We're using analytics that the teams are using to back what the prediction is, back who she thinks is going to win, right? I mean, let's be realistic. When she was tweeting, she had us losing the games against Indiana. And I'm like, I created you. How are you going against me? Yeah. But at the end of the day, the facts are the facts. And her calls are right. So for us, it's like, these reporters, they're humans. Humans have bias.
Yep.
Certain Skip Bayless doesn't like LeBron, but he loves Kawhi. So if you ask him about who's better, he's going to give somebody else more love. Yeah. But at the end of the day, we're going to strip the bias and the heart feeling and the facts are the facts.
Yeah. Maybe tweak the algorithm though, right?
Yeah, of course.
Get you winning something.
Yeah, I should have set it up. I mean.
So who's the target audience for this? For basketball.fun, I can see that the target audience is probably the fans, right? Because they're building up these fantasy teams, putting money behind it. For the sports analytics, though, because sports analytics is something that is used by, for example, commentators. It's something that's used by scouts, right? They want to know who the best. Yeah, that might be more on the college side, or I guess.
Yeah, no. So
NBA.
Yeah. So
who's your target clientele? I guess
for Tracy, I mean, for analytics, I think I look at it 3 prongs. It's the 3 prong. You have obviously your front office side where they can use these high level analytics to figure out what they need to improve the roster.
Okay.
For coaching, it's a great way to get your data before you go scout. Like the one thing my coach said, Kenny Atkinson would say, is like, Tristan, the most frustrating thing is when I'm watching a game and I want certain stats or analytics about a player or a team, I have to literally go on my phone or email our analytic guy. Hopefully he's on his phone or computer, he's not sleeping, have him pull the data, then present it to me, and I don't get it till the next morning. But it's the middle of the night, he wants to be able to create his game plan and the strategy for what the games to come the next day.
Next morning.
So imagine having it at the palm of your hands where you don't have to wait for that process. We're not saying, I'm not here to take guys' jobs or have guys, but be another asset to help you be more efficient at whatever your job is. Now, from a fan and consumer perspective, listen, everybody wants that 1% to know, like, they want to know what the athletes know. They want to be in the locker room, right? So being able to have these stats and analytics where they can use it now for betting.
Yeah, I thought
use it for prediction side. Where now it's not just like over and unders. No, like I know Jason Tatum is going to play well on Sundays because his numbers back him. On Sundays, he's averaging 28 points per game, but on a Wednesday, he's averaging 25. So when I'm betting, I'm going to go big on this bet because the numbers back him.
Vegas.
Yeah. Vegas on steroids.
I used to have this was actually back in Toronto. I used to work for this hedge fund company, and my friend was a big betting guy, and he had this book. He literally had a book. He would write down all the stats and all the bets and how much money he made, and I think he was at about like a 60-40 win-lose ratio. Is that good or bad? I'm not sure.
Did you ever get a peek at that book? Did you get a peek?
Yeah, but I'm not a bettor, so
64 is actually good.
Really,
yes. I mean, as a betting if you're a betting DJ better, like
Yeah, if you beat the house.
yeah, as long as you beat the house, you're good.
Right. So okay. So it's the front office, it's the coaches who need to know the stats, and it's the fans who are betting and who want to know what their I guess what their favorite players or not so favorite players are doing. Right.
Yeah.
So okay, that's cool. Now, one thing that I wanted to ask you, and I asked you this off camera, right? So we've got all these other stars that are involved in crypto. One thing we were curious about is among professional athletes, specifically the NBA, what is the general sentiment around crypto? We've got guys like Jimmy Butler, we talked about him, Tyrese Halliburton. They're kind of involved in crypto, maybe kind of not. What are you hearing in the locker rooms?
Yeah, sentiment and kind of like what is the knowledge level, do you think? Right?
I mean, I think the sentiment right now is guys are very curious, right? Because I think what helps is the fact that the Trump administration and what they've been able to do, whether it's the Genius Act and the Clarity Act, being able to like accept stable coins and let them be part of our everyday usage, it's allowing guys to really feel comfortable where they don't think, crypto is just this FTX situation or it's a rug pull scam thing. It's something that actually has real utility, real backing, and real support behind it. So that's gained guys' interest because guys are asking me all the time. Like guys see me posting right now that I'm in Korea and they're like, man, what you doing out there? And I'm like, I'm out here for crypto. And they're like, man, really like, tell us about it. Like, man. And one thing they always ask, they're like, what's the next play? I'm like, no, guys, let's educate yourself first, one step at a time, right? Because they're on Twitter, they see that, the DJs are like, I just 100x on a meme coin or part coin when it's going to the moon. Like they see everything. So they ask me because they feel comfortable and they know that I'm going to give them, honest advice and give my honest opinion on where I think, how they should approach the space. Yeah.
So do you think this is maybe a hint, like maybe your future career is crypto financial advisor?
Definitely. Definitely. I think, like I said from the beginning, from the start, I've always been a person that wants to pay it forward. I've always been a person that wants to take information, help others, because at the end of the day, that's how you make the world a better place. And I'm a big, I'm a big believer, like when you help others and bless others, God's going to bless you in tenfold. So for me, if I can help people in terms of being a crypto advisor or be able to help onboard people in a grand way, in a big way, that makes me happy. And at the same time, build some great, dope stuff that can really make the world a better place and make whether it's sports entertainment more efficient. So I'm here.
And are you investing in? So I know you've got the actual companies that are producing like Tracy AI, the platform, and Basketball.fun. Are you investing in Bitcoin, like the actual cryptocurrencies, Bitcoin, Ether? And if you don't mind, like how much? You don't have to give us a number.
Well, if I'm on Bitcoin.com, I got to say I have Bitcoin, but I wish I actually do, right? At the end of the day, Bitcoin is the Michael Jordan. It is the foundation of this space, right?
Michael Jordan. Okay, we'll get back to that.
Well, listen, don't get me twisted. LeBron is definitely the best player to ever play the game. Yeah. But I have to have the analogy where people can understand. Right?
The brand.
Yes, listen. Michael Jordan.
I don't debate that, but let's go ahead.
Michael Jordan basically took basketball was just a sport and made entertainment. Right. So that's a big jump. So I look at it like Bitcoin. Bitcoin was created and it went from people just using centralized bank and the centralized system to being decentralized and having a floor and a very strong floor, which people are into, love it, and want to know more about it. But for me, I have like anything, right? You should always diversify your portfolio if you can.
Right.
But when I tell people that, I say like, what's the first asset I should buy digitally of getting into space? I say Bitcoin, because guess what? It's the floor, it's the foundation, it's the basement that holds the house up.
It all exists because of Bitcoin, right?
Yeah.
So I guess this is the big question that everybody wants to know is, does LeBron James hold Bitcoin?
Maybe after watching this, right?
Listen, if
this might affect the price.
Yeah. I would not be surprised, because I know LeBron very well. I wouldn't be surprised in his portfolio if he had some Bitcoin.
He dabbles.
And I wouldn't say, I'm not saying he's has a ledger and has a seed phrase in his safe, but it wouldn't surprise me if he's with BlackRock and he's in a Bitcoin ETF.
Surrounded by people talking about it, you got to look into it, right?
And hopefully watching this, it motivates people to go open a wallet and buy some Bitcoin. Cool.
Yeah. All right. So besides crypto, I wanted to know, like, what other ventures are you getting into? So I know you seem to know a little bit about AI. Are you investing in other things, other projects?
Yeah, I'm always investing. I mean, for myself, I think you gotta cover the whole scale, right? Like, of course, yes, I love to build stuff. I love to be a part of great partnerships and great groups, but also invest in people that have the desire to want to do something dope and do something great. And I think that's how you kind of create this profile. And especially for myself, I take a lot of pride in like building myself out in the space, because unfortunately and I hate to put myself in this boat, because I don't view myself as a celebrity. I view myself as an entrepreneur that wants to do great things and be more than just.
You're being interviewed by Bitcoin.com. You're a celebrity.
Yeah,
Whether you were before or not, you are now.
Yes. So for me, it's back to my train of thought. It was like, I want to be doing a little bit of everything, right? And I think for myself, and even from a grander, bigger side, like, I want to be part of, a company in the space, and not just from a ambassador side, but a real executive C-suite role, being part of a company of what they're trying to do and what their mission is. Because I think in this space is about building your portfolio and building your profile, where I want to be part of, like, have that stamp. Like, I look at myself like Dr. Dre got one of the biggest co-signs of his entire life, right? He was a great producer and a rapper, but when he got with Jimmy Iovine, got that stamp where now Dr. Dre can start anything. He can go to any investment bank. He can go to any room now, and people look at him different because he's got that stamp from Jimmy Iovine as a businessman. So for me, it's no different than I want to have that for myself in this space, align myself with someone that is very well-respected, an OG. When he walks in the door, but like, that guy's serious, and be like his Dr. Dre.
Well, I think like one area that is a gap, and you talked about it, is that a lot of this messaging doesn't reach a wide audience. So if you can keep doing that and like speaking to, everyone, in a way that like resonates with them, then I could see that being very valuable to, like, whether it's AI, crypto, or like future of finance. Like there's a need for that.
Yeah, I mean, it's a huge thing. I think listen, what's everyone always talking about? When's Bitcoin gonna be at $1 million, right?
Yeah.
For that to happen, it's gonna happen onboard in Web 2 world, right? That's the reality, right? Like, let's not sugarcoat it, because at the end of the day, these conferences are great. They're amazing, right? But this cup is at 95% capacity, right? But there's another world, in the world that I'm from, where it's like 5%, right?
Right.
So that means so much runway and so much room where, like, how can I be a vessel to fill that cup up, right?
Sure.
To get us to where we want to get to. In order to do that, it's like you said, got to onboard, teach them, give them the education, give them the literacy, but also create dope products that draws them in.
Right. And so one thing you mentioned there, you said Bitcoin might get to $1 million at the end of the year. You don't have to look at 10 years out, but maybe by the end of 2025, where do you see the price of Bitcoin?
It's an obligatory question, no pressure. You can see.
Yeah, no, listen, I know OG Arthur Hayes was saying 250, but I'm a very conservative guy. I think that might be the Canadian in me. So, like, for me, like, I'd be very content and happy if Bitcoin was at 150 this year.
It's beautiful.
I'll be happy and content. And guess what? What's the saying? Like, under promise, overachieve.
Deliver, yeah.
Over deliver, right? Like, so if it goes over 150, like, who's up something?
You're the second person. And again, the first person who gave that prediction is a very smart young lady who's in the TradFi, DeFi world. So you're right there on the executive level.
Yeah.
So you talked about conferences as well. So we're live here in Seoul, South Korea, the Korean Blockchain Week. Have you seen any projects besides the ones that you're involved in that caught your eye or that you think are interesting?
I mean, there's a lot. I mean, one thing about this conference, which I love, it's almost a way to keep your knife sharp, right? To see what people are thinking, or see what people are trying to build. But you know what I noticed? It's not even about one person specific. It's more so everyone's understanding the mass adoption is very important, because everyone can't just be building the same thing if it can't have a mass adoption, because that recipe, that playbook is already kind of ran out.
Right.
The ones that become the star in this cycle are the ones that are going to be able to do mass adoption. So, like, there's so many people that are doing some great things. I mean, listen, what Luca's doing with Pudgy, bringing it to real world. Well, what Story's doing, especially in the Korean market, with being able to bring on board like everyday companies and IPs. That's forward thinking. And that's how we get the mass adoption, doing things like that.
Awesome.
You know what? We know you're super busy, got like a lot of other stuff to do. Tristan, we really appreciate you coming on here and, bringing in some visibility on what this is. It's awesome speaking.
No, guys, thank you so much for having me on. I really appreciate it, man. Like, an honor.
And one thing I want to say to our viewers, how do they get in touch with you? For Tracy AI, basketball.fun, or just to touch base with you?
Yeah, I mean, for me, I'm on X or Twitter. I'm a little old school, so I say Twitter still. But my Twitter is real Tristan13. I'm on there, very active on there. I'm always tweeting, talking about whether it's we're talking about who's gonna make it to Vegas, hype or Aster first on the perp esports like I see going on here. Twitter is probably the best way in terms of getting a hold of me. Watch out for basketball.fun, Tracy AI. We're building some great things, and I'm just excited about the space.
Well, it's been such a pleasure talking to you. It looks like you've learned in that 1 year that you talked to Ryan. You've learned quite a lot. It looks like you're here for the long term. So, ladies and gentlemen, there you have it. Tristan Thompson, 2016 NBA champion. He's launching Tracy AI and basketball.fun. Tristan, thank you for coming.
Gentlemen, thank you for having me on. Very much.
And next we have, let me just check our schedule here. So to our viewers, don't leave just yet.
Stay, guys.
All right, we have Matt Prusak. He's the president at American Bitcoin. Again,
I was just
the Bitcoin family is
I was just with them ringing the bell at NASDAQ last Tuesday. Yeah, last Tuesday. Yeah, Eric invited me. It was an honor to be there with them. What Eric and Ashton and Mike, what they're doing, their whole mission behind that with American Bitcoin is amazing, and I'm just proud and honored to be there with them.
Yeah, it's an honor to be here with you.
Yeah.
All right. Thank you, guys.
Yep.
We're back and we are live at Korea Blockchain Week at the Bitcoin.com live streams powered by Threshold Network. Now, we're going to address some of the questions and comments that people asked during the live stream and during the clips on our live stream. And we're going to announce the winners. Remember, we've got $2,000 of Bitcoin up for grabs here. The grand prize is going to be $1,000 of Bitcoin that's in TBTC, Threshold Networks Bitcoin, with 2 runner-up winners of $500 each. So there were a lot of great questions and comments.
That's awesome.
Yeah, let's get into the first one. This is from user Rian. Their X handle is at Rian, CMIIW. So Rian, please reach out to us at BTCTN by DM and we'll hook you up with your prize. You are going to get $500 in Bitcoin. And
congratulations.
Rian's question was, will we experience crypto winter this year or early 2026?
What do you guys think?
What do you guys think?
No, I don't think crypto winter is coming this year or in 2026.
You're a super cycle man.
Yeah, I'm a believer in, well, here's my thesis. Bitcoin wise, there's no more winters. You know, the winters are gone. People had their chance to buy Bitcoin at a low price. The institutions have come in, the DATs have come in. Those are the people that we're competing with. There's too much capital for the price to go too low. It might, you know, like drop a little bit like it's been doing for the past few weeks, 120, 110, but it's not going to go from 120 to 50,000, 70,000 again. I think that's done. I think now the $100,000 floor has been reached pretty much. And if you want to call that a winter, I guess maybe it's a spring. I don't know what you want to call it, but I don't think the big winter, at least from a Bitcoin perspective, is coming this year or next. What are your thoughts?
I'm inclined to agree, Frederick. However, I was just speaking with someone who, you know, he's like, he's investing in the space. He's like, my friend, or he's like, I've done the math. The cycle ends pretty much today or tomorrow. That's the Pico top. You better start DCAing your way out of the market. So I hear takes like that, and I'm like, because you know, I missed the Pico top last cycle. I missed the Pico top in the previous cycle. I vowed last cycle to sell some of my Bitcoin. You know, so you know that.
It's making I'm
nervous.
You're thinking about it, huh?
Yeah, I'm thinking about it.
Some stranger on the conference. Yeah, so you spooked.
But exactly. But I really like the advice, which David, I think I've mentioned this to you a few times before, of Raul Paul, who his advice is, look, no one's going to time the Pico top exactly. What you need to do is just take some lifestyle chips. All right, take a little bit of profit. At least have something so you're not like consumed by total regret. So you know, I think that's my plan. I'm gonna take a few slices off the top
right now.
Between now and the end.
That's a good plan. Yeah. Well, I think we'll revisit this on token narratives throughout the remainder of the year, and as Bitcoin rallies hard.
Yeah, well,
I'm inclined. I bet his tune may change.
Yeah, I know. In the first cycle, I sold and then bought back in at a higher level. So
yeah, that always hurts.
The FOMO is probably worse than when you're seeing other people get hilariously rich. That's actually worse than like buying a token and then it goes down in price. Like, it's worse.
It might push you to make worse decisions.
Exactly.
Right? Like, also, like to that point, when we were on token narratives earlier with Cameron, you were talking about. Yeah, he said like, I have this hard limit, $100.
Yeah.
I only spent $100 on meme coins.
Yeah.
And I think we all kind of have something similar about meme coins.
Yeah.
The real danger though is you put your $100 in a meme coin and it does really well.
Yeah.
So you get, oh damn, I just made $1,000 on it.
Yeah.
Now for the next meme coin, you're like,
yeah,
maybe 200.
Exactly.
Maybe 1,000.
Yeah.
Because I just, and then those hard rules.
Absolutely. And just a little personal anecdote in the very short-lived AI cycle of late last year. You know, I made some early gains on I think it was the virtuals, and then I was like, I'm a genius, and then I put it into the virtuals killer AIXBT, and I got wrecked. So you know how it is. Or not AIXBT, AI 16Z.
Oh yeah.
I remember that.
Yeah.
I think there will be a crypto winter, but it'll just be we'll have a real recession, like a
it'll be more tradfi.
Yeah. And when that and when that happens, and it will eventually happen, like probably 2027, 2028, maybe after 2028, something like that. But that's just going to pull everything down. But I mean, at that point, if Bitcoin is like what 200, 300K, I mean, you know, whatever. Yeah, so it goes down 50% to 100K.
You think it'll do that? It'll go to 200 and 100K? It's possible.
I can imagine the Pico bottom being 100K. Anyway, I'm saying that maybe that 100K floor thing could be a real thing.
If you look at the chart, right, the Bitcoin chart, it's not parabolic. So it's pretty gradual, or at least it has been for the last 6 months. So I think if you see that parabolic move, that's when you want to really be thinking about taking off a few more chips.
I mean, the problem with parabolic moves, though, is that every part of it looks like a parabolic move, and then you keep zooming out, and it gets even more parabolic.
Exactly, and then also, of course, you start getting it's a new paradigm.
Whip was like that for me. Just a small anecdote. So I bought it at like 5 cents.
Yeah.
It went to like what, $5?
Yeah.
Right. So at 5 cents, it was like this, and then it went up to 10 cents, and then went up to 20 cents.
Yeah.
Those are
parabolic.
Those are parabolic moves, and I cashed out at like 30 or 40 cents. So I'm a genius. Oh my God. And then 2 months later, you look at the chart, right, as it goes up to like $5, you can't even see
those first parabolic.
You can't even see where I sold. It just looks like a flat line. It's like, David, you're an idiot. Why did you sell when it was flat?
Did you buy back in later?
No, I didn't.
Okay.
I'm really upset with myself.
No one ever went broke taking profits.
Yeah. I did buy other coins though. And those all went to, I did buy like the next whip.
Okay,
right?
yes.
I bought, yeah.
All right, so thank you, Rian, for your question. You're going to get $500 in TBTC, and thank you again to Threshold Network for sponsoring us here at the Bitcoin.com live stream at Korea Blockchain Week. Next question from Zishan Khan Niazi, their X account, their X handle is at Shani Trading Hub, and his or her question, sorry, I couldn't get your gender from the name, is what role do you think Bitcoin will play in the global financial system by 2030? I think this is a good follow-up question to the first one.
I'll go first, I guess.
Yeah.
I went last time.
I want to think about
Yeah. a little fairness there. By 2030, what role will Bitcoin have in the global financial system? To be honest, I guess it's good to start it with the wet blanket. I don't think it'll have much of a role. It could be like a alternative to gold, but it's not going to be the basis for 3 years from now, or whatever. It's not going to be the basis for like lots of different strategies and stuff like that. So yeah, it'll be bigger than it is now, but I think it'll be roughly the same as it is now.
Roughly the same percentage of gold's market cap?
Well, no, it could be.
I mean, the same position in the financial system.
And I'm not being clear. So what I'm saying is the ways that we're using Bitcoin now, and the ways that institutions are buying and holding Bitcoin now, it'll be the same.
Yeah.
It won't be like much new in terms of I'm gonna buy it in an ETF, or I'm gonna buy it in a treasury.
Yeah.
Like a DAT. It'll kind of be like that, I think. Still.
I do think one thing that I expect to see proliferate more is financial institutions, the growth of financial institutions who accept Bitcoin as collateral for fiat loans. I expect that segment to
by 2030.
So I expect that segment to really grow. I think you're gonna see certain banks, or maybe startup banks, new banks, actually offering housing loans on that model. So you give them your Bitcoin to custody, and you'll be able to get like a mortgage for your house.
Yeah, I think, I agree with both of you guys. The role that Bitcoin plays won't change much. I think Bitcoin as a treasury asset is actually a new role that emerged, I guess, let's say 2024. It's still kind of evolving now. Maybe you can say it's solidifying as a proper treasury asset. So that's a new role, and I think that role will continue. Bitcoin loans, this is already happening in crypto. And so some of these functions that Bitcoin plays today, currently in crypto, which are not new, will likely extend into TradFi. So, so nothing new there, but I think just an extension of what Bitcoin's doing in crypto already being extended into TradFi is something that, that could be maybe new markets, you could say, I guess.
On the loans thing though, Graham, we did a story a while ago. I think we told the narratives a week ago, I can't remember, about a Bitcoin business that does do loans, right? Like,
yeah.
Do you remember that one? We were talking about it, whether it was a scam or not.
Yeah.
So I mean, like, yeah, that is already, you can already do it. I guess it'll just grow bigger.
Yeah, I expect that segment of the market to grow bigger and to be safer or more trusted,
or maybe be offered by like more traditional institutions,
perhaps like more marquee banks.
Yeah.
That like, some of the big banks may actually offer a product where they'll take custody of your Bitcoin, and that can be collateral for a housing loan. All right, so the last one. Okay, so that's Zishan Khan Niazi. You got $500 of Bitcoin. Congratulations.
500. Good job.
Thank you for your question.
Well done.
The last one, the last one is from Miss Puchenko, whose X handle is @neat_Pucci. You're gonna get $1,000 of Bitcoin, and
I thought that was no. Wait. I'm
sorry. I'm sorry. Scratch that.
Yeah.
That's that's not correct. The winner, the $1,000 winner is Steve-O. Steve, their X handle is 0xSTHEX. You're gonna get $1,000 of Bitcoin, and
well done.
1,000.
Yes, the reason is because Steve-O was in the live stream, not only in the live stream commenting, but in many of the clips commenting with really thoughtful questions. I just want to highlight one of them. So we did an interview with
this morning, right?
This morning with Aya from August Digital, and Steve jumped into the comments with a really thoughtful question and comment. As August Digital is the only product in the market providing OTC services to institutions and individuals or clients in general, how does it feel? Do you mean there's no competition in your market as a service product? I'm just curious, Aya, right? That's the kind of question Steve-O came in with. Many others like that, and it was great to see Aya actually get into the comments and interact with Steve-O. So
yeah, so I mean, we had the guests. This is the great thing about like the internet and all this kind of stuff.
Yeah.
The guest is here talking to us in person. People are watching and then commenting on clips and stuff. And then the guest is replying to them almost. Yeah. Wow. Awesome.
Very thoughtful questions and comments from Steve-O. So congratulations. You got $1,000.
1,000.
BTC. Just DM us on our X account, BTCTN, and we'll get it all settled. We'll hook you up. Thanks again for your questions, and thanks to everyone who added comments and questions in the live stream. All right, so that's it for that little segment. We're going to have up next, we got Matt Prusak, who is president at American Bitcoin. We're going to have an interview with him.
About 8 minutes.
Yeah, just in just a few moments. So stay tuned for that. Thank you.
See you soon. Okay, we are back at KBW live at the Bitcoin.com news desk, sponsored by Threshold Network. I am with my co-host Graham Stone. How you doing, sir?
Doing great.
And we have a great guest here, Matt Huzak, the president of American Bitcoin.
Yeah.
As an American, I appreciate that name, but we'll get into that.
Strong name.
We'll get into that later. To start with, sir, can you please tell me a little history? What path did you take to bring you to what you're doing today?
Definitely. So again, the president of American Bitcoin actually started in Bitcoin mining about 5 years ago.
Okay.
On the mining side. Now, American Bitcoin is more than a mine. It's an accumulator. It's got a treasury component. There's a lot of moving parts there, but I came from mining. So we started with a company called US Bitcoin Corp. Strong name. We built and scaled that company over several years, became one of the largest private mines in the United States. We ultimately merged it with Hut 8. And at the time, a Canadian company. We re-domiciled it to Miami. We had a nice NASDAQ ceremony. I was chief commercial officer at US Bitcoin and then at Hut 8. I then went to Celsius, with the Celsius bankruptcy. I was the turnaround CEO for their mining division. So they had $250,000 in mining machines that were not on. So I was solving what we call the MIB problem, machines in boxes. Stood up that mining facility for them, and then rejoined Hut 8 for the spin out of American Bitcoin, which took place in April of this year with a listing about 2 weeks ago on NASDAQ.
Congratulations on that, by the way.
The sentiment has been good. It's being public is awesome. We did it in 5 months and 2 days, which I'm told is some kind of land speed record, and it's good to be out in the markets.
Nice. All right, so you said you were doing mining for 5 years then.
Yeah, there you go.
What were you doing before that?
Sure. So before that, so I actually started my career at Bain & Company. So kind of classically trained in corporate, got introduced to Bitcoin in a funny way. I was working in the Singapore office of Bain. I was assigned what was called the Distributed Ledger Technology Project, DLT, very corpo word for DLT. DLT guy. Yeah, go back. So I was a DLT guy. Got it. The old school. So I did that. Got really interested in blockchains. And then on the Bitcoin side, it was interesting. I was transferred to the Jakarta office. I was getting paid in rupiah. Exchange rate was like 12,000 to 1. My savings and my earnings were ping-ponging week to week, month to month. And so I started to learn more about fiat currency, which got me to Bitcoin. I already had my DLT background, and now I had some serious currency risk. And I've been a Bitcoiner ever since.
I love Bitcoin mining, and I've from the news side done research on different things, interviewed people. I often compare it to like the oil industry, in terms of really hard lots of capex, and short times to be profitable. So you have to really time. Would you agree with that?
I agree. I think crypto and operational discipline are not usually paired together. I think there's somewhat of a lavish reputation at times with cryptocurrency. Bitcoin is not like it. Bitcoin and Bitcoin mining is very much down to the electron. Paying as little as possible, very lean operations, a lot of energy. And yeah, so the culture of Bitcoin and Bitcoin mining is a little different from maybe crypto and the more mainstream, which has created an interesting intersection, because now as institutions are coming into crypto, they're meeting obviously a lot of these new projects, but they're also meeting Bitcoin and Bitcoin miners, and there's a little bit of a culture shock when they meet the Bitcoin crowd.
Could you go into how you've seen in the time you've been involved with Bitcoin mining, how you've seen that industry evolve?
Yeah, so in one word, the Bitcoin mining industry professionalized. So starting 5 years ago, we were already using ASICs, so we were using specialized computers. We moved away from the GPUs in the basement. We started scaling up these mega facilities. But at the time, 2 megawatts was a lot, right? I mean, 2 megawatts now is like less than a container. So there's just been this scale and this institutional approach that is very different from the old days, right? And that's played out a few different ways. It's played out with the energy. We're now partnering directly with utilities, working with large-scale power plants, et cetera. And it's also shown up in the capital markets, where we're speaking to banks, we're speaking to a lot of these financial players that, frankly, 5 years ago wouldn't have had any interest in us. I mean, the scale is there for them to start to participate.
So back in the day, 2 megawatts was large. What's large now?
You want to be triple digits. I think you want to be having at least in megawattage. You'd want to have several hundred megawatts in your series. We've got several hundred now, and we've got a pipeline of over a gigawatt if we choose to expand. And to give a sense of scale, a megawatt of power is roughly 600 to 800 houses worth of electricity. Okay. So 2 megawatts is actually it's a lot for you and me. It's a lot of power. That's
small town.
Yeah, it's a lot. Well, yeah, it's a neighborhood, right? And then once you scale to hundreds of megawatts, now you're like Manhattan. And so we've seen that scale play out in a very interesting way. It's led to a global search for the electron. Very interesting. I live in Texas, and Texas has become sort of a mining hotbed. There's about 2 to 3 gigawatts of Bitcoin mining on the grid there, using the sort of the power of the deregulated grid. We're trading energy, sophisticated systems and things like that. That are pretty cool.
Okay, yeah. That's awesome. All right, so you are the president of American Bitcoin. What is American Bitcoin? It's not just mining.
Yes. So American Bitcoin we describe as a Bitcoin accumulator, right? So if you think of a Venn diagram, one circle is the mining business. Exactly what we think of. We buy power, we make Bitcoin, we hold that Bitcoin. Right? The other circle in that Venn diagram is the treasury. So digital asset treasuries, DATs, DATs. They're the hot new thing. We've always had a treasury approach. You can think about Bitcoin mining as a business that is already on the Bitcoin standard. So hodling and stack is second nature to us. But the capital markets angle that Michael Saylor pioneered, and obviously he had some really cool ideas around ATMs and different share structures, et cetera, kind of kickstarted a new category of Bitcoin companies. And so what we decided to do when we launched in April was we took the best parts of mining, lean operation, very disciplined approach to energy pricing, et cetera. We combine that with what we believe to be the best parts of a treasury company. So for a treasury company, you want to have a very small staff, you want to have a very sophisticated understanding of the capital markets, and use that to accumulate as much Bitcoin as fast as you can.
So, this made me think of a question. So for Bitcoin mining, the data I understand how you make money. Yeah. But for mining, is it the basic business model is accumulate as much Bitcoin as you can, sell as little as you can until you're in a bull cycle, and that's where you.
I think that's how you get off of zero. For us, we don't sell anything. We've actually never sold a single Satoshi. We've been able to use the capital markets aspect to just keep the Bitcoin safe, right? So philosophically, we're as long Bitcoin as you can be. The mining side's an interesting angle because unlike other cryptocurrencies, Bitcoin doesn't have a yield function. There's no staking. Right? You can't there's no interest. It doesn't have that same inflation schedule that you find some of these other tokens. The only way that I know of, and if you know a different way, tell me, the only way I know of to accumulate Bitcoin at a discount is to mine it. And so for us, being able to mine Bitcoin at about a 50% gross margin, it's a structural advantage. Right? So what differentiates us from a traditional treasury? There are a lot of treasuries. Everyone's got their unique differentiator. Some are more in media, some are more in financial services. For us, one of our key differentiators, on top of just our team, is the ability to blend down the average cost of our stack over time using the mining.
So basically, you mine Bitcoin and then you use that Bitcoin in other parts of the business.
Correct. It goes right into the treasury. We're not, as of yet, doing anything with the Bitcoin in the treasury. One of the interesting things about coming to conferences like this is you start to see more about the DeFi world. BTC Fi, Bitcoin Fi is coming. It's not really here yet. I think 2026 could really be the year we start to see that take off, partially because institutional money is flowing into Bitcoin. So the Bitcoin money then wants to flow into something cool. But also because technology is catching up. You're seeing things like vibe coding are actually really interesting. When I was doing the DLT work, it was impossible to find a Solidity dev. So I went to DEF CON in Cancun one year, and there were guys walking around with flyers desperate to try to find someone. Please, 300 grand.
That's so funny.
Unicorn. Yeah, it was unicorn. Finding a Solidity dev. And then with Solana, Rust dev, it was just not easy. Bitcoin's, the kind of C+ code it's old school. But what's cool with the L2s that are coming out on Bitcoin, now with vibe coding, I think the ability to refactor your code from some of these other chains, if you have a killer product into Bitcoin or Bitcoin-related ecosystems, I think that's going to be a big thing next year.
Interesting. So would American Bitcoin explore the possibility of taking some of that Bitcoin, bridging it to an L2 in order to earn yield, or is that far in the future?
I'm open to it. I think we're fiduciary first and foremost, and so measure twice, cut once. Coming from my experience with the Celsius turnaround, I see what happens when this goes wrong.
Right.
Yeah, so I really think it's important for us to be very, very thoughtful. Oftentimes I've been pitched every project under the sun. We've got a big stack. The question always comes, where does the yield come from? If you can't tell me, I'm not interested. So there are legitimate sources of yield. There are opportunities. We're certainly looking. for ways that we could harness them. TBD.
How about wrapping Bitcoin and deploying it in an EVM?
Another chain. It's interesting. We're looking for the right bridging opportunity. There's also some direct swaps. I think the future of blockchain is seamless, right? A lot of the Bitcoin, some mojo is kind of trapped still on the Bitcoin L1. On one hand, it's probably safest there, to be clear, but on the other, there's a lot of opportunity on other chains. Now, we're not going to go chase yield across 30 different chains, but the bridges are better than ever. Honestly, the bridging experience you're probably familiar with is much smoother than it was a few years ago. Wallets now have capabilities to hold multiple coins. It's exciting. We need to meet the market where it's at, and so if there are more L2 opportunities, if they're wrapped L1s, again, I'll talk to anybody, but we're going to be very rigorous in our diligence.
Great. So, just going back, do you think most miners are kind of pivoting to your business model where the goal is to not sell Bitcoin anymore?
That's interesting. I actually think a lot of Bitcoin miners are pivoting entirely out of Bitcoin. So there's been a bit of a sea change. AI,
Right.
AI, high performance computing, HPC. Part of the value of us spinning out or carving out the American Bitcoin assets from Hut 8, their sibling company, was to give folks the exposure to what they wanted. Right? So someone, one of the business gurus once said that the only two businesses in this world are bundling and unbundling. And Hut 8 became an immense bundle. It had AI, HPC, had Bitcoin mining, had power trading in Texas, had all these different business verticals. And so when the ticker is moving, there's a lot of factors that were going into the share price. What we've done is we've unbundled. Right? So for us at American Bitcoin, it's Bitcoin accumulation. It's Bitcoin per share. It's exahash. It's the size of the HODL. That's what matters. Hut 8 is now freed up in a sense to really focus on the best way to monetize an electron. So Bitcoin mining is a part of their portfolio. Again, we love to use a gigawatt of it. Their portfolio is like 10 gigawatts though. So they were able to really think about AI, the robotics, things like that.
Right.
Some of our peers though are still bundled. And so the bundled stocks, it becomes a little harder to comp. It used to be quite straightforward. You look at some of the giants, Riots, Marathons, the world, CleanSpark, Iron, each a unique and maybe compelling company in its own right. But the stories are so mixed now that it's hard for me to say is the absolute rocket ship of one of our peers. Is that due to Bitcoin or is that maybe due to an announced AI deal? I mean, I don't know.
That makes a lot of sense to me.
I was going to ask, so investors who are looking to buy the stock, American Bitcoin stock, what would the investor profile? Is it that they're looking for exposure to Bitcoin?
No.
In a different form?
I think it's folks that want something better. I think when you buy Bitcoin either in spot yourself and self-custodying it or an exchange or ETF, IBIT. I think I have a grow the pie mindset, and so getting more folks into Bitcoin at all to me is a win. But as people get more sophisticated, as investors get more sophisticated, they're going to want to see that a business is working for their dollar. And so, an ETF will always give you one-to-one exposure for your price that you put in at. What's nice about a model like ours is that we're looking to grow the amount of Bitcoin you have per share over time. That's unique. Saylor obviously has been doing that through the financial markets. Historically, before that, the miners were doing that via mining. Again, we're bringing the best of both worlds. And so when we look at the investor profile, they're probably already a little bit orange-pilled, or they want to get into Bitcoin, and they look around and they see our team and they see kind of the clout that we're bringing and say, hey, these guys are going to work to have more Satoshis for me. I want to partner with them. I want to be a part of their story.
All right. Why is the name American Bitcoin? Great name.
U.S. Bitcoin was taken. No, we did that. No. The American Bitcoin name. I believe I'm a simple guy. I think a business should tell you what it does. Right? General Electric. Take a guess. So for us, the American Bitcoin name really embodies the values of the company. Right? We're North America miner. We're headquartered in Miami. We're listed on NASDAQ. So we have the American capital markets behind us. And from a Bitcoin story, we're a big believer in what I call Bitcoin diplomacy. And Bitcoin diplomacy is the ability to use Bitcoin as a means to create global prosperity. Now, when we create that prosperity, it's our belief we want to bring a lot of that Bitcoin back to the United States. So, for example, we're mining in North America. We've got a huge facility in Texas. People have asked us if we would go overseas. Today, we don't have to. Texas has been very good to us, as well as a few other markets. But if we were to mine in another country, we were to get the locals more excited about Bitcoin, but we were to then bring some of that Bitcoin energy back to the U.S. with American values, I think that's a win-win for everybody.
All right, we're in Korea right now. Why is American Bitcoin in Korea?
Why is American Bitcoin in Korea? Well, Koreans love American Bitcoin, and American Bitcoin loves Koreans. So we've had a really promising start to the business. As I said, we went public about 2 weeks ago. The Korean market from crypto landscape is fascinating. It's a very technologically adept population, very financially sophisticated, and really looking for the next thing, the next project. I think for us, it made intuitive sense to come here as part of our sort of initial launch and on that Bitcoin diplomacy track. And the reception has been very promising. We spoke on a panel. You had myself, my partner Mike. We had Donald Trump Jr. obviously on the panel as well, and you could feel the interest in the room. You could see that people were curious more about our story, to be part of it. I think that transcends national boundaries, and Korea has been great to us.
Can you tell me your feelings about maybe that panel or just conference in general, Korea at large, for Bitcoin and crypto?
Yeah,
what are your thoughts?
Sort of all the above. Korea, again, robust capital markets, a lot of sophistication, so that's been promising. I think as I've spoken to the different folks at this conference, whether it's been journalists, whether it's been the retail crowd, whether it's been buy side, we've spoken to all sorts of folks. The level of sophistication is increasing, which is great. I mean, crypto is no longer a new industry. I sometimes have to remind myself we're still early. You come to an event like this, and I feel behind. I feel like there's stuff I don't even know about, but we're still early. But at a place like Blockchain Week, for a brief period of time, you feel like you've arrived.
Is there a mining industry in Korea? Is it a small player?
It's for the right energy relationship. It could be done here. It's something we'd find interesting. I think for us, as we look to expand globally, Korea is a great protocol. I think on the capital market side, there's a lot of interest as well. On the mining side, again, with the right partner, we might be able to get something done. Historically, though, Korea has really been on the fintech train. So we'll start with that, and we'll see what happens.
Right. So, for American Bitcoin, you are going to be competing globally.
Yes.
Right. Like that's the beauty of Bitcoin and things of that nature. Who would you say? Or I was just curious, what regions do you think are like the most competitive for you right now?
Interesting. On the mining side or capital markets?
Both.
All adjusted because the combination is the accumulator.
Yeah, exactly.
So
yeah,
on the mining side, I think in the United States, Texas has been great.
Yeah.
Not even just Texas. There's some great work that's being done in the Midwest as well. We've got a pro-energy administration. We've got a pro-energy. The Secretary of Energy is, I'm not sure he's a Bitcoiner, but he's a pro-energy guy. So between the deep capital markets, the rule of law, and the ample electricity, the United States is a great place to call home. Looking abroad, the Middle East has shown increasing interest. The Gulf, historically petro states, now solar states. There's a lot of energy there. The extent they want to use that for crypto, I mean, the UAE has made some strides in that direction. Saudi Arabia potentially could be next. There's a few other players in the Gulf that are interesting.
Feels like we're moving a little slow to me, though. I don't know if you get that impression. It's like the U.S.
The U.S., I think the U.S. and Texas specifically being a deregulated market, the supply and demand is a price signal saying, hey, look over here. When you're dealing with more regulated utilities, by the way, this is true of different parts of the U.S. as well as, say, Saudi Arabia, there's a slower pace to it, and so I think that is a part of it. Ethiopia, there's hydro. In America, some hydro. So there's a few countries that have unique profiles that could be interesting. Again, for us, we're being very methodical. I think we've got a great opportunity in the United States. We've got great infrastructure here, nice jobs in America that we're creating. I think that's good. Now, on the capital market side, the U.S. remains the deepest, the most vibrant capital market you could hope for or imagine. There's some interest in Asia. We had some of our explorations written about in the FT that we may consider doing something over here. I think when we find the right opportunity, we could strike. But again, whatever we do big. So stay tuned.
So it seems to me that, I think you got this great, business model, but combining mining with like a capital market connection. And the U.S. might not have the lowest prices for on the electricity side, but then like the capital markets kind of offset that in a positive way.
And I would say there's the third layer. So for us, 3-layer approach. Layer 1 is the mining. It's what we've done for years. We're very proud of what we do in the mining. Layer 2 is the capital markets. We went public this month. There's a lot of opportunity there for us as well. Layer 3 will be that DeFi angle or the ecosystem amplification. So could be DeFi, could be retail products, could be some financial services. There's a lot of opportunities, but vertically integrated, all those 3 things, you can see why we're called American Bitcoin.
Yeah. I can go if you want.
Yeah, go. See if I got a question at the end.
Okay, good. So there's been a lot of regulatory change in the U.S., obviously, with the new administration in the past year. About the fresh air, frankly. Are you happy with? I'm sure you're happy with what's happened so far, but is it enough? Are you expecting more? Do you want more? Where do you want the regulatory framework to like land eventually? Like, if you could have your perfect world of like regulation and
policy,
yeah, policy.
There's an old line that you may not be interested in government, but the government is interested in you. Crypto has arrived to that point. They're very interested, been very active, meeting with representatives, meeting with staffers. At the end of the day, it's a game of education. Policymakers are going to make rules, frankly, whether you want them to or not, if they feel like there's a public need. And so it's really incumbent upon us as a player in the industry to get out there and educate folks on what success looks like for our industry in the United States. It has been a night and day change from the last administration. You've seen a lot of crypto excitement flow back to the United States. It's a new era. I would love to see that momentum continue. I think we will. There were a few key pieces of legislation that were recently passed in the Genius Act. There could be more coming in the fall. Clarity could pass. There's also the continued work on the strategic Bitcoin reserve. Obviously that was, I'm not going to say it was put aside, but the priority was to get Genius passed. But Genius to me was just the beginning of what they want to do. I welcome it. Honestly, I think that, once you know the rules, it's easy to play the game. And so making sure we're compliant, making sure that we're able to really grow our business in the United States means I would like the government to come in and work with us and try and figure out what success looks like.
Is there any like energy regulation or changes that you would want?
That's interesting. Yeah, energy policy is my passion actually. So I could bore you to tears with my views on.
Please give me.
I think it's interesting. The U.S. energy situation is fascinating on a few levels. One is demand is high, effectively going to be higher than ever. There are three revolutions with energy happening in the United States. The first is turning energy into currency. That's us, American Bitcoin, energy to currency, right? The second is turning energy into intelligence. AI, it's the AI factory, as NVIDIA calls it. That we're in that one now. The third will be turning energy directly into labor. That is going to be super interesting. But in all three cases, the United States needs to lead and succeed, and it all comes down to energy policy. It's not just about the electrons anymore. It's the future of labor, the future of intelligence, the future of currency, all rests on the bedrock of U.S. energy policy. So yeah, I think it is very important to us, whether it's making sure that the transmission permitting process, so the energy can get where it needs to go. That's kind of been under reform for a while. I think we could see some headway there. And just enabling people to grow and build energy businesses. Because at the end of the day, every consumer benefits when there's more power.
Yeah, I mean, some of the AI accounts I follow, they constantly repost like, what's it called? Elon Musk is building a new mega facility. Zuck is building a mega facility. The power requirements for that are enormous.
And we can't wait. And I think the Musk example in Memphis, Tennessee, he's been building Colossus and now Colossus 2. If the United States wants to lead in AI, which we do, we need to be using power. And so he's been able to employ all sorts of temporary, not so temporary generators that were in Tennessee. He's started to do some work across the border, actually in Mississippi, and pull power across on a transmission line they're building as we speak. They're hell-bent on success would be the way. And I say more power to them, literally.
So do you think like deregulation basically is kind of the overarching theme here?
Responsible regulation. Okay. You need to have guidelines in place. Whatever you do, just don't change the rules too much or too frequently, because we need certainty.
Okay.
Energy takes time, right? And it takes some degree of certainty. So if there is any degree of uncertainty, it gets priced into the financing, because it's risk, right? So I think we'll see some reform. I mean, the think tanks have spilled a lot of ink as to what that might look like in the near term, but this is the administration to do it, so I'm excited.
Yeah, I've been very concerned because our competitor in this is clearly China, and their energy policy is been great, amazing. So I hope the U.S. can kind of catch up.
It can. We've in the past, the United States has always been able to deliver. I think our robust use of capital markets will get us there. Again, the price signal matters, and the price signal is flashing incoming demand, and so the supply guys are firing up, right? And I think they're going to meet in the middle. Awesome. The U.S. will win.
All right. Well, I'm out of questions, Graham.
Just
coming to the end here.
Yeah, I just wanted to address the environmental issue. I mean, last cycle, this was like people were freaking out about it. It seems to have died down. I'm just wondering if people are still, if you get asked that kind of question, like,
Yeah.
Bitcoin mining, like
boiling the oceans.
The oceans. Yeah, I feel like now the AI guys are taking all those arrows for me.
That's very true.
Good luck. No, I more seriously, it's something we're mindful of. I think we need to be responsible stewards. It's just like we're financially very, very much trying to be fiduciaries with the Bitcoin. There's an environmental component that we don't ignore. If you look at our fleet of machines, we run machines in Niagara Falls, New York. That's hydro. Texas is ample wind and solar. That's frankly why it's so cheap. So there was a surplus. It was a market signal. We've been asked before, what do you think about these wind farms and things like that? Are you guys anti-wind farms? I'm pro-energy. So if there's energy, we're going to use it. Oftentimes, wind and solar is fairly cheap, and then of course it's a bit volatile. But we're able to ramp up and ramp down and curtail. So I'm not overly pressed about it. Again, I think the industry is maturing. Our efficiencies are increasing. Would I like to see us be basically completely off of coal and natural gas? I mean, sure, if market forces allow it, but we cannot be left behind in the currency race or the AI race, and we'll use whatever we have to do to get there.
Hard agree.
Super light.
Super light. Well, thank you, sir. Appreciate it so much for coming on, and best of luck with American Bitcoin. Up next, we have a conversation Frederick and I recorded yesterday with Thomas the Chief Commercial Officer of Jito Foundation. It was a really, really good conversation. Please enjoy.
Welcome back to the Bitcoin.com live stream. This is Frederick. I've got my co-host David,
sir,
and we've got a guest here, Thomas and Thomas is the Chief Commercial Officer at the Jito Foundation.
Yep, that's right.
And as some of you may know, Jito is a Solana protocol for liquid staking. Thomas, welcome to the podcast.
Thank you. It's a pleasure to be here. I appreciate your guys' work today. Must have been a big day.
Yeah, it's been a busy day. I'm sure busy for you as well. I know you've been participating in at least one panel, maybe two. I don't know.
Yeah, we are fortunate in that people care enough about what we're doing that they want to learn more about it.
Yeah. Well, liquid staking, I guess, case in point, liquid staking is one of those interesting, use cases for tokens, because it's literally like a derivative, right? Like in the TradFi sense. And you've worked in TradFi. Maybe you can go into your TradFi background, which I found very interesting, and then how you transition from that into crypto. We can start with that, I guess.
Yeah, sure. So I started, I used to work at Jane Street. I was there for 22 years. I moved all over the firm, traded equities, commodities, FX, volatility. And in 2017, I was part of the team that started looking at crypto. And it was a novel asset at the time. We really ramped up our activity going into kind of Q4 of 2023, particularly when the CME and SIBO announced the futures launch.
Right.
We realized that we couldn't actually support the futures if we couldn't hedge in the underlying. And so then we became active in spot, and then we built up a pretty substantial business across all business lines, including DeFi. But then in Q2 of 23, there was a lot of regulatory enforcement from the U.S. And so a lot of the U.S. firms like Jane Street had to kind of rescale or resize the business. And so we took a bit of a step back. We kind of focused on the assets and the products that we were comfortably regulatorily compliant at the time, as Jane Street is a kind of very compliant firm. And then...
Sorry, what assets at that time did you scale back to? I'm just curious.
So at the time, in early 23, like the proof of work coins were very clearly those were digital commodities. And we also were trading ETH because there was enough decentralization in their product to believe, with some high level of confidence that it was more of a commodity than security. And then I spent my last 18 months at Jane helping us build out our exotic options business in EMEA and APAC. So I went from working with crypto people to negotiating ISDAs with banks and trying to get structured products issuers to lay off risk with us. And so towards the end of last year, I decided that I really, really wanted to come back into the space. And so I left Jane at the beginning of the year. My plan was actually to just chill out and take some time off. And that
Good
didn't
job at
really
that.
work well. Yeah, and I got connected to Jito very early in the year, like maybe late January, and they came to me with this project. They wanted to talk about how liquid staking might fit within an ETF. And given my background and given my kind of interest, I agreed to kind of just help them out informally for a couple of hours a week. But one thing led to another. The more I got to meet the team, the more kind of attractive the proposition became. And so I joined full time in April.
They probably knew what they were doing.
The Jito team.
Just come to a couple hours.
Yeah. No, I mean, these guys were incredible. They are incredible to work with, and the Jito team is really cracked. Like the talent density at Jito is, and I say this coming from Jane Street, where but the talent density at Jito is really phenomenal, especially like given the breadth of the activities. Like Lucas and Zano, the founders, are more on the engineering side. Brian Smith, who runs the foundation, is incredible at what he does. Rebecca Reddig, who's our chief legal officer, is like the best lawyer in crypto. And so I'm just trying to keep up and do my part.
Humble.
Yeah, very interesting.
Can I ask one follow-up question?
Yeah.
Sorry. You said you started looking into assets at Jane Street in 2017.
Yep, that's right.
During those giant market downturns in like 18 and then in like 22,
Yep.
did Jane Street or did you have like pause and like what are we doing? Why are we in this? Or was it more like, oh, well, this is just like an incredibly volatile thing?
Yeah, I mean, trading firms, P&L tends to scale with volatility. And so volatility is not something that scares trading firms off.
Oh, yeah.
So
Nice.
once you have the infrastructure in place, then it's just a question of managing risk. And so certainly there are times when you have to be very cognizant of, the riskiness of your positions and how expensive, the capital charges are. A lot of crypto was and still remains somewhat, capital inefficient compared to traditional finance because there is a lot of pre-funding that's required. Credit was, depending on what part of the cycle you're in, credit can be hard to kind of get access to. So, yeah, I would say that if we were going to build in the bear, it might have put us off. But given that we had built, going into the CME and SIBO futures launch, given that we had the infrastructure in place. And I think you'll find that from a lot of a lot of the traditional financial people. The big thing about institutions is that their timescales are just very, very, very different than crypto. And so you had a lot of people who were curious, like some banks and asset managers and, investment advisors, investment firms. But because of the cyclical nature, they might have started work in 2017, but they were still continuing to work in 2018, and the downturn might have, dissuaded them from kind of continuing to build up.
But it didn't for you guys.
It did not for us.
And I think that's actually a good segue into what Jane Street does. And we'll talk, of course, Jito is like the main thing. But for people who don't know, Jane Street is like a prop trading firm. So maybe you can talk about what prop trading firms do and why they were so well suited to the volatility that you mentioned that we see in crypto, especially in the 2017 days when volatility was much higher than it is now with institutional bias coming in. So maybe you can quickly just go over that.
Sure. So prop trading firms used to be harder to describe. I think they're much more common now. But prop stands for proprietary, which means that you are a trading firm that trades with your own capital. So as opposed to like a hedge fund where you kind of raise external money and then you kind of deploy them into strategies, prop trading firms, you're trading the firm's capital. And what was the second part of the question?
Well, I was going to say how that fits into the fact that you guys adopted crypto in 2017 and you had, like you said, four assets already that you were dealing with, and it's your expertise dealing with volatility.
Yeah, I mean, so if you think about the job of prop trading firms, or at least the way that Jane Street thinks about their job, is to assist in the formation of fair, orderly, and efficient markets. And so essentially the idea is that prop trading firms, if you do your job well, you come into inefficient markets and you essentially get compensated for making markets more efficient.
Yeah.
And given the amount of inefficiency in crypto markets at the time, and there are different levels of it. Some of it is kind of lower hanging fruit. Some of it is kind of more structural and it requires a lot of investment in order to kind of help reduce some of the frictions. But, given the amount of inefficiency in crypto markets at the time, I think that there was a very important role for firms like Jane Street to play in helping make the markets more efficient. And I think we're seeing the benefits of that today.
Yeah, and Jane Street is like a really big firm that's well respected as well in New York, and that also kind of segues well into what Jito is and what it does. Liquid staking. Can you explain to, I guess, maybe a novice what liquid staking is essentially?
Sure. Well, let me just take a step back, if you don't mind.
Yeah.
So Jito has three primary products or three primary verticals. The first is Jito is a core Solana infrastructure provider. It is the primary way that users can incentivize transactions to land on Solana. So it accounts for over half of Solana's REV. So people, if you want to mint a meme coin or mint an NFT, or you have a transaction bundle that you don't want disintermediated, you can add a Jito tip on top, and it kind of moves into kind of a preferred block space auction type system. And so it makes it more likely that users can get transactions to land, which in times of like network busyness is very, very valuable. Jito takes the tips and distributes it back to validators who return it to stakers. And that's part of the reason why Solana yields are where they are. And just for context, over the course of 2025, Jito will have returned in excess of 1.2, 1.3 billion to validators over the course of the year. So that's the core Solana infrastructure piece. We've also built out a new product called BAM, the Block Assembly Marketplace, which is a new way to get Solana app builders to control their own sequencing instead of having it all kind of fall to validators. There's another vertical, which is restaking. It's like the Solana version of Eigenlayer. And then the third vertical, as you mentioned, is liquid staking, which is the part that I spend most of my time on. Now, the liquid staking is there's a lot of kind of complexity to it, and it might throw people off, but I think the simplest way to think about it is it's just a token that represents Solana that has been staked, plus the rewards that token is due. And so I think there's a lot of different ways that you can try and describe it. The way that I've been testing out is, so my mom is retired, and she asks me what she should do with the money, and she tends to park it in a CD, so a certificate of deposit.
Very safe. Very safe.
Very safe.
Low yield.
She is, as we say, risk averse.
Yeah.
But essentially what happens is, banks have this fundamental problem where they borrow short and lend long. And so the CD is a way of essentially saying, oh, if you lock up your money for a longer period of time, we'll kind of increase the rewards. But what ends up happening is if you need access to that money during the 9 or 12 months where it's locked up, you either can't get access to it or you have to give up all of the interest that you've received. Now, liquid staking token is in a similar way, you have Solana and you have staked it, but if you need access to liquidity, if you need access to cash, the liquid staking token is actually a way that allows you to trade the entitlement and the stake that's completely separate from the underlying stake itself. And so it allows people, if you need money or if you need access to capital, or if you want to, provide collateral to, your trading platform, this is a liquid staking tokens are a way that allows you to do that without having to deal with the, unlocking or paying the penalties for releasing that capital early.
Interesting. So I'm actually I actually thought Jito was mostly just liquid staking, but looks like
that means I'm doing a good job.
Yeah, you do more than that. The question I was going to ask you was why you chose to do liquid staking on Solana versus a platform like Ethereum. Of course, you did mention that you do much more than liquid staking, which is why maybe you guys do build on Solana. But I'll still ask the question. Solana is like a meme coin platform. That's what it's known as. It can certainly do many other things, but where it got its claim to fame, where it became really successful rather, is meme coins. So what made you guys want to build that protocol on Solana versus anywhere else?
Yeah, so I think meme coins, I think that's fair because it is, that is the way that people have seen it. But the way that I would view it is if you have a product that requires high transactions and low costs, in this case, memes, like Solana is a very good place for that. And it is evidence that, if you need to set up wallet infrastructure, if you want to fund your account with small amounts and you want access to all of the services that are being built on Solana, it's very, very easy and straightforward to do that. And, that has been part of the commitment from Jito since the very beginning. Jito is a Solana protocol. And so the Jito's, the liquid staking token was kind of born maybe a year and a half ago, which predates my start there. But it's essentially, when you are providing this sort of infrastructure that Jito is providing to Solana, one way to think about, crypto companies are kind of very incentivized to find ways to leverage their product in order to make things easier for users. And that's essentially what, like, as with a lot of other protocols, like Jito went out and kind of discussed with people, like, what are the pain points for you guys? And the access to stake Solana, the ability to use it in ways that like were restricted before, kind of led to the decision to go down with the liquid staking route. And we're fortunate that the product has been successful enough that it's now like the largest liquid staking token on Solana by every metric, and we're making a lot of headway on the traditional institutional side to make sure that it is as easy as possible for even the most conservative traditional institutions to adopt Jito Sol as their staking solution.
How so your main focus is on the liquid staking side. Now I understand your background, which is quite impressive. I don't understand. Please educate me on how your expertise in that domain is really, really helpful and useful for liquid staking. Because from my, I don't know, noob, mid IQ brain, liquid staking is, I mean, it's great. I love liquid staking, but seems quite simple. Yeah. And I mean, you just were doing exotic options. That seems like a wildly more complicated thing. And so I don't understand how those two things kind of work well together.
No, I appreciate that question. And, I do hope we get to the point where people look at liquid staking token as just a very simple product, because it fundamentally is. And they just can use the liquid staking to meet whatever their investment or their financial objectives are without thinking about it too much. But the way that I kind of view my job, it's to provide access to Jito Sol to anyone and everybody. And right now we're in a world where, Jito Sol was and other liquid staking tokens are primarily only available to you if you can trade on chain. Mm-hmm. And so a lot of what my job is actually, how do we put this product that has, a base historical yield of 7 to 8%, how do we put it in the hands of people who can't actually trade on chain today?
I see.
And so the ETFs are a big part of it. The ETFs, the DATs are a big part of it. Yeah, no, for sure. Like, we're in Asia, and so there's certain products that are very popular here that are maybe less familiar in the US, but things like structured products and insurance notes and things like that. And so I think that we're taking Jito Sol. We're basically saying Jito Sol is a way for you to extend the utility of Solana that you already own and allow you to do more with it, depending on whatever it is that you need or however it is you trade. Because there's lots of people who can only access crypto via a brokerage account. Or if you're an institution trading firm, you need a prime broker to provide funding. And so what products can you access? And can we get you to, gain exposure to Jito Sol using those sorts of products?
So sorry, one last follow-up question on this. Does it not to like compliment you overly, but it seems like is it challenging for you, because it doesn't like from what you're doing previously to I don't know, sorry.
Well, I appreciate the fact that you guys are relying on my CV to think that I'm smarter than I am.
Okay.
Like, I very well could have been like the dumbest trader at James.
Okay.
And so,
I don't think James Street would have hired you if that was the case, but
well, James Street was much smaller than at the time. They probably have less options at the time.
the answer is probably I'm not understanding how difficult.
No. There is a lot of complexity to these types of structures.
Okay.
You know, like it is hard to package assets into ETFs. It is hard to package assets into structured products. There is a lot of friction there. And a lot of that friction actually comes from well-meaning regulation and protection. Like, how do we make sure that, you know, retail doesn't invest in products that like are too risky for their particular needs? And so if you want to put something into an ETF, you have to adhere to a lot of standards that have been built out over the years by either the SEC or the exchanges or, you know, a lot the custodians, index providers, the authorized participants. And so there's a whole host of people that you need to get on side before you can even talk to an issuer
I
about
understand.
getting it in the ETF.
I get it.
So there's a lot of kind of behind the scenes work. But you know,
and you probably have
business
to like
infrastructure.
profile it and show like some kind of risk measurements and things like that.
Yeah, like if you've ever looked through risk disclosures for
Yeah,
for an
I got it.
ETF,
Okay, now I get it.
prospectus, it's like,
Get it now.
yeah, how do you answer these questions about like, you know, can people access their funds when they need it?
Right.
Simply put.
So basically, just your experience with exotic products and dealing with institutional firms, you're able to, because when you package these, you know, like a liquid staking token into an ETF or something like that, that means it has to be at least as you know, risk managed as the ETF itself for it to be part of that, right?
Right.
Meet that standard.
And in addition to like all of the stuff that's happening kind of in the middle and the back of it, there's also like in terms of the front end of it, like just because an ETF exists doesn't mean that people will flock to it. You know, there's so many ETFs now. Like how do you
4,000
actually
something.
raise? I mean, yeah, we're going to see many more of them coming up in the next few years. But you know, so in order to actually get an ETF issuer to do the work, to do the filings, you know, like you have to demonstrate there's actually some demand. And so a lot of what we've done is like talking to hedge funds or talking to pod shops or talking to these like prop trading firms and saying, if this product existed and it had these benefits, would you use it? And then you have to like, so there's a bit of a flywheel that has to you know, there has to be a case that's built kind of across the entire spectrum. And so these things just take time.
Very cool that Jito is, I would say, forward thinking in this and making that effort, like moving outside of crypto to really kind of reach across the aisle, if you will.
Well, you know, we are fortunate in that the services that we provide have been deemed valuable, and you know, Jito does not need Jito does not need to worry about kind of keeping the lights on, and once you shift your focus from how do you build a business that allows me to kind of earn and survive in the short term, then you do start to figure out, okay, well, what is the medium and long-term plan for this? And we have decided that like the long-term bull case for Jito is just the growth and expansion of Solana. Like, so it makes way more sense for us to kind of boost the ability for users to recognize the value of holding Solana. Because if they're not holding Solana, they're not going to mint Jito Sol. They're not going to buy Jito Sol. And so there's a lot of work that we need to do in order to actually build the, you know, what is the investment thesis for Solana? And so we're trying to let people know that, you know, whatever economic activity that you want to engage in or that you're trying to engage in, like you can do it with less friction. You can do it more effectively, more efficiently. You can using crypto. And Solana is a great place for a lot of these products to list.
Cool. Now let's talk about Jito Sol, which is it's a little bit different from your. Is it a competitor? Lido? Is Lido a competitor or cousin? I don't know. I don't know what to call it. It's certainly not the same organization, but
yeah, Lido gets all sorts of flowers because they're the ones. Them and Rockapool are the ones who kind of innovated the most in the liquid staking token space 4 years ago. So all respect to those guys.
Yeah. And so I mean, a lot of people are familiar with Lido. Your token is different from Lido. It's an MEV LST. Can you explain the difference between a Lido and a Jito Soul, and what makes Jito so special? What's the special sauce?
So yeah, there is a question that comes up a lot, like where does the yield in Solana actually come from? Because when you talk to institutions like retail, like they look for the highest number that they can get, but institutions are very cognizant of risk, and they're not shy of asking, like, this looks too good to be true. Where is this yield coming from? Is it sustainable? Is it scalable, etc.? And so the yield on Solana comes from a combination of a few things. The first is there's some native emissions rate, like there's a native inflation rate in Solana. And so validators, just by doing their job, the leaders by doing their job, are compensated in newly minted Solana. The inflation rate for Solana right now is about 4.5%, but it's designed to decrease every year by 15%. The other component of yield is, as I mentioned, Jito Tips is a big component of that. And there's also a priority fee component. So essentially, it's a combination of native emissions plus network activity. Like you talked about it as MEV, we think about it more as like what users are willing to pay in order to make the system more deterministic. Like, how do we make sure that in the universe of all of the transactions that are being put or attempted on the blockchain at this moment, how do we get our transaction like higher up the queue? And so, those sorts of fees should scale with network activity. And so as the network becomes more busy, which we expect, then you should see the yield increase. There are some structural differences, like Lido is on Ethereum and Jito Soul is on Solana. And there are some differences, like Lido Steth is considered like a rebasing token, which means that as yield is paid out, you get more Steth in your account. Whereas Jito Soul is what we call a total return token, which means that all yield accrues within the contract itself. And so the easiest way to think about that is, like, on inception, you could have minted one Jito Soul with one soul. But right now, one Jito Soul contains maybe 1.25 soul, because it's 2 years of growth in the product. And so you have, like in Steth, you start the year with one Steth and then you end the year with 1.03 Steth. With Jito Soul, you start the year with one Jito Soul, you end the year with one Jito Soul. But if you were to burn the Jito Soul at the end of the year, you would get more Solana back than if you had burned it at the beginning of the year.
How does that make, it seems like it's kind of the same thing, but yeah, because you're earning the extra ETH here, but you're earning the extra soul in the Jito Soul.
Yeah.
Does that make a difference? Is that an important difference?
Well, I think so. And, we'll have to see kind of what actually happens with some of these questions. But for instance, the tax implications of staking are still not entirely clear. Yeah. And so our viewpoint, and we've posted this on our website, there was a report from Fenwick, is essentially that staking rewards should be treated as newly created property. And newly created property is not taxed until disposition or sale. And so it's not taxed as income. And if you have a total return token, then it looks like it's just accruing within the contract, and you don't get taxed until it's sold. If you have a situation where like its number go up in your account, like you started with 100 Steth and now you have 102 Steth, that starts to look a little bit like a distribution that might be a taxable event. And so we're not sure, like there's still lots of work that needs to be done on this, but that's an example of something where, the rebasing versus the total return might play a factor.
Really, really smart. Yeah, I like that. I like that. Yeah, just in case something happens, like from a regulatory perspective, that would be like a useful feature, right?
Yeah.
Wow.
But it could, I admit that it might be more confusing for users to know what the actual yield is, because it's inside the contract itself. Like if you start with 100 Steth and you have 103 Steth at the end of the year, you're like, oh, okay, I know exactly. Yeah. So, there are trade-offs, and everybody makes trade-off design decisions. And
Yeah, I was looking at your website. I saw the you talked about the tips. There's a tip router. There's an automated staking pool. Can you go over some of these? I think you call them non-consensus nodes. Is that what you call them?
Yes.
Like
So,
what are those, and what do they do? And just some background about them. I didn't have time to dig into it, but it looked interesting.
yeah. So I'm going to have to reveal my ignorance now. So the products that you're talking about fall under this kind of second vertical of restaking, and uh, I don't. I'm not familiar enough with the product to be able to describe it well.
Okay.
I mean, I think it is just like liquid staking, but you're using an asset other than Solana. But the important thing I think to point out is that so the first node consensus, so first NCN that was built was something called Tip Router. And what Tip Router does is it takes a series, like you have this issue um, with staking, where you have to determine how to manage the payments that are coming in. How do you manage the Solana that's coming in? And a lot of people do it in an off-chain way. Like like you do some sort of reconciliation with the staking provider. You have to kind of compare like what your entitlement is to what you're expected and all this other stuff. And there's a lot of human intervention that needs to take place before the rewards are actually paid out.
Okay.
And so what Tip Router does is it actually makes it much more it makes it automatic so that there's more transparency around the contents of the liquid staking token itself. And so, a lot of what we're trying to do is geared around how do we make this as transparent as possible? And how do we decentralize this in a way that reduces the reliance on humans at Jito to do the work to give you the entitlements that you need? Because, one thing that people are very kind of conscious about, and another kind of structural difference between Jito and Lido is that there is there's like an investment committee at Lido who makes the determination about where they delegate the stake. Anytime that new ETH comes in to be staked, somebody has to kind of manage it. But from what Jito does is they've built this program called StakeNet, which whenever stake comes in, it automatically distributes it via smart contract to a universe of 200 validators, and we're soon going to expand it to 400 validators, which means that there's no like lag between figuring out like who we should distribute it to. And the other thing about StakeNet is that the way that it determines which validators gets the stake is by scoring, like historical scoring. Like we look at all of the
validators,
over the last couple of years.
Yeah, nice.
And there's also a bunch of different metrics, like how much are you passing through to stakers, and your vote counts, and have you been performing well, and so because of this kind of decentralization effect, we think that it makes it such that as JitoSol grows, it actually decentralizes the network as opposed to centralizes it. Like it doesn't concentrate power in Jito. It actually empowers the entire network and makes the network more performant, more decentralized, more secure.
Wow. Yeah, that's I want to buy some Jito. So like now that you're explaining all of these things, I'm like, okay, I need some of that yield.
We got to wrap it up soon, dude.
Yeah. So what's the next big innovation? I know you just had a talk with Lido, and you guys were talking about the new waves in liquid staking. What are some of the big things we can look forward to in that ecosystem?
So the thing that I'm working on now that's kind of the most relevant is the ETFs. So we expect that there will be there is an ETF in the US that provides stake Solana. The ticker is SSK, and it's the issuer's REX shares.
Yeah, that's
we
right.
work well with them, and JitoSol is a constituent in SSK. There are 9 current filings for Solana ETFs. They all include provisions on staking, and we believe that these will be approved for listing in the US by early to mid-October. So maybe in the next 3 weeks.
Wow.
It's coming up. Yeah.
Yeah, 3 of the 9 filings have included language around liquid staking. We expect that number to actually increase. And Van Eck has also filed on August 22nd for a Jito Sol ETF. So the only thing that it holds is Jito Sol.
Wow.
And so we're very, very excited about the ETF story. We also think that once the ETFs list, there will be more people who are able to access Jito Sol than are available to do that today, particularly if you are like a regulated company that you can only hold, regulated assets, or, you don't want to set up wallet infrastructure. And so you can just, express your opinion by the ETF instead of having to kind of go and do on-chain activity. Also, when the ETFs list, like we expect options on the ETF to list shortly thereafter, and that opens up all kinds of cool stuff.
His old job.
So this is where
I got you.
this is where
There you
it
go.
gets
I
fun.
get it.
It's like after the new
Oh my
products
God.
list, it's like, yeah, there's a lot of flexibility. So particularly when it comes to the DATs and some of the hedge funds and the multi-manager pods and people like that. So we are gearing up for a big fourth quarter.
Yeah, I can imagine you personally are going to start to be pretty busy. I
don't know how I can get busier.
Yeah, of course.
But I hope so.
Yeah,
I hope so.
yeah.
That will mean that things are going well.
Yeah.
Yeah, and just going off of that, you're the TradFi guy. What's Sol going to be like at the end of the? If you were a trader,
if I was a trader, I would avoid this question entirely. Yes, not financial advice. Do your own research.
Yeah.
Jane Street is like a markets-based company, and so it's not like a fundamental or technical analysis house. And so my background is all in kind of like markets-based signals, and they tend to be shorter time horizon trades. So I don't feel super well qualified to answer that question.
Okay.
But it will either be unchanged, up or down. Would be my guess.
Yeah. All right. Anything else that you might want to tell our viewers, like where they can find, where can I buy Jito Sol? I want to get some now that I've talked to you. Where do people find the Jito Foundation, or if they want to get in contact with you?
Yeah, thank you very much. So our website is jito.network. Jito Sol is the most liquid staking token on any of the decentralized exchanges. In terms of centralized exchanges, we're listed on OKX, Coinbase, Kraken, Gemini, and Bullish. I am available. My Twitter handle is Thomas
It'll be here when we release.
Oh, great. That's good. I don't have to spell my name for people. And please, DM me, reach out to me, comment on my tweets. Let me know that you're watching, and if anyone has any questions, I'd love to engage.
Well, there you have it, folks. Thomas he is the Chief Commercial Officer at the Jito Foundation. Thomas, thank you for being with us today.
Thank you, man.
It's a pleasure. Thank you.
And thank you for watching, guys.
We're giving away free Bitcoin all throughout our live stream conference coverage. First, you need to download the Bitcoin.com wallet app. Throughout the conference coverage, you'll see these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner and scan the large QR code. Swipe to auto-magically send the Bitcoin into your wallet. You need to be ready, be fast, because anyone watching the live stream can get that Bitcoin.
The safest and easiest to use Bitcoin wallet. Send and receive Bitcoin and crypto to anyone, anywhere in the world without permission. Now the best Bitcoin wallet for all your favorite assets. Buy as little as $50 of Bitcoin or anything else. Earn Bitcoin by staking. Access Web3 and DeFi. And now introducing in-app rewards, letting you earn free crypto just for using the app. Join the millions who are already in Install now for free.
Are you a Bitcoin holder ready to explore the world of decentralized finance? With TBTC, you can lend, borrow, provide liquidity, and engage in a wide range of DeFi activities, all securely and free from centralized control. Unlike options like WBTC, where Bitcoin is held by centralized custodians, TBTC is secured by a network of independent nodes, ensuring that no single entity ever has control over your assets. TBTC empowers you to seamlessly integrate your Bitcoin into the DeFi ecosystem, unlocking the vast potential of smart contracts and dApps while maintaining the security of your Bitcoin. Fully backed one-to-one with Bitcoin reserves and protected by a decentralized network of nodes, TBTC ensures that you can always...
All right, we're back and we are here to wrap up our 2 days of live coverage of Korea Blockchain Week. Woo! It's been an eventful 2 days. Let's kick things off with a little
beer
to wrap things up.
Whoa. that was
All right.
sorry about that.
Gentlemen. Yeah. Oh, watch the laptop. Watch the laptop. There you go. Okay, that feels good. All right, so let's wrap things up. What was your favorite moment from the last 2 days, or things you're bullish on after? Speaking with so many innovators and entrepreneurs in the space over the last 2 days.
I'm gonna cheat a little bit and say my favorite thing was my Justin Sun interview, which we filmed the day before the conference, but it aired during the conference, so I feel like it
counts.
It kind of counts, yeah. Anyway, the reason I liked it is if anybody watched it, I tried like a new hokey gimmick kind of thing to try to make it more interesting, and I just found it so funny to try something new, to slightly modify the format, which can be a little boring. Two people sitting in chairs, talking to each other for like 20 minutes. So if you haven't seen it, maybe watch it, make fun of me, tell me how stupid it was. But I really, it's fun to, like, I don't know, try new things and do it. And also two of his answers about space, his travel to space, and on DATs, I thought were awesome. So that's mine.
Frederick?
I'll say today we interviewed Tristan Thompson with Jason, our COO. So that was a fun interview just because it was so highly anticipated, and so it lived up to the hype. He is very smart when it comes to crypto. I was surprised. He does have a mentor that has been, I guess, maybe teaching him the ropes.
Who is it? Did he reveal?
Yeah, Ryan Fang. I have to look the guy up, but apparently, he's been teaching him about Bitcoin. One thing he did say was that he tells all of his NBA friends who want to get into crypto to buy Bitcoin first, and then get the more exotic stuff down the road when they fully understand how volatile crypto can be, depending on what you buy. So he was pretty savvy. I also enjoyed just had the opportunity finally to kind of walk around the floor, and I just talked to a whole bunch of different people and found some interesting projects like Baby Boom Token, which is trying...
It's a wild name.
Yeah, they're trying to, I guess, jumpstart a baby boom in South Korea. So that's an interesting project, I think.
Yeah, absolutely. So we had a lot of great interviews. One of the projects that I was really bullish on was Zion. This is the project that is created by Burnt Banksy, the guy who at the height of the last cycle burnt a Banksy artwork and minted it on the NFT, minted it as an NFT. And then anyway, he went on to found this protocol, Zion. What I thought was interesting about this, you have this, he's a young founder. He knows his crypto stuff, but what I found really interesting is they've got actual Web 2 clients and that are, they're using crypto, they're using blockchain, they're using specifically zero knowledge proofs to solve a pain point in that Web2 companies are actually adopting. So like the one that resonated with me was basically the example that resonated with me was Uber. One of their clients is basically using Zion's tech to poach Lyft drivers. So if you're a Lyft driver, you can basically upload your driving history, and it's like with zero knowledge proof, proven to Uber that this driver is legit, and then Uber's like, okay, we can take that guy onto our fleet. And there was another example with airlines. I just thought it's really bullish for the industry that, okay, you're finally starting to see like Web2 companies actually adopt like a product that uses crypto.
But to your point, though, I mean, based on that, I'm also bullish on this because in those examples, he said the Web2 companies don't even know that crypto is being used.
Yeah, he doesn't. They don't like lead with that.
It's invisible to them.
Yeah.
The reason that crypto is being used is because it allows them to do things that, frankly, just can't be done at those price points. And so these Web2 and it was like the marketing department of like Uber and the airlines were like, oh, you can do that for that price? I don't really care how you do it. If you can actually do that, then yeah, let's go with you.
Yeah.
And there was no crypto like, we use ZK and blah, 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 blah. They didn't care.
Yeah, exactly. So definitely bullish on that for the industry in general.
Yeah, I mean, that's what you want to see.
Absolutely.
The crypto is kind of invisible, right? It's the people who are using it only care that, oh, you can do this stuff, do things that you couldn't do before.
All right. So we've got another live stream coming up here at Token 2049 in Singapore next week. Dave,
good God,
you're going to be there. What are you looking forward to the most?
The end of that and going home and sleeping for the first time in like, I don't know, a month. No. Token 2049, this is kind of the biggest conference of the year. I went to Token last year. It was my third conference ever. And it was absolutely huge. And now I've been to basically every major conference there is this year. If it's as big as last year, it's going to be by far the biggest, most crowded, most energetic conference. And Avichal, he was my favorite interview of last year, up to date. I really enjoyed that interview, and he's an OG in the space. I was walking with him through the conference floor, and he was like, "This is insanely busy. I didn't think it was going to be this busy." And then he just kind of spontaneously said, "Next year it's gonna be 25 to 50% bigger, guaranteed." And then we continued. I mean, he was basically thinking out loud to himself. He wasn't even talking to me. And at the time, I was like, "That's like bold." Right?
Yeah,
I think he's going to be right.
Okay.
Like so far, the how we've seen these conferences go this year, like WebEx and KBW and some of the others. I think he's going to be right. And if that's the case, it's going to be crazy, dude.
Yeah, I'm really looking forward to the hoopla. I've never been to Token 2049, and yeah, biggest conference of the year, biggest conference in the industry. Looking forward to the hoopla. Also looking forward to some of the incredible interviews we have lined up for Token 2049. We've got Vlad Tenev from Robinhood. Can't wait to ask him about the whole finance super app thesis. Paolo Arduino of Tether.
Charles Hoskinson,
a legend in the space. We've got Johan Turpin of Wintermute, so we could like
co-founder of Wintermute,
get into the details of the into the weeds of the biggest market maker in the industry.
I can't wait to ask him why he keeps destroying coins and tokens, right, and why he's the villain of crypto.
Yeah. So make sure to catch our live stream from Token 2049 Singapore next week, Wednesday and Thursday. All right, gentlemen, that concludes our coverage of Korea Blockchain Week 2025. huge shout out to the conference organizers for putting on a great conference, and of course to Threshold Network for sponsoring our live stream. And also a huge shout out to everyone who jumped into the comments and made very thoughtful questions and comments, which is great to see. So yeah, that's it. We're done.
One last shout out. Yeah. One last shout out. The amazing people behind the camera who are too shy to come in front of it.
Yeah.
Aurelian, it's his birthday, today.
Is it? Congratulations.
Yeah, it's his birthday today. He forgot. He didn't go celebrate. Or maybe he was going to do that after this, but he's at work with the rest of us, putting in a good day's work. But he's his birthday. Of course, Joshua,
sir.
Daniel, Nat.
Happy birthday.
All right. I think that wraps it up. All right. Thanks a lot, guys, and thanks everyone for listening.
Yeah.
See you next time.